Hello. Hi. Hey everyone, welcome to day 2 of Reset Everything. We're just about to begin.
Whoa.
Hey.
Hi.
Hello.
I'm super saturated.
Hi.
Hi.
Hey everyone, welcome to day 2 of Reset Everything. We're just about to begin. I think that the YouTube is recording on it.
Okay. There you go. All right. So active speaker view. Good.
Begin.
All right. Are you ready? Day 2.
Yep.
Let's do it.
Yeah. Cool. So I can begin. So welcome everyone. It's great to see some of you slowly logging in. I think we see about, the numbers are just coming in now. So it's great to have you all here. Day 1 was really exciting yesterday, and I'll do a bit of a recap of that later. But just before we begin, I just wanted to introduce myself. I'm Samantha Yap. I'm the founder of Yap Global and one of the organizers of Reset Everything. And just to remind everyone kind of how this all started, really have to give a lot of thanks to Sebastian and Alex, who were putting this all together, I think with just like less than 2 months. And it was, we were so surprised at how this has all come together. It's all, come together so well. And I also wanted to introduce my team members, Sophie and Sam, if they could just quickly just put on their cameras and say hi.
Oh, it's not letting me.
Neither.
Oh.
Oh, 1 second. Let me. Here, let me.
Hi, Mom.
So this is Sophie. Say hi. And
hi, everyone.
And Samantha, you should be able to put your camera on too.
Yes, I can. Hi.
So there you have it. This is Sam Howard and Sophie, and they're also part of the Yap Global team who have helped put this together. And so, yeah, this is us. We're a PR team, and I'm based in London, and Sam's in Melbourne, and Sophie's in Northern Ireland at the moment. And yeah, we help companies in mainly the fintech, blockchain, and crypto world. But we're so excited for Reset Everything because we're able to cover topics from healthcare to privacy, to even yesterday talking about why we haven't invested in vaccines amidst COVID. So I think as we dig into the talks today, for everyone to just come in with a fresh mind, because this is what we've done this for. And yeah, so we can take it away. I just wanted to share some really exciting numbers. We had yesterday over 400 attendees engaged from around the world. It was so good to hear questions come in through from attendees in India to having speakers from Canada tune in. So really exciting, and it was cool to see talks that had more than 140 people tune in. So it's nice to see that we're not alone, and there's other people here tuning in and engaging in the talks. And for those who want to find out more or re-watch the talks that you missed out on, do jump on to reseteverything.events, the website, and there you'll find links to all the YouTube sessions that we've uploaded on there. And also do follow us on Twitter at @reset_con. We can put all those in the chat. And yeah, do engage, give us feedback, let us know how you've, found everything and what you find the most interesting. And yeah, just a quick recap of what happened yesterday. It was so exciting to have Jeff Jarvis, a journalism professor at the Craig Newmark Journalism School and author of What Will Google Do. He was saying that we are facing a critical moment in journalism right now where we need to provide the right value or journalism will not survive. That's quite interesting that he said that amidst what's happening with COVID and now everyone having to work from home. And we also heard some really interesting panel discussions on preserving privacy during geopolitical instability, as well as how to treat mental health issues with psychedelic assisted therapies in the wake of COVID-19. That was particularly interesting and something that I personally did not know a lot about, but learned so much from that talk. And today we're really excited to hear from some exciting speakers. Like there's a panel on how VCs are adapting to the macro environment with several VCs. Azim Azar is also going to be sharing about scenarios for a post-pandemic world. And yeah, just right after this, we're going to kick it off with a talk from Trista Bridges on, funding the rebuild venture wave. And so, yeah, very excited for those talks. Oh, and we've got Trista on, so I guess we can take it away. Hi, Trista.
Hi.
So I'll just a few more housekeeping. So just before I introduce Trista, for those who want to ask questions, there is an option at the end, there's 20 minutes at the end of every talk where we will do a Q&A session. Feel free to raise your hand. So you can click the raise your hand function and we can unmute you and you can actually ask your question, verbally. And if you have, if you don't really want to talk, but you still want to submit a question, there's the Q&A box just at the bottom bar, and you can pop your question in there and we'll take that afterwards. So yeah, let us begin.
Just a little variation on that. So when you do have questions, please leave them in the Q&A box anyway. That allows us to see that you have a question and to kind of field through them. And then from there, we can give you access. It's just a little bit easier for us to actually see that you have a question. And it also helps limit some of the, perhaps spam people that are coming into the talk. We know that this person actually, went into thinking about a question. Thank you.
Cool. So allow me to introduce you to Trista. So Trista Bridges is a highly regarded advisor and strategic thinker with extensive experience across a broad spectrum of industries, including life sciences, digital technology, financial services, and geographies from Europe to Americas and Asia. She is the principal and co-founder of Read the Air. And I will now hand it over to you, Trista, to explain what Read the Air is and get straight into your talk.
Sure. I actually am having some problems with my video. So it says that I can't start because my host has stopped it. So I don't know if on your side I can mute my video.
Okay, you should be able to start it now, Trista. Go ahead.
Got you. There I am. Hi. Okay, I'd like to actually share my screen if I can to get started, if that's okay.
Sure, definitely.
Share screen. Here we go. Okay. Everybody can see my screen okay? Great. Let's start at the beginning. Okay. So just to introduce myself, hi everyone. Thank you so much for the introduction. Again, Trista. I'm a marketing strategist by training and experience, and more recently I've been focusing on the area and topic of sustainability. And Read the Air is a business that basically works with companies to help them become more sustainable. I was a tech blogger in a past life, and that's why the tech sector is of keen interest to me. And I'm co-author of Leading Sustainably, which is a book that's coming out in July. And one of the areas that we explored in quite a bit of detail in the book is the area of impact investing. And so that's a topic that I will be focusing most of my talk on today. But before we start on that, I really want to delve into why this topic is important. And there's a lot of economic news that's coming out now that's quite troubling. And I think at the moment, it's hard for us to imagine a world where we'll be investing again. But it's imperative, obviously, that we invest in our future. And there's a big question around how we allocate our resources. So everyone is probably familiar that the last 12 years have been particularly tumultuous for everyone. Economies around the world have certainly been upended, societies as well. And a lot of this started, as everyone knows, with the financial crisis in 2008, which was disruptive for many countries, developing and developed alike. I think for developed countries, for us in the Western world, it was particularly traumatic in the sense that we had such a strong belief in the strength of our economic systems, and particularly in Western democracies. And I think that this was really an event that helped disrupt a lot of that thinking and a lot of that sentiment in many of us. And as a result, we've had a lot of challenges since. So although we've had a recovery up until, I guess you could say up until January 2020, it has not been an easy one. And many economists would say that we're still living with the effects of that seminal event. So if you look, for example, at wage growth or wage stagnation, that's been a problem for many years, and then it's just accelerated over the last 10. Millennials, as we know, and also behind them, Generation Z, they have not been able to get into the labor market like previous generations. They have not been able to accumulate wealth in the same way that previous generations have. If we look at income disparity and income inequality, this is a huge problem that is definitely accelerating and getting worse. But there have been some positive outcomes, right? So we've seen a heightened awareness around climate change. We've seen activism, and that's a very positive thing. And a lot of people want to structure a world that is greener, that is focusing more around climate, and they see growth and opportunity in that. On the downside, we've obviously had a lot of political turmoil, and we have leaders that a lot of us are very uncomfortable with and are definitely challenging the systems that we live in. And so you could say that all of us, society, was already fed up. So if we look back at December 2019, which seems a really long time ago, many of us were already tired. And then on top of that, we've added COVID-19. So I have the sense, and I'm sure many people have the sense as well, that the systems that we live in definitely need a change. They definitely need a refresh. And that's a lot of what we're talking about over these 2 days. But I think the interesting thing is that some people, this event has really made them more aware of it. So many people on this call may have read Mark Andreessen's It's Time to Build Peace, which came out, I believe, last week, a couple weeks ago. And the interesting thing about that was that many of the things that he was talking about in that piece, other people have been talking about for years. So I could make an argument, certainly, that the build and the rebuild is already underway. And so if you look at citizens, if you look at activists, if you look at environmentalists, many people have been focusing on these problems for many, many years. And I think that their work has been really important. It's going to be very important for our future. And one group in particular, social entrepreneurs who've been building social ventures, have been keenly focused on many of the issues that we're dealing with COVID today. Now, if you look also at consumers, as I mentioned earlier on, I'm a marketing strategist by training, so I often think about what consumers are thinking and the things that they're looking for. If you look at consumers, they also have a heightened awareness around issues around sustainability, around environmentalism. And one of the things that we're starting to see is that, and what we've been seeing is that consumers are starting to switch and change how they buy. So I'm sure many people on this call are very familiar with things like Impossible Foods or Beyond Meat, and these trends are accelerating. So there was a very good study that came out from the NYU Sustainable Institution and also IRI that essentially said that between 2011 and 2018, roughly 50% of the products and 50% of the growth in that sector, particularly in consumer products, has come from sustainable products. Now, we don't know for sure if these products are sustainable, but we do know is that consumers are relating to them and they're starting to change their behaviors as well. You probably also know about, and you may have heard about B corporations. And what B corporations are, they've really evolved as a certification standard that many companies are using that we could consider social ventures that focus on blending profit and purpose. And over the last several years, they've come to be known as the reference organization for these types of businesses. And I think it's important to note is that it's not a phenomenon that's resting just within this organization. If you look at Silicon Valley, they've also invested a lot in these organizations. So roughly 120 venture capitalist firms around the world, and particularly in Silicon Valley, have invested more than $2 billion into these companies, and also benefit corporations, which are similar, but are basically under a local, more of a local governance structure. So what we can see is there is an appetite for investing in these types of ventures with purpose, right? But what we've seen, certainly since COVID happened, is an acceleration in this trend. So there was a very good piece last week, a couple weeks ago in Bloomberg, which basically said that many entrepreneurs are starting to pivot towards social issues and addressing social issues. And this is a really important change, right? Because I think if you look at the tech sector of the last few years, it's really taken a lot of heat in terms of, you think of things about privacy, or you think about the Me Too movement, or if you think about diversity or issues around disruption of sectors and employment in many different sectors around the world. But this is really an opportunity, I think, for the tech community to refocus a little bit, to kind of find new areas to innovate on, and areas that are critically important, certainly to our society. And I think we also should recognize that having this community interested in these issues is incredibly important, right? In terms of helping us to kind of go through and get through the situation that we're currently in and come out on the other side. But there's obviously a challenge that they're going to face. And one of the big challenges is funding. So if you look at this is a really good chart that I found that really explains from the World Bank, that kind of explains the situation. So what this basically says is, on the left-hand side, we see all of the money that's gone into private equity funds, and think about private equity here in a kind of a broader sense. So this isn't just venture funds per se, this also is debt equity, those types of funds as well. So what we're seeing is that the large proportion of money has gone into traditional type funds, right? But we have seen some investment in what we call impact funds in recent years, but it's really disproportionately less, so by a pretty huge magnitude. And I just want to explain the difference between these two columns on the right-hand side. So if you look at the one in the middle, this means that a fund is really focused on impact. So they basically say, I want to make sure I have a positive impact, social and/or environmental impact. But on the right-hand side, what we see is they do that as well, but what they aim to do is measure it. So they want to actually show, what is my tangible impact on society? In either case, these funds are not huge. There's not a huge amount of them, but they do exist. And we are seeing more of them certainly in the marketplace. But as you can see, that these two bars, or these three bars, are definitely out of balance. So what are we seeing? We're starting to see some movement in this sector, and we're definitely starting to see some big names come into this sector. Some people may be familiar with the RISE Fund, which was launched by TPG in 2017. This fund was $2 billion, which at the time, and I think it still holds the title, it's the largest impact fund in the world. And they're actually currently in the process of raising their second fund. And the thing that I think is really interesting about this fund is that, it wasn't just a group of very wealthy and well-known investors. There's also pension funds that are LPs in these funds as well. And that is a signal that those types of institutions are also looking at social and environmental issues as important issues that they need to align around. There's also other private equity funds now that are coming on board with the ID, KKR, Apollo, even at Bain Capital as well. So that is some positive movement in the right direction, I think. And then on the right-hand side, you see a lot of funds that are smaller in size, but not any less important. So these funds, many of them have been in the sector for a long time. Kapoor Capital, which was started by Mitch Kapoor, who started Lotus Notes, it has a fund that's really performed well, certainly since its founding. There's also funds that are focusing on verticals. One that we interviewed actually for the book is called Alante Capital. They focus on innovation in fashion and apparel. So these funds are incredibly important, and they're starting to grow in number as well. But I think what we know is that, as I said before, there's not enough money coming to these ventures. But these ventures can go to other sources as well, right? So they can go to NGOs, they could go to foundations, they could go to religious institutions. But I think if you talk to people certainly if you talk to people in the Gates Foundation or the Acumen Fund, they would all tell you that we absolutely need business to be involved in helping to fund and helping to support and helping to grow these ventures. Why? Because business has a massive amount of resource and capability that we really can use more to deploy against social challenges and problems. But I think the question that we need to look at is, okay, this is all fine and good. We're definitely seeing some positive movement and we think that they're important. So how do we do that? How do we actually get growth out of this sector? And why is it important that we do so? What are the things that we need to do? And I just want to talk through some of the things that certainly came up in our research and that we've been thinking about that really can help kind of move the needle on these funds. So the first problem that we saw and we face is that there's still doubt, right, out there that a company can be socially and environmentally responsible, can focus on purpose, and also be very, very profitable as well. And also not just profitable, but can actually lead their sectors and actually bring a much higher return to the investor. This concept is something that's really not widely accepted yet. I think it's growing and I think people are getting comfortable with the idea, but they're not yet comfortable with it enough to invest in it in a major enough way. But there are some places in the world where these models have really panned out and have really shown to bring about impact and also be very financially interesting as well. So one market which could be considered, I think, the social impact hub of the world is India. So as everybody probably knows, India has a vast amount of social ventures. And one thing that's quite interesting about them, and this was a report that was actually done by McKinsey in recent years, they found that these funds are actually outperforming, these investments are actually outperforming in certain sectors. So if you look at the fintech sector, for example, many people probably know about financial inclusion. Financial inclusion actually has brought very strong returns for many companies. And what they found was that nearly 80% of the exits in the financial inclusion space were in the top 2/3 in terms of performance. So that's a sector where they really have performed strongly. Another sector where they're seeing a lot of positive movement is in clean energy and agriculture. Roughly 50% of the companies that exited in that space also performed similarly, which is encouraging. Two areas that actually have strong connection to COVID-19, which we're seeing that actually didn't perform as strongly, were health and education, interestingly. And I think just in my experience and things that I've seen in my research, those are two areas that are just very difficult to innovate around. There's a lot of regulation. There's a lot of disjointed experiences in terms of, and from an education experience from one location or geography to the next, and similar to healthcare. And I think somebody will eventually crack this nut. And there's some really good startups that are starting to look at that, but there's definitely a lot of more work to do there. The next area that we cover in the book as well, and we write about quite extensively, is changing how we think about the investment horizon. So oftentimes, if you look at public markets, so if we kind of step aside from private equity markets for the moment, if you look at public markets, there's actually a very short period of time that someone actually holds an asset. And this has changed pretty substantially over the last 60 years or so. So if you go back to the 50s, it was about 8 years. Now it's about 8 months. And there's a lot of reasons for that, least of not technology, right? So we have, for example, hedge funds, we have automatic trading, we have lots of things that have accelerated that trend. But this is something that people are starting to question, including companies are starting to question of all sizes. What should be our horizon in terms of looking for a return, in terms of how we invest? Should we be taking a longer term view? And certainly private equity funds hold their assets for a much longer period of time. But in some sectors, the reality is that it may take a longer time to invest them. So that's something that I think is going to be a challenge to change, but something that I think we need to have another thought about. Then we also just need more impact funds. And why do we need more impact funds? Because firstly, they have expertise, and expertise in this space is incredibly important. Why? Because not only do you need to achieve the returns for your LPs and to make sure that your fund performs at a certain level, but you also need to bring the impact, social impact and return as well. And one area that is really important to doing that is measurement. And there's very few people out there who really have a good understanding of how we measure social impact. I certainly don't claim to be an expert on that either, but there are many, many experts around that space. Not as many perhaps as we will need eventually. But there's a lot of people who've been working a long time to try to figure this out. One of the people we interviewed in the book, who actually was a previous professor of mine, his name was Jed Emerson, and he's done work since the 90s around this concept. More recently, we've seen out of the RISE Fund that I mentioned a bit earlier, something called Y Analytics, and Y Analytics has come up with a really interesting metric called the impact multiple of money. And that really helps to put a financial number on social impact, social and environmental impact. And so for their fund, they've actually set a bar of making sure that for every $1 they invest, they get $2.50 equivalent of impact return back, in IMM back that you would say. So it's really important, I think, to make sure that we have people working with these types of companies who understand how to measure social impact. The next area is really appetite for risk. And I think this is something as well, I've heard from some social impact investors that sometimes people in other funds kind of send deals over to them because they don't necessarily feel comfortable. They don't feel like they're aligned with the mission of their funds. And they think it's important for them to work with a fund that has an appetite for that social risk. And that's a reality, certainly, that we have to deal with. And then the last area I would say is connections, making sure that that when deals are done, that there's a good consortium of people that can come into that particular deal. And in a social venture, that might be much broader, for example, than it might be for a traditional type of startup. So it's important to have those connections. This is one area, for example, in Japan that definitely needs a lot of work. And I'm fortunate to be working with some very smart impact investors here to work on a platform to help bring deals to investors here in Japan. And that's something that's in the works, because having deals of a certain scale and size is also a very important aspect as well. Then I'd say the last couple of things that I would say in terms of things that we really need to have a bit of think about are thinking about who can actually be an impact investor, right? So currently, as we all know, there are restrictions around who can actually enter a deal, right? So whether it be into a fund as an LP or whether it be investing in a startup. And there is some movement. So for example, in the US, the SEC had a concept paper last year that they put out on this, and they're starting to think about this. The EU is starting to think about this, but I think we need to ask ourselves if we really need to rebuild our economies, if we really need to focus on these rebuild ventures, as I mentioned, and the title of this talk. Does this really make sense to continue to do? I understand the logic of protecting the investor, but at some point we need to ask if this is the right way forward. Because for example, we've been talking obviously about epidemiologists. Does it make sense if someone's an epidemiologist, they're making $120,000 a year, but they don't have a lot in assets, but they really have a lot of expertise and connections, to not give them that access? I think that's something that we also need to reflect on as well. And then the last two areas that I would say that we need to definitely focus on are making sure that when these ventures are in their young stages, that they have the support that we have elsewhere in the tech ecosystem. So there's a lot of really good accelerators out there for impact. There's probably not as many as there need to be. So I'm talking about things like accelerators, angel networks, early and seed stage funds, startup competitions, all these things that sometimes seem a little bit overdone, but actually are really important in terms of building incitement, bringing new people perhaps in the sector who wouldn't have participated before, and making sure that they get access to cash and access to funding at an early stage. And then lastly, I would say that one of the other things that we want to consider is the role of government. And I think this is a very difficult discussion generally for us to have. As I mentioned early in the talk, we have a lot of skepticism around government and government's role. But I think that we need to think in growing the amount of money and funding and attention that comes to dealing with social issues, what the government's role should be. So should they be helping us come up with schemes or ways to get more people into the market? Should they be coming up with ways to help create tax incentives, for example, to bring more funding to social ventures? I think that's an important point as well. And finally, I would say that this is actually an ecosystem that does exist. So I'm very happy and proud when we wrote this book to have spoken with many of the companies on this page. And they focus on all types of different areas within the ecosystem. I would say that if anyone wants to learn more about this space, certainly starting with the Global Impact Investing Network is a great place to start. But there's a lot to build on. So, you know, if we're talking about it's time to build or it's time to rebuild, we definitely have a good foundation to build on. That's it.
Great. Thank you so much, Trista. It's really insightful. I was actually quite surprised with how little impact investing funds there were. Like that table that you shared earlier was quite, I guess, I had no idea. I thought that there was enough impact investing.
I should say there are more than those, and they were, I should have said they're a snapshot of funds, but certainly that bar chart, when you see the disparity, it is quite stark.
Mm-hmm. And then this ecosystem here, is this, is it region specific, or is it just, this is like a global ecosystem, or is it like in Europe, or?
That's a good question. So it's definitely global, but it tends to have much stronger regional flavor. So for example, when you see the networks at the bottom, we have the European Venture Philanthropy Association, we have the Asian Venture Philanthropy Association, we have Nexus, which is based in the US, Tonic, which is based in the US, SSIF, which is based here in Japan. So, you know, there's definitely strong regional networks, growing regional networks. Some of them are a bit more nascent than others, but there's definitely opportunity to grow them, but they do try to foster connection between them as well.
Cool. Great. So we've got a question from Robert Kelly.
Sure. Hi, Robert.
You there?
Is he going to ask it directly?
Hi, Trista. Can you hear me?
Yeah, I can hear you.
Yeah.
Oh, perfect.
How are you doing?
Hey, great presentation. I was really, because there was a question that I've been waiting the whole time, and I was really glad that you raised it in your last point, which has to do with the role of government.
Mm-hmm.
And I wanted to know if you had any specific sort of policy recommendations for governments in order to make I guess it's kind of like, what's the division of labor between the policy that a government can do, and then that how that best impacts or best allows impact investments and organizations to do what they do best. Is there a best practice out there? Yeah, that kind of thing.
That's a good question. I didn't really run across one, to be honest, but I think there is something around allowing more people to participate in the investment itself. I think that's going to make a sizable difference for the sector. And I think the thing that's a bit of a concern for me is that if we don't have enough funds out there, the money has to come from somewhere. And there are places, for example, like Japan, where households have a massive amount of cash, frankly. And I know other Asian economies probably have a similar dynamic where people may be reluctant to put their money into certain things, and they basically save. They're big savers. There's got to be a way to kind of get that cash to the startups that need them. And I think particularly if there's, and I talked earlier in my talk about the social consciousness of the public. I think if these are topics that the public cares about, they probably are topics that the public will invest in. Now, I think in the short term, that's very difficult, right? Because the short term, we're all hurting. But I think that government as a first step can do a lot to loosen up the ability for us to reallocate resources to these startups.
Great. Thanks. Thanks for that question, Robert.
Sure.
Are there any other questions?
Sure, I have a question. In terms of the areas where impact investing is, like, what areas do you see as the most urgent? You know, setting aside the obvious, current urgencies, but had we not had this crisis, what industries or what areas do you think are most? Well, I guess there's two things, like where there's most impact investment needed, and where it's overlapping that with perhaps where it's harder to get or impact investing. Can you give us a sense of like what that landscape?
I think you would definitely say that those who are kind of really dealing with social issues, unemployment, for example, or childcare, those are definitely areas where there's a dramatic amount of underinvestment. I think that, and they struggle to raise funding versus something like food, right? In the food space, we've seen a lot of arguably we could call them impact or social enterprises in that space that have raised a lot of capital, right? So I think if you're looking at purely social type things, it is absolutely a real challenge. But I think that one area that I would definitely say where we need to have funding, and this was touched upon yesterday, and I've done a lot of work in that space actually on the marketing strategy side of things, is certainly in healthcare, and certainly in getting healthcare to people who can't afford it. There's still a huge access problem in many places in the world. And it's clear we have a lot of NGOs and foundations that are dealing with this issue, but it's clear that there's still a pretty big gap. There's actually a startup here in Japan that deals with administration of short medical treatments to people in public spaces, right? So now we're not doing as much of that, obviously, but in train stations, right? They may have a health issue and they can go to a kiosk and they can kind of quickly get some medical care. So I think that there's definitely some models out there, but I would say healthcare, and it's not just because we're in the midst of a COVID crisis, but if we don't have a healthy population, it's hard to have a productive population. So for me, there's lots of things that we can do. Things like, for example, cheaper diagnostics, ability for us to kind of diagnose problems in people much quicker and much more cheaply. I think that's something as well that really does need a lot of investment as well.
Okay, thank you.
Any other questions? Oh, there's another hand raised. Yeah. Daniel.
Great, thank you. Thank you so much for the presentation. I was wondering, you focus a lot on new ventures and on new initiatives, but there's also large existing companies that are trying to move or pivot a little bit or a part of their business towards more responsible goals or responsible processes. Do you think that the dynamics there are different, or would you say the same considerations apply? I was thinking more about, for instance, measurement. How does measurement of the impact work if the company is 98% traditional and 2% in a little corner they're trying to do something? And how do you distinguish that from trying to greenwash a big corporation, right?
Yeah, absolutely. I think that that's a very good question. Actually, in the book, we focus a bit on this topic of new ventures, but we focus a lot on established companies. And that's a lot of the work that we're doing around. I think that the challenge there, you're absolutely right. It is very difficult for a big corporation to change, but, or established corporation or a company that's been around a long time, even a smaller business, but it is possible. And there's a lot of very, very, very good examples out there. But it does require some metrics and rigorous processes to put in place. So for example, one of the things that we feel is really important is when we make a strategic decision, right? We need to look at impact metrics as well. And I talked a little bit about B Corporation earlier on, and they have a whole framework of metrics that any company can use. They're completely open for everyone, that you can go into and you can take a look at your business and you can evaluate your business amongst all of these criteria, right? So there are frameworks that are in place that are out there, but it's important, I think, to kind of go about looking at that in a rigorous way, and also to start with portions of your business, right? So say you have an activity that's in a particular market or particular area, it's important to start with that first, and then you can expand it throughout the organization. But there are frameworks out there, and I think the B Corp one is a great one. It's also free, and I definitely encourage companies to use it and take a look at it, and certainly to reach out to organizations such as that if there's pieces or parts of that that are unclear.
Great, thank you very much.
You're welcome.
Great, thank you. Any other questions? I've got one more. So,
sure, of course.
Trista, you're saying, it's time for, not just the current impact investing firms to like rebuild. It's also for, the venture capital firms right now and other funds right now to consider, social responsible investing. Like, are there any efforts or is there anything being done to encourage, I guess, more of the the funds that haven't really been investing in this in kind of social impact projects?
Yes, there's actually, I would say, a little bit of a social pressure and market driver as well, which is, you've probably heard a little bit about the ESG movement, which is inside environmental, social, and governance factors that are used to analyze in public markets, to analyze what's going on with companies, right? And so at the beginning of that movement, they were very basic things, right? You know, how much are you emitting in terms of your carbon emissions? How much water are you using? And it was really a reporting metric. And what's happened over time is it's become a metric more to see if the company is a good company. And so it's a very active movement in the public markets. And what's happening is it's coming over to the private markets as well. So that means that if a private equity fund, we're starting to see more private equity funds adopting ESG criteria. If we see a private equity fund adopting these, that means that they need to integrate it into other things as well. They need to integrate it into how they allocate capital. They need to integrate it into their investment decisions. And so that's actually going to be a bit of a catalyst for them to put their money into some of these investments. And I don't think that they necessarily need to go it alone. I don't think that these funds that are established need to pivot entirely towards impact investing. But you know, they can certainly participate in some deals, and there might be deals where it makes sense for them to partner with impact funds or others to get those deals done.
Then would you say then what's happening right now is almost an opportunity, right? Like
yes, yeah,
you know,
it is.
Even though
so today, everybody probably knows, especially in Europe and the States as well, there's been some horrible economic data that's come out, right? So it's clear, there's a panel later about VC firms and kind of how they're dealing with all of this. And I'm sure there's going to be a pullback. I'm sure that there's going to be a situation where startups are just not getting funding for periods of time, and people who are trying to raise funds are going to struggle. But we're going to come out of it. And the question is how we come out of it. Do we come out of it with a model that's better balanced, where, you know, at least, you know, the impact funds are getting not necessarily 5% or 10%, they're maybe getting 30 or 40. That would make a market difference in terms of dealing with a lot of the issues that we're facing.
Yeah, that's interesting. Robert, you've got another question?
Yeah, Trista, I was wondering if you could just share a little bit from your perspective in marketing strategy,
Yes.
some of the challenges that this field faces in terms of marketing and some of the opportunities that they have to improve.
Yeah, absolutely. I'd say the first one is, I'm going to come back to measurement quickly, because when you look at measurement and how it's done, it's not easy. So I talked about Y analytics earlier, and they did this really great paper in the Harvard Business Review, but it's a very long paper, and it's a very long explanation of how you do their analysis. And I have no doubt it's very good and it's very robust. But the challenge is that getting to understand that impact is not an easy thing to do, which means that it may be difficult to replicate, right? So as we know, you know, if we look at kind of traditional things like EBITDA or ROI or IRR, you know, we know how to calculate these things, right? We all go to business school and we learn these things, and anyone can kind of do it, right? But I think the way we measure impact and the way that we measure social impact is not standardized. And that's an absolute barrier. We don't have quick messages around that yet. And I think that that's a real challenge. I think another thing as well is, you know, how we open it up to away from people who have been in this space for a really long time and are really true believers. How do we come up with quick messages and ways to convince people maybe who aren't on board, who don't believe, as I said, that a company can be extremely profitable and can bring interesting returns and strong returns to their investors and also do good in society. I don't think we necessarily have a good sales story around that yet. In the same way. And again, I haven't worked in this sector for 20 years and I'm kind of new to it myself in some ways. But I think that we can do a lot more to kind of sharpen the message as well. And I think the last piece is I talked about the general public and getting them involved. I think the general public is really not aware at all. I think they know they want something better. I think, you know, that they want to be doing something better with their money. They are starting to move into public markets to more if you look at mutual funds that have ESG focus, they're starting to grow and they're starting to perform very well, actually. But they're not necessarily aware, I think, of this sector. And I think awareness is really important. So there's a lot of work to do to generate awareness around this sector. And I think sharpen the message about the power of this space.
Thank you.
You're welcome.
Great, thanks for that.
You're welcome.
I
I
guess
have
we
another
don't.
question.
Oh, yep.
Yes.
So with regards to marketing and perception, you
Mhm.
know, in impacting best and feel, like this is a field that I know very little, but I do
Yeah.
know some of like the, like say like the activism community.
Yes.
And, you know, I wonder if those two kind of overlap, and from an investment perspective, if I know like the activism communities sometimes have, it's sometimes hard for them to like properly market themselves, or like to properly market their causes without like this kind of extremist view
Alienating
that they
people.
sometimes carry. And I wonder how, if that also has an impact on like how these causes are able to market themselves to funds
Yeah.
and sort of like move the cause forward. And, you know, is that something that we should take into account, or is that like totally out of scope?
No, I think that I would say that, first of all, it probably depends on the sector that the venture is in. So I think if you look at, like I was saying before, if you look at the food sector, I think that's become much more normalized. And I think everybody believes this meat alternative direction, for example, is a real opportunity, right? Not only is it good for the planet, it's probably good for our health, but we're not 100% sure. But you can also make a lot of money off of
Stories
it.
out on
I
that
think,
one.
I think that one is absolutely fine. But I think that there's, you know, I think that you do raise a good point in that, you know, when people work around a social issue, they really believe in it. And sometimes they believe in it so much where it's difficult for them to separate themselves from it. But we have seen, I think, I would say in the NGO world, a big change in this, right? So if you look at an organization like the WWF, which you probably are aware of, this organization over years has really moved more towards seeing business as a partner. And they've really shifted their message in terms of saying, you know, what we're doing, and we're going to kind of help bring other people along, right? So I think that they are actually an interesting, if you're looking at a parallel, they're really an interesting organization because they really have changed their message. If you look at their message versus maybe 15, 20 years ago, it is quite different. I think Greenpeace is another one as well that's changed, where you could say that's the activist community. And they really have worked, I think, to bring more people into their movements, and also to kind of partner with business a little bit more, to kind of achieve more of a common objective. Because I think the realization is that if business doesn't come on board with any of this, then nothing will substantively change. So, so I think that there are examples. I don't think it's a bad parallel at all. There are examples that can certainly be drawn from in the NGO and activist space.
Great, thank you for that.
You're
Well,
welcome.
insightful. I'm learning so much about impact investing, and yeah, really exciting to see, you know, what will come out of this season as well, and hopefully it will be for like the better.
Absolutely.
Yeah, I guess there's no other questions. Is there anything else you wanted to add, Trista?
No, I think the thing that I would add is that I do hope that people will start to read up on this sector a bit more. And I think, you know, understanding and learning that businesses can, you know, the idea of purpose and profit can be melded together and can coexist. And I think that if we want to reimagine another future, another world, then it's really important that we believe in this idea and this concept. And I think when we see companies that are sustainable, and we see companies that are doing this, we need to support them, right? So we need to use their products and services. And I think that's something that's very simple that all of us can do. And, you know, we have choices also as consumers as well, in terms of the products that we support and the products that we buy. So that's something I think that's very easy for people to do.
Yeah, I mean, are there any, like, just off the top of your mind, the ones that you are supporting, or like any companies that you could kind of share that we would know?
Yeah, so actually in my book, I profiled, we had a section in the book that was called Mission Driven. And what we did is we highlighted companies that were sustainable from the start. I think that if you look at, you know, and also I'm not living in the United States, I'm living in Tokyo, which is a little bit different. One of the things that I'm trying to do here more is certainly buy from local farms. And I think that's a program, that's something that's happening everywhere. And I think when you see the problems that we're seeing in the food system with COVID-19, I think we all should consider that direction. and looking for ways to really support local farmers. And that's something that I'm definitely aiming to do. And then another thing, another company that I really like that that we profiled as well, there's a company called Keen, which a lot of people know is a footwear company. They're doing incredible things, and they've been doing it for a long time. And one thing that's very interesting about them as well is that they encourage activism in their workplace. And I think that's a huge difference for particularly an American company, because in American companies, we tend not to want to do that, right? We don't really want people being political in the workplace, but they feel it's important. So they have a booth in their office where people can basically contact their congressman, for example. I think that's really important. They also focus on conservationism. So there's some great brands out there. I mean, obviously everybody knows Patagonia and Ben & Jerry's, and everybody knows, you know, many companies that have been in this space for a very long time.
Yeah, that's really interesting. I mean, yeah, thanks for the encouragement. I think, yeah, definitely supporting local, even just, yeah, supporting the local farmers in the UK as well is something that I definitely will want to do after this. So yeah, cool. And so this talk will, if anyone's just tuning in, it'll be live on YouTube. I mean, it'll be on YouTube to rewatch. And yeah, it'd be great, Trista, if you could share any other resources. We can share that with you know, the community on where to even read up on this and you know, kind of understand more about impact investing.
Absolutely, happy to.
Since we have a few more minutes before our next speaker, I was wondering if, since you're in Japan and you know, we haven't had anybody from Japan yesterday, if you could share a little bit of the situation there. And I heard there's a second wave now. Can you share a bit of that with us?
It's very interesting. So as everybody knows, in Japan back in February, we had the Diamond Princess incident. And the Diamond Princess incident was I think it was a bit of a shock for Japan. I think in the midst of all of the challenges of dealing with a boat full of sick people, I think Japan actually handled it reasonably well. It seemed at the time that it was a bit chaotic, but looking back now, on hindsight makes you see things very differently. But a lot of, you know, there were certainly deaths from the ship, but, you know, people got healthcare. They got off the boat eventually, and they were able to get proper healthcare. And I think that was a good thing. But, you know, the Olympics were definitely in Japan a bit of a problem, because it's pretty clear that there was a reluctance on behalf of Japan to want to show any problems. So our testing rates here are very low, and they still are very low. There was a strategy, a cluster strategy that they called it, which is where they really tried to identify the clusters quickly and to contain it and to get rid of it. And for a while, this seemed to be working. But then coincidentally, the day after the Olympics were announced, the cases started to explode. Yes, they're not as many as we're seeing, certainly in Western Europe and certainly in the situation in the US, but this has been quite shocking for the Japanese people. We now are kind of on a bit of a lockdown, but you have to remember that in Japan, there's some legal restrictions around being able to do a lockdown like you have in other countries. And there's a lot of reasons for that. And one of the reasons is that the Constitution actually precludes certain types of, it doesn't specifically say you can't have a lockdown, but it does have a pretty strong human rights principle. And this is one of the longest and oldest constitutions in the world that was written after World War II, and that was written with a great deal of help from the United States. So there are a lot of good reasons it was that way, but it does constrain Japan from having lockdowns, for example, like we would see elsewhere. So what we see is that people really do they've been encouraging people to reduce their contacts by 80%. We are now in Golden Week, and Golden Week is a period of time when people tend to travel. Everybody's pretty much stayed here, but people are laying low, and we have a state of emergency, and we're supposed to come out of that on May 6th. But it's been a very different experience here than I think that we've seen certainly in other countries.
I mean, is everyone kind of working from home, even though there's no
That's another very good question. No. So now everybody's a Golden Week, but you have to understand that culturally, it's quite difficult for people to work from home in Japan. There's cultural reasons for that. There's structural reasons for that. So the trains, for example, I've fortunately been able to work from home, but the trains have been packed, right? They were packed for a period of time. during work hours, right? Not off hours, there's nobody in them, but during work hours, a lot of people still had to go to work. And there's a lot around, we talked about, Sebastian, you asked about kind of work culture and changes coming to work culture. Japan is certainly a place where I think this is going to have a profound impact on people's work and how they're working, because a lot of companies have been pushing for remote work. And so one of the things the government's doing now is actually offering aid for people to convert their offices and prepare their organizations for remote work. Because I think they project that there's probably going to be a long period of time where we're dealing with the challenges around COVID-19 here.
And what about like the situation with wearing masks when you're out and about, and like, you know, I guess, I mean, I've only been to Japan twice, but I guess they're quite clean there. I don't know. I mean, what's it like over there?
It's not perfectly clean, but yes, it's cleaner than a lot of other places. But wearing a mask is people here just wear a mask in due course. And the reason they always wore a mask is that it's impolite to be sick and giving that illness to someone else. You see what I mean? So, you know, when I go back to France, I go back to France sometimes as well, because I still, you know, have an apartment there. And, you know, people think it's weird. They think you wear a mask when you're sick. But here, you know, you also wear a mask to protect other people. So everybody has on masks. And when people don't have on masks, people kind of look at them like, why aren't you wearing a mask? kind of thing.
Yeah, that's really interesting, because I mean, I'm aware, like, you know, in Singapore, when SARS hit Singapore like years ago, you know, everyone, I mean, I think Asian countries, I don't want to generalize here, but like, let's say Singapore, Hong Kong, everyone was just like quick to just wear masks. But I think here people are quite shocked. I mean, my friends in Singapore are shocked to see that us out and about here in London. Like, we're not out and about, but even when we're like going out to the shops, like, not everyone wears a mask. And there's not that neat, like, I don't know, there's no instruction too, so it's interesting.
I've become a mask believer.
Yeah. Sorry, Seb, I see you talking.
It's been also interesting to see the change in perception around masks here. So in early March, I went to Germany and came back to France, and immediately went to a pharmacy to buy masks, and started wearing masks in the metro, because I was still commuting a little bit then. And I got so many like scoffy looks from people, and like people murmuring under their breaths to, you know, to their friends, like, what's wrong with this person? This was in March, you know, mind you, when Italy was already, you know, in a pretty bad state. And, you know, I live out in the suburbs. When I go outside, if I'm not going to a supermarket or something, I don't wear a mask. There's enough space and everything. I'm not concerned about infecting anyone. Also, I've been in confinement for a while, so I'm pretty confident there. But maybe I should. But anyway, at some point I'll need to, I suppose. But and the other day I was walking down the street, and this woman, you know, like stops me and is like, "Why aren't you wearing a mask?" Like, like perceptions just widely changed based on. You know, on like public opinion, but also I think, you know, the message from the government here in France has been very
wear a mask
with regards to masks, and it's causing a lot of distrust and just, you know, misunderstanding of the situation. Of course, like, everybody should be wearing a mask all the time. There are obviously like supply chain issues and
yes, that's an issue too. We haven't been able to get masks here it's hard to find them. You get them at certain hours. It's hard to find them. It's been that way for months. So it's a big challenge.
Yeah. Well, thank you.
You're welcome.
Thank you.
For being with us. I know it's very late there in Japan. So.
Oh, it's okay. Great. Thanks so much.
Cheers.
Thank you.
Thank you. Thanks.
So we are waiting for the next speaker, who will be Dr. Vandana Shiva. And so we'll just wait a few moments.
Vandana Shiva.
Vandana Shiva, sorry.
I just emailed her. I know she said she was teaching, and so she might be just a few minutes. So we'll just wait for her. Yeah, I'm not sure how we can keep our attendees interested in the meantime. Hey, Alex.
Well, Alex has just tuned in.
No, I was here. I was just like camera off. Yeah, that was a really awesome talk. Super excited about the next ones as well. And so yeah, we can talk about maybe the next talks today, which are about venture capital, blockchain, geopolitics, government interventionism, and many other topics. So stay tuned. It's going to be extremely exciting.
Yeah, I mean, I think I'm quite excited about we've heard about impact investing, and so it'll be very interesting now to see, the VC panel that's kind of coming on in about a few hours, I think. 2 hours time?
Yeah, in about 2 hours,
2 hours time. Yeah, it'll be cool to hear from them as well, and perhaps we can come to them with some questions about what we heard from Trista on impact investing, and see if they've changed their kind of approach in that direction. So very excited for that one.
Yeah, I totally agree. This is a great talk about more politics. By Ruth Ben-Giat, which is Coronavirus Deadly for Democracy? Also Creon Levitt, also that's awesome. He's, I think, ex-NASA officer, and he will be talking about potential upsides of COVID-19. So yeah, lots of great talk.
Yeah, just a bit more housekeeping. Just who have joined just in the last few minutes. If you want to find out more information on how to rewatch the talks, reseteverything.events is the site where you can find links to the talks that happened yesterday as well as today. If you want to keep up with what's going on, do follow our Twitter at reset_con. And for those who have just joined, if you have any questions, do raise your hand, and it'll be great to hear from those of you who are tuning in. So we'll just wait for Vandana. And I guess Alex, you are, for those who don't know, Alex, you're tuning in from Paris?
Paris, yeah. Just like Sebastian, actually. That's like the way this conference came around. So I don't think I ever met Sebastian in real life. I just bumped into him in SF Blockchain Week. I was just a volunteer. I was just starting in crypto back then.
We met at ETC in March.
Yeah, did we see each other at
ETC? We met at ETC.
Really, very briefly, yes. Yeah.
Like, I remember being a volunteer last year in San Francisco Blockchain Week, and I was in the speaker room in charge, and I was looking at Sebastian. I was like, oh wow, he's like French and like really renowned and stuff. And so really a pleasure to be working with him.
I'm neither French nor renowned.
And so yeah, like this conference was decided remotely, which is really amazing. Like we went to a house party, and we just Sebastian was wondering what to do with the crisis and how we could leverage it to do some content for everyone, and super happy with our turnout. And
this literally happened on House Party. We
were like this is
like,
wait, was it just you two on House Party?
Yeah. We were just like House Party. I think I want to do a conference, and it started off as like I wanted to do something about the way I was explaining on the podcast was I wanted to do something about bringing together Bitcoin and sort of Ethereum people, like bringing together different communities within crypto that don't necessarily talk to each other, or that wouldn't fly somewhere to meet, but you might get together on a Zoom call and talk about the things that are common to all of them, right? Like how these issues are affecting all of our industry. And then from there, I just thought so much more to discuss here. So, but Vandana Shiva just joined us, Dr. Vandana Shiva. So
hi, welcome.
To introduce her.
Cool. Let me just pop your camera on. Hi, Dr. Vandana. Nice to meet you. You there?
Yeah, I'm here.
Cool. I've got to put your camera on. I think, Sebastian, if you could maybe get her camera on.
Okay. No, it keeps going off. I switch it on and it keeps going off.
Oh,
so it's from your end. You need to put it on.
It should work now.
There you are. Cool. All right. Well, welcome, Dr. Vandana. So to all the attendees that have just joined in, allow me to introduce our next esteemed guest. So Dr. Vandana Shiva is a scholar, environmental activist, food sovereignty advocate, and anti-globalization author. She has dedicated her life's work on the ecological and social impacts of corporate globalization based on limitless growth and limitless greed on the earth, on women, on farmers, and is a founding board member of the International Forum of Globalization. She has created a grassroots movement to save seeds, protect farmers' rights, and biodiversity to respond to patents on seeds. Very exciting to hear more about this. And Dr. Shiva currently is based in Delhi and has authored more than 20 books. It's my great honor and privilege to introduce Dr. Vandana Shiva. Over to you.
Thank you, Samantha. Yes, we have to reset everything, not just because there's a little virus around, which wasn't supposed to be a disease epidemic for humans. It was supposed to belong to the forest. It was supposed to be on the bats. Greed and globalization has brought it to us. It spread it. And the reason I started to work on issues of globalization was both because globalization came to us as colonialism. You know, the first free trade treaty is not WTO or NAFTA. It's a Right Honorable East India Company making a deal with a collapsing Mughal emperor Farrukhshi to say, you know, we'll have the right to trade, we won't be taxed, we'll have protection, and local traders will be taxed. That kind of punishment of the local and reward to the global is how the trade of globalization won. But globalization began with East India Company. It's not that trade began with East India Company. A lot of people have huge confusion. They think if you critique the rules of trade written by the greedy to get more markets, more resources, that somehow you don't believe in international trade. Well, I come from the country that was the big international trader. We were 25% of the world's economy till the East India Company invaded. We were the big traders in spices. And a sack of black pepper used to be exchanged with a sack of gold, which is why East India Company was created. Or, for that matter, the blue dye called indigo used to be exchanged for its equivalent weight in gold. That's why when the East India Company took over, they turned indigo cultivation into a slave economy, a plantation economy. And Gandhi's first civil disobedience, when he returned to India, after his disobedience against the rules of racial discrimination in South Africa, you know, in 1909, 1906 he started that. In 1911 they had to withdraw the laws, and later they established the apartheid regime. But when Gandhi came back in 1915, the first movement he supported was the refusal to grow indigo. It was called the Indigo Satyagraha, the Champaran Satyagraha. So international trade is not the same as globalization. International trade engaged in by free people, sovereign people, is the kind of trade we had and the kind of trade we should have. Globalization is the name given to the phenomena where corporations write the rule. In the time of colonialism, it was East India Company, the first corporation created in the world. Most people, you know, especially the younger generation, you all imagine corporations have always been around. No, trade has been around, business has been around, farming has been around, but embodiment and legal construction of a corporation with limited liability, it was made for the first time in 1600 with the creation of the East India Company. And why, and how was it created? The Queen was made to sign a charter. Say, go conquer lands, use armies, use private military. And if your ships loaded with spices and textiles get stolen by the Dutch, because they also had an East India Company, then society will pay you the losses. But if the ship comes back, then it's yours. So limited liability was socialism of cost and privatization of profits. We had independence, we became sovereign, international trade carried on, we decided what we'd import, we decided what we'd export, we decided what we'd produce. Then you get the WTO. And I got into the WTO scene because I was at a meeting in Geneva where the corporations had talked about now they'll own the seed, they'll patent the seed, and they'll have an international agreement to impose it on the world. That's the first time I heard of the General Agreement on Trade and Tariffs. That's the first time I heard there's an intellectual property rights in it. And that's the day I decided I'm going to save seeds. So for me, globalization is Monsanto rule over seed. I started to follow it. In 91, the treaty got leaked. Agriculture agreement, Cargill was going to be the trader. No local economies. That's why we have 1 billion people starving. And then, which food will count as safe? Not your grandmother, not your community baker, not your community mithaiwala as we have in India. It'll be Coke, Pepsi, and Nestle, who wrote the rules of the third treaty in WTO called the SPS agreement, the sanitary and phytosanitary agreement, which in effect is food safety, which every day they make local food illegal. Every second day I have to do a civil disobedience to say, no, we know this particular maker of little bit of artisanal food is totally safe. So what did globalization of the WTO period, which begins in 1995, what did it give us? It gave us 1 billion people hungry, 2 billion people sick with bad food. It also gave us the vulnerability to diseases like chronic diseases. So 10 million people are dying every year of cancer, which is totally related to toxics in the environment and toxics in our food. Only 5% cancers are genetic. The rest are all induced by the food we eat and the poisons that we ingest. If you have cancer and you get a COVID infection, the risks of your dying rise to 7.2% from 1%. Now, another of the metabolic diseases that's totally a result of globalized industrialized food is obesity and diabetes. If you have diabetes, which is a metabolic disease, your system is unable to perform its functions and regulations, the risks of your dying rise up to 9.2%. So we have a layer of globalization from 95 to now. Then you get COVID, which is also a product of globalization, because why are we invading forests? If we have small farms feeding their communities, you don't expand the acreage. Who's expanding the acreage? Who is going into the Amazon? Cargill, Monsanto, Bayer, BlackRock. They are burning the Amazon to grow GMO soya because it's the most profitable commodity, but it doesn't go for food. It goes for biofuel and animal feed. Or who's burning and destroying the forests of Indonesia, which will be gone in 10 years' time? For palm oil. Well, we had linseed and sesame and coconut and mustard. And on each of these, I've had to do a civil disobedience because these oils are good for us. But this isn't all. Free trade and globalization, as embodied in WTO or the East India Company Treaty, are basically deregulation of commerce. They're regulating the local and leaving the global free, which means the powerful free. So the first decision made in WTO, and most people don't know, was a decision to allow trade in software and information to be tax-free. This is what allowed the Microsoft and the Googles and all to set up their companies in India so they could hire cheap labor, save $40 billion annually. So the Indians did the software and the Googles, the Microsofts got bigger. If you look at the wealth of the richest people in the world today, and the two richest are basically Amazon, which was created in the year When WTO was created in June. Amazon took birth in July. He's the richest man today. And during the COVID crisis, Jeff Bezos became richer in 1 month by $24 billion. That is globalization for you, where one person who doesn't produce anything, who doesn't actually distribute anything personally, but controls the production and distribution of the world. Or take Bill Gates, on whom I've written my latest book, Oneness versus the 1%. So Microsoft wasn't such a big player, but it's the patents on software and the trade in information that allowed the empire to get bigger and Bill Gates to emerge as, for a long time, the richest man, engaging in so-called philanthropy, but from my analysis in the book, engaging in new colonies, carving out new colonies. So if globalization is about colonization, it's about limitless greed. It's about not respecting or recognizing planetary boundaries that allow us to not have climate change or species extinction, or ecosystem boundaries that protect us from epidemics like the Ebola, like the Corona, like the SARS, like the Lyme disease, like the MERS. The line goes on. All new diseases are coming from invasion, either into ecosystems or into the bodies of living systems. So many of the new diseases, mad cow disease, swine flu, bird flu, all related to industrial farming manipulation of animals. Not healthy for us, not healthy for the planet, but extremely profitable. So we have now, at the time of COVID, an amazing polarization between the 1% and the 99%. And the WHO has just warned that half of humanity has lost its livelihoods during the lockdown. The World Food Programme has warned that every day, 3,000 people are going to be dying of hunger. Million will be starving within this lockdown period if we don't change the paradigm. We have to reset. So what is the resetting? The first step of resetting is to recognize that we are part of a living earth. That's why I call it Earth democracy. Recognizing that our first citizenship, our first identity, our first being is as beings of the earth. This is a reset from the illusions of colonialism of the industrial age, which said, the earth is dead, we are separate from the earth, we are masters, and they created anthropocentrism of humans as superior to other species. But they also constructed the mechanistic worldview. And my book, Staying Alive, has gone into deep depths about how this mechanistic worldview was created by people like Francis Bacon, called the father of modern science, who said the idea that we are part of nature is effeminate. I'm going to give birth to a masculine time. He wrote a book called The Birth of Masculine Time, where we create the illusion of separation so that we can then conquer nature and control her. Boyle said the same thing. He said, if we have relationship with nature, it interferes in our empire over the earth and inferior creatures. But those inferior creatures are our relations. And this idea of superiority is, I believe, the single biggest virus on this planet, creating so much violence, so much brutality, and so much disposability. I am watching how, if we don't have solidarity and compassion in the transition to the post-COVID stage, we could see a new class of not just poor people, but disposable people. And they're already using the language of useless people. In the artificial intelligence world, we'll have 99% useless people. No being on this planet is useless. So Earth democracy is the recognition that living democracies are created by people working with the earth. And the creative powers of both, giving us sustainability, renewability, and making sure everyone's needs are met. That's why Gandhi said the earth has enough for everyone's needs, but not for a few people's greed. But Earth democracy is based on what I call living democracy. Living democracy is the recognition that we are part of the democracy of life, but it is also recognizing that we have the power. We very often hand over our power. We delegate our power. How we live, how we think is in our hands. That can't be forced. That's why Gandhi gave us the amazing concept that the highest duty and freedom we have is the power to say no to injustice, to lies, to untruth. And he called it satyagraha, the power of truth, the force of truth. And finally, living cultures. When we know we are part of the earth family, we have a democracy of life and a culture of life. We will not hurt any other species. We will not hurt another human being. Compassion flows out of our awareness we are related. We will not be able to think like a Samuel Huntington, who writes a book on Clash of Civilizations and says, I cannot know who I am till I know who I hate. How can a negative economy and a negative identity create your identity? Your identity is a positive economy of relationship, a positive identity of knowing who you nourish and who nourishes you. That is the resetting we need. And the resetting is a change in our thinking and our paradigms. It's a change in our living. And in a way, the lockdown has been a good rehearsal to show we don't have to be consumers, running and shopping and thinking somehow shopping brings me satisfaction. We've had to come back to a slow living, and a slow living with a lighter footprint. And that's why everywhere rivers are flowing cleaner, the skies are more blue, animals are roaming streets. We need to take a lesson to say, if this is the way the world should be, then let's make sure that post-COVID, we learn to live with other species and not have illusions of industrialism being more effective and efficient to meet our needs. It's a very clumsy system. My work on industrial agriculture has shown it's absolutely inefficient in producing more food. It's hugely inefficient in terms of bringing us health. And it is displacing, because fossil fuels had only one objective: how to get rid of the farmer. Now they're talking about farming without farmers. But if you have farming without farmers, it's an end of agriculture, because agriculture means the care of the land. A robot in the skies can't care for the soil. My hands can give love to the soil. I can work with the soil with my heart and hand and head. And this unity of our being with the unity of all beings and the unity with the living earth is earth democracy. If we can learn to shift from globalization to earth democracy, humanity has a future. If we fail in this reawakening, for a little while longer, the billionaires will become the trillionaires, 50% humanity will be dumped, and slowly we will lose our creativity, our freedom, our ability to act.
Wow, thank you, Dr. Shiva, for that. Earth democracy, so interesting. Are there any questions from the attendees for Dr. Shiva? Any questions? Well, I mean, I've got one. Oh, actually, there's one. Let me just take one from Vishak. Cool, I've just unmuted you. You there?
Yeah, can you hear me?
Yeah. Hi, Vishak.
Hey, hello, Dr. Shiva. So the tools of globalization are fairly amoral, or they don't lean in any specific direction. So even if there's a pushback, even if things are done differently, how can these tools be used in this new world that you describe, in a localist world? All these tools that have brought us together, these tools that let us across all these distances talk to each other right now, how can they be used in this new universe?
Well, for every tool, the three things I've done throughout my life, both as a scientist as well as a citizen, is I always decide, do I need a tool? Which tool do I need? Do I need a pen? where I need my paper. And I haven't given up. I still write my books like this. I prefer the tool of paper and pen because it interacts better with my creativity and imagination. I write in a deeper way, in this way. I don't believe that for anything, there's only one tool. The idea there's only pesticides to control pests is wrong, because pesticides create pests, whereas biodiversity control pests. So we should be able to choose. Second is you have to assess the efficacy. If pesticides have failed us, we should dump them and do organic farming. If I am able to choose what I do with this digital platform, fine. But I also am deeply aware that it's also a source of mining data. Otherwise, why would Facebook get as rich as they are for giving free Facebook friendships? Mine the data. That's why the issues of privacy and autonomy are very important in this age. Tools are embedded. And as embedded tools, we have to have the understanding of who shaped them for what, and the power to shape them in a different way for a different use while controlling the more powerful interests. The third thing about tools is no tool that comes without baggage. You talk of globalization as neutral. No. When Cargill writes the rule of trade, those rules of trade have a Cargill imprint. When a Monsanto writes the intellectual property rights to pretend they're inventors of seed, it has that imprint. Nothing human beings create are independent of the imprint of human beings. And that doesn't mean things are inevitable. It does mean agency of multiple players has to be active. And that multiple players is democracy. And when we realize the agency of other life forms has to be, look at it, one little virus has brought the world to a halt. Isn't it time to reset and say, I'm not the most powerful species on this planet? So the idea of globalization, building on the idea of the earth as inert matter and other beings as objects, that has to be reset. So it just means a deeper consciousness and a deeper context setting of everything.
Yeah. Thank you for that question, Vishak, and thank you, Dr. Shiva. I mean, I'll jump in here. So I guess, could you give us some advice on what we can do, active steps we can all take to try to reset during this time, until the dust settles?
Yeah. I didn't start saving seeds because I came from an agriculture discipline. I started to save them because I realized that if I didn't save them, we would lose our seeds, we would lose our diversity, we would lose our freedom, and we would be dependent on one company, which is what Monsanto had said, all seeds will be GMO, all seeds will be patented. We've seen what the BT cotton did in my land. Most of the farmers' suicides are in the BT cotton areas. So what can we do? We can save seeds. Why do I work on agriculture? Again, not my disciplinary background. I work on agriculture because I realize that industrial farming has become the single biggest cause of destruction of the planet and destruction of society. Punjab, the most prosperous state, was reduced to a destroyed land. That's why I wrote my book, The Violence of the Green Revolution, for the United Nations University. Now with Corona, people are realizing if you don't know where your food comes from, you're going to be cursed to live on a diet of junk food, get chronic diseases, and the tiniest of infections will be able to kill you. Whereas if you have a healthy diet, then the infections can come and go, and you have the resilience and you have the immunity to deal with them. That's why everyone doesn't die of an infection. And the people who are dying of most of infections have the chronic diseases. On Earth Day this year, I suggested to everyone, have a garden. even if it's one pot in your balcony, both to make the shift, the reset. That little pot, the one seed and one plant, is a reset of your relationship with the universe. But more than that, it'll give you some basil leaves, and that'll be healthy for you to eat. And if you have a little patch, or if you have a roof, grow a bigger garden. Yeah. If you don't have that, innovate. Everyone thinks innovation is only a new tool. That is hardware or a management tool. The true innovation is doing things differently. Mm-hmm. At the time of war, where there was hunger, they created what they call victory gardens. And that's what fed America. 50% food came from victory gardens. 50% food in UK came from victory gardens. It is time for us to create gardens everywhere, and a creation and the innovation of new relationships between farmers and eaters. This is where so much innovation is happening. It's below the radar. For the simple reason, some big giant poison cartel member isn't making super profits. In fact, they're losing profits. I'm so glad to tell you that because we saved cotton seeds, there was a report that said farmers saving cotton seeds has led to $12 million losses for Monsanto. And till these destructive forces become less powerful, the resurgent forces will not be able to grow bigger. But you can begin with food. Everyone has a duty to eat right. Everyone has the power to reshape the food system, and everyone has a right to real food and good food.
That's great advice. We've just got a few more questions come through, and I think it'd be great off the back of.
End in the next 5 minutes, yeah.
5 minutes. Okay. Well, there's just a question that was submitted in the box. It says, many of us live in our regular workday jobs, raising families. Besides living more consciously, how do we get started on changing our world?
Yeah. So I think the corona has shown there's nothing like a normal, Everyone's work life has been disrupted. For the poor, it's been disrupted very badly. As the ILO has warned, half of humanity is without work. For those who sit behind computers, a work from home has become the way to work. But, so much of the analysis that has come out of the cause for ill health and chronic diseases, one is bad food and super industrial food, and the other is inactivity. So at this point, while you are having to sit in front of your screen, the big change is somehow staying active. And that's why, again, people are turning to India's teaching of yoga. I mean, it's such amazing. It's not a tool that you get from outside. People can't imagine yoga as a tool, but it is the coming alive of the intelligence and brilliance and self-healing capacity of this body. There is nobody in the world who doesn't respect yoga now. That's something you can learn. You can do. And on the food issue, I've already addressed it. And the second very big issue is community. I think one of the big paradigm shifts we need is from atomization to community. We are social beings. We were made to believe we are atoms. Margaret Thatcher in Globalization said, there's nothing like a society, they're only individuals. No, they're not only individuals. You wouldn't be here if your mother wasn't there, if your parents weren't there. Your children wouldn't be here if you weren't there. So to say you're an atom with no relationship with any other human being around you and all other ecological beings around you is this cage into which we've been locked. And that ability to realize we are community, of course, in lockdown, we're having to put restrictions, but we must make sure that once the lockdowns are lifted, once the corona crisis is over, and all epidemics end, all epidemics have this graph. They have to end. How they end, that's a different matter, but they all end. Epidemics, chronic diseases grow in an exponential. Epidemics go like that. It'll end. We have to make sure that rebuilding community, rebuilding our capacity to work together, and rebuilding adaptability and resilience, We are living in very uncertain, unstable times. The one thing we cannot predict is this was the certain future. Uncertainty, my PhD thesis was on non-locality and non-separability and uncertainty in quantum theory. That is the reality of the world, not mechanistic determinism, not mechanistic control, not the illusion that someone can control something else, but the recognition that in relationship we have potential. Potential is the reality, and that potential can go in an uncertain way, either towards destruction or to a new birth. How we reset will determine that birth.
Great, thank you so much. Do you have time for one more question?
Okay, the last.
There's just one more question that came through. It's from an anonymous attendee, but he or she was asking, can you talk more about what you mentioned earlier about Bill Gates and his new colony building versus new
colony? But you know, my book, because of the lockdown, the printers can't print it and the existing publishers can't deliver it because courier services are not working, but the title is Oneness versus 1%. I wrote it because at the Paris Summit on Climate Change, I watched Mark Zuckerberg and Bill Gates with the heads of state on the stage. Only heads of state sit at UN meetings and summit meetings. So I said, since when did billionaires start becoming heads of state? So I started to follow up. And the book really is an analysis of how we got the new technology barons, how the new billionaire class grew, and how with them grew the asset management class. You know, the BlackRock. BlackRock is 23 trillion. It was zero at the time of the 2008 Wall Street crisis. What are the new colonies? I mean, I've been interviewed, and you all can look at various interviews on Democracy Now! Or France 24, or there are many, many interviews on the book. But I basically see colonialism as someone saying, wow, that could be mine. I can enclose that commons, and I can make the people whose commons it was, for whom it was free, pay me rents. The East India Company did that with land in India, and the peasants had to pay them rent. That's why we had famines in the British time, with the last being the Great Bengal famine of 2 million people dead. It wasn't that there wasn't rice, but the rice was being extracted by the British Empire. Monsanto suddenly says, we patent seed. Do they make seed? They can't. You have to take a seed to manipulate it. Monsanto, I say, is taking that work forward, because not only is he picked up every failed experiment, we threw out the GM aubergine, the GM brinjal from India. He finances it in Bangladesh. We threw out the golden rice because it's an inefficient way to produce vitamin A. He financed it in Philippines, and there are movements against it there. But the two big colonies, very big colonies, that are being carved out are the colony for the earth itself as a colony. So Bill Gates is actually financing geoengineering. That's what it's called. Engineering the planet, managing its climate. And I don't think that's given to him. It's been stopped again and again in UN treaties. Another place where he's carving out a colony is manipulating living systems through what is called gene editing and gene drives. Now, gene drives are an extinction technology. If I do gene drive of amaranth, which is one of the projects, I can push amaranth to extinction, and amaranth is one of the most nutritious sacred crops that we eat in India. So I think engineering the planet and manipulating its climate is ecologically and ethically wrong. I think pushing species to extinction against all the laws and against ethics is not right. Most importantly, he has undone treaties that were meant to regulate. I mean, just yesterday, Mexico has declared its corn as its natural heritage to stop the intellectual plunder. But Bill Gates is trying to take genomic maps, digital maps, and saying, I'll patent it this way. That too is creating a colony from inside life. So I say the first colonization was about declaring the earth dead, inert, empty of people. The next colonization was declaring life empty. I call it bio-nullius. If that was terra nullius, this bio-nullius. And now, of course, a lot of the data mining is declaring our minds as empty, to be mined and then be fed. This is an ontological resetting of what it means to be human, not from the human being's perspective, but the perspective of my dear Bill Gates. And I'm sure you're following how important he is as a player in this COVID crisis, because he's on every TV telling every government what they should do. And this is something new. Yes, it was the case that East India Company got Queen Elizabeth to sign a charter, but every ruler is signing things for the new billionaires. And I believe deeply in the equality of all humans. I do not believe in patriarchy. I think men and women are different, but not unequal. I believe the color of our skin doesn't make us unequal. I do not believe that we are superior to other beings. We are part of the earth. And that's why this ontological resetting that's being attempted is going so against every ethical, ecological, human principle that needs a resetting to revive. So it'll be an interesting 2 years to watch. We must do our bit. And our most important bit is to be independent in our thinking, through our relationships, through knowing what supports us, through being grateful to those who support us, including all the caregivers who were rendered as the lowest rung of the economy. And if today they weren't there, people would be dying like flies. So not only should we thank the caregivers, my next piece of work is a manifesto I'll be writing with my team on the economy of care. If we'll have an economy of care, we have a future. If all we'll have is an economy of greed, we won't have anything. Okay, I will have to leave you. Bye.
Thank you so much. Thank you, Dr. Shiva. That was so inspiring. That was great. Wow, I feel so like energized and yeah, motivated now after hearing that. What did you think about it, Alex?
Oh yeah, that was really awesome. Super nice to have like almost a philosophical point of view about like all beings and how we relate to our community, and kind of like countering some individualism that we've been seeing in society the past decades. So yeah, super nice to have a completely different worldview than I'm used to. So yeah, that was really cool.
Yeah, it was so refreshing, and yeah, almost like I feel like, you know, peaceful, like coming back to kind of, you know, like renewing our mind and renewing the way we think things. Yeah, that was really inspiring. What did you think, Seb?
Yeah, me too. I mean, I've followed a little bit of her work on seeds, and so I mean, it was like a great thrill to have her on. And thanks to Vishak for introducing us to Dr. Shiva. I mean, she carries a very powerful message, of course. There's no doubt about it, and I think it's something that like, you all need to keep in mind and to sort of like, you know, come back to. With a lot of these messages, though, it's often helpful, I think, for everyone to like try to keep in mind how like they can actually practically apply these things to their lives. And you know, one of the questions here in the Q&A, I think kind of reflected that, is like, okay, all of us are, you know, living our lives and we're just trying to make ends meet and like getting by and like raising families, etc. And you know, it's hard for a lot of people, I think, to like engage in activism and this sort of thing. And I mean, this is something that exists in all forms of activism, right? Like anytime you see like a very inspiring person, it's like, okay, like, this person's super inspiring. but I've got my kids to feed, you know? So I think there's like a good balance to have there, and it's like helpful to keep that in mind, and like,
yeah, and I also
give
like
people
the
easy and practical ways that they can. And so like, you know, the plants thing, I think like is
yeah,
a
the
great
plants,
advice.
yeah,
You know, like I've got
and,
some plants over there. I don't know if you can see
nice,
them.
and yoga as well, like
Yeah.
just, you know, some like you know, now yoga is like, it's an exercise, and it, you know, I think, you know, setting aside some time to do that is great advice. And I love how she like gave us those like kind of two things to act on, and they're not that big. They're like the small steps that we can personally take amidst our everyday lives. So yeah, that was great to hear.
So up next, we have Azim Azhar. So if you don't know about Azim Azhar, I'm sure many of you here know about Azim Azhar. He writes a fantastic newsletter called Exponential View. I subscribe to it. I read it regularly, and just a you know, a great thinker about like sort of macro trends. And you know, he's been covering this crisis pretty thoroughly and thinking about what's coming up next. Like what are scenarios for a post-pandemic world? And
Hi, Azim.
I'm super interested about, like, yesterday during my opening statement. Oh, here he is. I was talking about these, you know, this low touch economy that has kind of sprouted out of nowhere, and I think that, you know, the low touch economy will be with us for, you know, months and perhaps even years to come. So I want to now hand it over to Azim Azhar for joining us right at the right time. 1 second here. You should be able to unmute yourself.
Here we go. Okay.
Hey, nice background.
Well, I'm at 35,000 feet. I know most of us are just sitting at home. I'm in my G6, G550, enjoying the skies. It's an electric G550 as well, so there's no carbon being put out there. Should I just get going, Sebastian? Is that what you'd like me to do?
Go ahead. I mean, I just briefly, I don't know if you caught that, but I briefly introduced you, but maybe give yourself a bit of a broader introduction, talk about your background. I'm sure a lot of the people here, you know, are aware of you or read your newsletter. So,
okay. No, great. So I'm going to start by saying I'm confused as hell, because this COVID thing has meant that, you know, in the last 2 days, I've been reading about the meat packing supply chain and the spreads between the sort of price of meat in different bits of the US. And I've been reading about urban planning in Milan, and I've been learning about the process by which vaccines come to market, and the growth in cloud computing usage across the world. So it's a pretty crazy time for all of us, and you know, even for me, who spend most of my time trying to look at trends, yeah, this is coming really thick and fast. So my name is Azim Azhar, and I'm a technology entrepreneur. I sold my last company 5 years ago, and since then I started to write a newsletter which is called Exponential View. You can find it at exponentialview.co. I spend my time really trying to understand where the world is going, and I do that by working with startups, by writing my newsletter, working with some large companies. The fundamental argument in Exponential View, and it will be sort of appearing in other formats soon, is that we're entering a transition that is simpler, deeper than a simple industrial transition, that we're entering into a societal transition that encapsulates every part of our lives, and has traditionally been enabled by several technology platforms, and that each of these technology platforms, which are improving at exponential rates, are feeding into each other. They're creating positive feedback loops, and they're accelerating that rate of change. Those technology platforms are AI, robotics, renewables, synthetic biology, and then the least mature of them, which is blockchain. And the way that I look at the pandemic is that, would you just give me a second? I'm having some echo in my headphones. And I'm just going to switch to a different set of speakers. Forgive me. Okay, hopefully this will work. Okay, so the summary of my argument today is that the pandemic that we are going through doesn't create a lot of new long-term trends. It does create a few. But what it actually does is accelerates a range of very deep and secular trends. And I want you to keep that in mind, because over the next 10 to 15 minutes, I'm going to talk about what the deeper long-term trends and pressures were that the pandemic has essentially catalyzed. I mean, I described the pandemic, the novel coronavirus as it was at the time, as the shot across the Latin Bridge. That is the moment when Gavrilo Princip shoots the Archduke Ferdinand in Apulquet back in 1914, which in a sense started to trigger the First World War. Now, the key thing about that shot in of itself was that it wouldn't have had the magnified effect that it had there not been a set of long-term trends. And in a sense, that's what I think we see with coronavirus. And let's just think about the transition point that we are at, right? So we're at this transition point where in the last 5 years, the world's largest companies have turned out to be these technology giants: Microsoft, Apple, Google, Facebook, and Tencent. But that wasn't the case in 2010, when it was industrial era companies that were the largest in the world, like Exxon and Shell and BP. Today, Netflix is worth more than ExxonMobil, which is quite a remarkable outcome. And so we are at this interesting stage, which is a shift to the exponential age, driven by technologies. Now, the thing about understanding technologies is that sometimes, coming from a technology background, one tends to think of technologies as being deterministic. That is, they just exist in society independent of everything else that happens. Now, that's not really the case. I mean, technologies exist in society alongside, influenced by and influencing our social relationships. They get influenced by the politics, the geopolitics, the international system, the nature of work, family relationships. The whole thing is what physicists and economists call a complex system. So in a sense, a technology innovation can create new potentials, new possibilities in society, but equally the nature and the direction of the technology gets shaped by the values that we can deliver to it through society. And that's why I think it's important to understand how a shock like COVID ends up being reflected into our everyday lives. And because of this, I just want to step back and explain a handful of the trends that we saw before, and they'll all be, I'm very, very familiar to you, but it's worth spending a minute on them. And I can't go through all of them, but let's just look at a few. So we've seen this tremendous improvement in the capability of computer processors since they arrived as silicon chips, and Moore's law's relationship over the last 50 years, and in the last few years, the arrival of machine learning and AI technologies and robotics, improved robotics on the one hand, which are really changing the nature of work. So in some cases, they are automating human tasks. In many cases, they're augmenting what humans do. And at the same time, the nature of work is changing because of the arrival of gig working platforms that have enabled companies to move towards more flexible labor forces. We've also seen in a similar time frame, and this is what is so mind-bending about the period of time we're going through, an energy transition driven by the falling costs of renewables, which, when I wrote this sentence, now cheaper than coal, gas, or oil for electricity generation in 2/3 of the world and declining rapidly. When I wrote this sentence, the cheapest you could get contract for solar energy was about 1.7 cents per kilowatt hour. And just yesterday, a contract came out at 1.5 cents per kilowatt hour, which is more than 10% cheaper, just to show that you're always out of date. Even the tensions that we see around deglobalization and regionalization, which really predate the arrival of Donald Trump in the White House, many of them can be seen as a consequence of a battle for global technological standards and governance, which is, creating the demand for homegrown technology industries around the world, in particular in China. But even a longer term trend, which is the attenuation of world trade because of that regionalization, facilitated by automation and by 3D printing. I mean, how does automation play a role in bringing production from a far off country closer to a producer? It's because the supply chain has been driven by what's known as labor cost arbitrage. Workers in China or Cambodia are cheaper than workers in Germany or the US. But if you can automate a lot of the manufacturing, that cost disparity disappears, and you get your production closer to home. That had been going on for years and years. And we'd also seen this absolute savage attack on traditional ways of doing business, whether it was producing petrol and diesel engined cars, whether it was vertical industries, but a relentless attack on the traditional industrial sector structure from platform-based companies and from new entrepreneur-driven firms. There are many, many of these trends. Food delivery was booming, even in cities like New York, well before coronavirus was a word. So what's quite interesting, I think, about this pandemic is that it wasn't unpredictable. Bill Gates had his essay. There was a TED talk about it. There was even a movie called Contagion. To use the phrasing of Nassim Nicholas Taleb, the statistician, this pandemic is a white swan. It's not a black swan event. It's something where, we didn't necessarily know when it was going to happen, but we had a sense it was going to happen. But as a consequence of it coming and us being rather unprepared, seemingly in most countries, but not all, we've been forced into an enormous experiment. And for many of us on this call, I'm sure we are the experimenters amongst our social groups. We're the first people to play about with, Plurk or LinkedIn or Facebook or Instagram or Clubhouse or whatever it is. But most people in the world are not early adopters. They're not experimenters. They are majority, early majority, late majority, or even laggards. They're people who take onto innovations once they are much more widespread and much more mature. And what's quite interesting is we've got this massive experimental behavior that is usually reserved for tech founders and millennials alike. And so when I think about the pandemic, I try to think about a handful of questions. In particular, what of these changes are going to stick? And why might we think that they're going to stick? I mean, we are experimenting wildly and we're learning all sorts of Zoom behaviors. I just went downstairs before I came here to get a sandwich, and my 10-year-old is on a computer wearing headphones, and she turns around and goes, "Shh, I'm on a call, I'm on a conference call." So there are all these new behaviors. I mean, 6 months ago, she might have said that, but she would be having a play conference call. And a lot of these behaviors, for those of us in the technology industry, are not particularly new. I mean, asynchronous, distributed, remote working, Trello boards, Slack channels, WhatsApp groups, quick video conferences. We've been doing this for a long time. I mean, I was a late adopter to Zoom as a particular product, but I started to pay for it in 2017. So the question to ask ourselves is which of these behaviors will stick? I mean, many of us are familiar, I'm sure, with the extended family holiday, either the one we've been on recently as adults or as child. You go on those extended holidays and yoga with our partner becomes a daily ritual. We sort of get up and we have a meditation at dawn together as a family, and we play board games, and I play board games with my teenage kids, and we're not having arguments in the evenings, and we all say to ourselves, well, when we get back home, we'll take this behavior forward. And we'll continue, because doing yoga every morning overlooking a beach is a wonderful thing to do. And of course, reality bites when you get home and you abandon these behaviors. We come home jet lagged and we settled into our own old routines. And I think a question to ask is, which of these adaptations are going to turn into permanent, lasting changes? And I think about this in terms of 4 particular questions. Oh, which one? 4. I'm reversed on the video. 4 particular questions. So number 1, how long will the change be required? Number 2, how intense is the change required? Number 3, how well do we adapt to the changes that are needed? And number 4, to what extent do we end up bringing in changes that are aligned to our purpose, or changes that we actually like? So on the question of duration and intensity, that is going to depend on how well we are able to mitigate what is going on with the virus and with the contagion and the public health risk. And what's pretty interesting is that even if you have successfully mitigated the virus, you've been a South Korea and you've got it under control, roughly speaking, and you've done really well. And on that graph that we keep seeing in the Financial Times, you're sort of down at the bottom. Your like-for-like retail sales in department stores dropped 40% year on year. So you've done everything right. You've controlled this from the get-go. You're 40% down. Taiwan, which people don't talk about very often, has done brilliantly in all of this. They had quite a good March for exports. But who are they going to export to in April and May? So what's quite interesting is that the amount of time we may end up sat in this strange position is unclear. And I want to just briefly touch on a subject that someone else might have spoken on, which is when does the vaccine arrive? And I've spent, I mean, not a huge amount of time, but a little bit of time talking to people who are involved in the industry and have expertise. And this is the sort of rough measure that we get. Which is when you get a vaccine, you get it to work, like the measles vaccine, which started to become commonplace in the 60s. That disease no longer interrupts daily life and no longer interrupts business. But a COVID vaccine doesn't exist despite 76 separate initiatives. And there are so many uncertainties that we have to take a kind of a risk-adjusted view. And there's a recent article by a guy called Jack Scannell, which says that based on some rough kind of probabilistic priors, there's a 40% chance that in a 12 to 18 month period, we wouldn't have a single approved vaccine candidate. Now, that's a 40% chance of a no, a 60% chance of a yes, which is the good news. But even if we get that candidate, we then have to scale up that manufacturing and put it into the arms of lots of people. And we don't know how long that would take. We don't know how much immunity it would confer. And so there's a lot of uncertainty around that. The way that I look at this is that, it's not reasonable to sort of assume that we will be back to bases within 6 or 9 months. I sort of feel that it'll be a couple of years before that thing is widely available. And there's a whole set of additional complexities there. So, for example, there are very influential people in the United States who are saying the US should develop the vaccine first and then use it on itself first, and then use it as a tool of geopolitical war to re-establish American primacy globally. So you've got these additional levels of complexity that get wrapped into the question of vaccines. What seems to be more likely is that as we manage to bring these out of control rates of infection down, we are then able to implement these other non-pharmaceutical interventions like testing and tracing and isolation and mask wearing and physical distancing, and maybe even things like immunity certificates, as a way of managing a level of sort of acceptable COVID within the population, so that we can continue to live a normal life and get the economy back to a point where it can generate wealth and well-being. And so the question, that first question that I talked about is, how long will the changes be and how intense will it be? I think there's a long enough period of time. I mean, most large businesses, even if you look at the car industry, 6 of the biggest 8 car companies have less than 12 months cash left. they're actually in a worse position than a survey of UK startups, which suggested that 40% of UK startups had less than 12 months of cash, meaning 60% had more than 12 months of cash. So companies don't really have a choice to do nothing and to not to adapt. And I'll talk a little bit now about some of the adaptations that we're seeing. I mean, some of the adaptations that we're seeing are so interesting. We all know about kind of Zoom and remote everything, but it's really remarkable how rapidly 10 years of digital transformation, as it's called in big companies, has happened in 5 days. The UK went from virtually no physician appointments being done through video to 93% of them being done through video in March. I mean, this is a decade's worth of change in a couple of weeks. In France and Germany, a company called Doctolib, which does GP consultations online, had a 100-fold increase in the number of consultations, up to 100,000 a day in under 4 weeks, and 28% of those people were over 55. So that's a really, really remarkable set of adaptations, and we keep seeing them emerge in different spots. And as I talk to senior execs, and in the last 6 or 8 weeks, I've spoken with or heard from more than a couple of dozen of C-level execs in a range of different industries, from pharmaceuticals through to energy, through to transport, through to staffing and professional services. And there is a pattern that I've discerned about how these companies are responding that relates to this question of adaptation. And the first step is we've quickly got to figure out whether our people are safe, whether our customers are okay, and how we just steady the ship. And now they're starting to ask questions about what does our future start to look like. And I think I found it pretty interesting looking at one particular area category, which was the restaurant booking business. So the restaurant booking business is not having the best month of its life. And in fact, OpenTable, to their credit, publish their levels of bookings right now and how far off the norm they are. And you can go and find out. I actually tweeted it recently, today, I think. They're at 100% down in every market that they track on this particular data dashboard, which is places like the US and the UK and Canada and Mexico and so on, which is incredible. I mean, it's devastating. But they're still servicing their customers, because what they're starting to do, not just OpenTable, but Resi as well, is say, how do we construct offerings that allow our customers to continue to serve their customers? And there's something that I find quite heartwarming about that, which is to say that they've, perhaps it's for existential reasons, but perhaps it's also just that they've understood that they're in the business of serving the restaurateur. And this is what the restaurateur needs now, which is help taking online orders and so on and so forth. So there is a whole host of these types of adaptations. But what I would say is that many of the adaptations that we're seeing, and so many of the so-called scenarios, are ones that we saw before COVID arrived. I'm going to give you some more that are relevant. I mean, this question about regionalization and deglobalization of supply chains. So what's happened, of course, is that it's not that everything was manufactured in China. It was that supply chains were complex and fragile and distributed around the world. So you might have a product that has 700 or 800 components, and there's one tiny little component that comes from one country that happens to be in lockdown, and as a result, you can't actually finish your final manufacture. And companies have been thinking about altering their supply chains for quite a long time. And the battle between the US and China was driven by a few things. It was driven by the fact that Chinese labor costs were rising, and it was driven by the fact that China wanted to be a tech innovator and not dependent on the US for a critical industrial input, which was silicon chips. And this trend of reshoring for companies or Chinese independence predates the election of Donald Trump and some of the more lurid language we've seen since then. And investments in robots and automation and 3D printing were really making reshoring a distinct possibility. So when you read the story of, which I sort of spotted in late January, of the American firm that was 3D printing parts that it was previously getting from China, from the designs being sent to them by the supplier in China, that was happening in early January. That was just a trend that I think we could see happening in 2018 and 2019 that's been brought forward by a few years. Even if we look at something that is further away than technology, so let's look at the new social contract and what happens between who gets the rewards and what's happening with inequality and what's happening with the most vulnerable. Authors like Thomas Piketty and Branko Milanovic had been written extensively about the need to tackle inequality, extensively about how the system that had established in the West of globalization and the particular taxation policies and distribution policies had been moving wealth to older and richer cohorts and those who were asset rich, and how the responses to the global financial crisis and the program of austerity had moved wealth to those with assets rather than to those without. Those had been well understood for a while. I mean, that's why there were so many poverty reports coming out in 2012, 2013, 15, 16 in rich, so-called richer countries. And but what we have seen as well was that the nature of labor practices that were enabled by technology, that meant unbundling the job and moving towards contracting and gig work and creating a much larger contingent pool of labor, was a trend that was happening again well before the pandemic. And so a key element of that transition was the need to rethink the social contract. Now, what we're seeing in the pandemic is that with additional accelerators and factors onto it. So, you know, in the US, they're approaching 20% unemployment. The bailouts that governments have instituted, which are incredibly sort of, I mean, I'm quite impressed they're doing them, need to be paid for and will ultimately be paid for by younger people rather than by older people. And yet, if you look at who gets furloughed, who's losing their jobs, who's finding their jobs stop, that their work stop, it's disproportionately the young and those in these contingent work and gig work environments. It's much less likely to be the older, more resilient, more well-educated and better off. So in the same way that the last 10 or 15 years has worked against what the economist Guy Standing calls the precariat, the hit of the coronavirus has landed once again on the same group. So it accelerates a bunch of trends. And the question is there really anything to be excited about? And I'm going to stop talking in 5 or 6 minutes because I'd love to get questions, because there's so many different places we can take this, but I'm just giving you a heads up, and Sebastian a heads up about this. So I think there are some really interesting and exciting things that have gone on and that we have seen as potential trends. The first is the nature of global coordination in response to the pandemic. So yes, 120 nanometers of yuckiness can spread across global air networks and across mass transit systems and into crowded call centers and restaurants. That's the downside of the network. The upside of the network is that we have been able to share information and collaborate about this pandemic across borders and take learnings very, very rapidly across those borders. And what we've seen, therefore, is a real tremendous marshalling of science and a marshalling of research and a marshalling of engineering right across the globe. I mean, I'm sure, and I wish there was a way of this being a live audience and I could see you all put your hands up, but you know, how many of you saw the story about the engineers who built a breathing apparatus in Milan out of scuba equipment or diving equipment? You know, probably most of us saw that. And yet that was Milan. It was a local innovation, and we heard about it during the midst of this global unfolding global crisis. So there is something about demonstrating the value of the network alongside all of the weaknesses that the network has given us that has emerged. And I think that that's pretty exciting. I think the other thing that's exciting is that it has really accelerated some novel techniques. And in drug discovery in particular, there's a great story that I read last week about how a pharmaceutical a startup called Recursion had searched using machine learning, had searched on the efficacy of over 1,600 drugs for how well they would work on treating SARS-CoV-2. And the one that stood out was remdesivir, which is the drug that has actually ended up working most effectively. So that's also a really interesting positive that we can take away. There's another positive, which is that return of community spirit and local social capital. I mean, the diminution of that in the West was written about in book after book, and yet I've never got to know my neighbors better in the last 6 weeks, and I've never got to care about them as much as I do in the last 6 weeks. I'm sure many of you are familiar with Nextdoor, which is a social network for locality. And the thing about Nextdoor is that people have often complained that Nextdoor is just a place where you moan about a burglar or vandals. And Nextdoor has become transformed. Usage is up 80%, and there's been a 7-fold increase in groups that are about helping neighbors coordinate to help each other. And so we've also seen the value of grassroots effort. In the UK, United Kingdom, and in a couple of other areas, there have been real shortages of this thing called PPE, which I didn't know what that was 10 weeks ago, personal protective equipment apparently. And there has been a cottage industry, a group of small manufacturers and hobbyists who've gone out to create PPE and start to meet the shortages of it. So you are starting to see the value of these grassroots efforts and how they can be effective at a point where top-down efforts have not been successful. And I think that's really important in the context of how governments think about the way they organize themselves in the future, because we have been very top-down driven. We have been very aggregate equilibrium driven for a long time, and we've often been a little bit dismissive about the effectiveness of the bottom up, whether that bottom up is open source and Linux, or whether people in their garages can make PPE for healthcare workers. And I think that's pretty interesting. And I think the other dynamic that's interesting, and just to bring this trend of decentralization without mentioning blockchain, except just then, back in, is cities are starting to understand how, well, they've already known, but I think we're starting to recognize how city level responses are important. And so, we've seen cities like Milan and Paris and other places say, look, we're going to accelerate the rate with which we turn roads over to pedestrians and cyclists. But they're also thinking about how do we construct some kind of energy and food self-sufficiency through techniques like vertical farming and decentralized energy generation. We call it community solar generation, amongst other things. And I think there's a couple of other interesting dynamics. There are so many, which is why I wanted to turn it back over to Q&A in this respect. Another interesting dynamic is the nature of the Zoom call, and how in many Zoom calls we are all the same. we're all little squares, little tiles on the screen. And some of us have funky backgrounds. And some people just show their garden or their kitchen or the back of their TV when there are those calls. But we are all we are all equal. And that hasn't been the case in many of our previous interactions. When we go into a conference room or a meeting, we know who the boss is, we know who takes which seats. And in some old style companies, the senior people get to sit around the table and the junior people sit at the walls. Well, that's not the case now in a Zoom conference, because we are all essentially represented in similar ways. I was on a Zoom call recently with about 170 people on it, or 120 people. It was a large number. And it was remarkable because I was just an attendee. I wasn't speaking or anything, but I was Googling some of the names of the people who were on there. And I was thinking, it's amazing that we're all just sitting at this equal level. We would never have done that in a conference. You guys would have been sitting in the front row and I would have been, back up in the gods. And I think that's pretty exciting. One of the things I think that we have to contend with is that a pandemic like this can't survive purely on bottom-up, decentralized activity. It does still require some kind of top-down decentralized activities. And one of the things that concerns me about the two countries that I know better than others, the UK and the US, is that over the last 40 to 50 years, we've really weakened the capability of the state. Not so much in how much it spends of national income, but actually in terms of how much trust we have of it and how much capacity and capability it has to respond well. We've done it through the politics of Ronald Reagan and Margaret Thatcher, who both took aim at the state as this anti-entrepreneurial, anti-innovation organization. Now, the challenge there then is that actually we do now have a little bit of a capability vacuum. And that gives us, all 89 of us who are sort of on this Zoom call, an opportunity to step up and to some extent fill that gap. And when we do fill that gap, I want to leave us with a thought, and it is leaving us with a thought or a suggestion. One of the things that New Zealand has done very well is handle the COVID crisis. Something that I saw that they had done in a newspaper report was put up lots of big billboards around the country that just say, be kind. And that could be quite a good scenario for the future as well. So Sebastian, I've spoken for more than long enough, and I think it's quite interesting if we get into a Q&A.
Yes, and that was truly amazing. Thank you so much for sharing all those insights. There's so many things. I've got like 3 pages of notes here that I'd love to run by you, and questions in the Q&A session. So you mentioned grassroots movements. You mentioned also how everyone's an equal, and I think that there's a lot of that resonates with this very conference. Like this very conference just came out of nowhere. We put it together in the last 3 to 4 weeks, and the people that we've been able to get at this conference are people who are, as far as I'm concerned, typically outside of my community, outside of my reach, and we've been able to get like so many great speakers such as yourself on this conference because of this very I think we're this sort of feeling that everybody's on an equal playing field, and nobody seems unattainable anymore. So that's been a really interesting trend that I've seen here for this conference, and sort of generally in the way people interact together. I wanted to ask you about, so you mentioned earlier that there's been this ongoing battle for standards on the part of governments and corporations, etc. And our previous speaker was Dr. Vandana Shiva. She's an environmentalist out of India and sort of anti-globalist activist. And what she says in her talk is we need to come back to like sort of local and support local economies, etc. And I wonder to what extent this crisis will accelerate these trends
of producing locally. Similarly, yesterday we had an emergency room doctor here from Paris who was talking to us about a lot of the initiatives, and some of you mentioned, Italy and the face masks around respirators and things like that, and people are building parts on 3D printers. I wonder to what extent this crisis accelerates that trend, and the potential downside of that, as we've read, is that more localization, more nationalization leads to more populism, potentially even racism, etc. Can you comment on that? And do you see that as potentially a downside of a lot of this move to local?
It's a great question, and it's a kind of it's a fractal question. So as you know, with fractals, they sort of replicate at different scales, but they look quite similarly. So let's tackle Sebastian has frozen, so I don't know if I'm still.
You're still here. Yeah.
I see you're still here. Great, perfect. Okay, good. So let's talk about the local. We had started to run out of speed with the model of mass production that had done so very well for a long time, and you can see that in terms of the fact that many indicators around the world started to tail off many decades ago, 20 or 30 years ago. And so there was a sense that we needed to construct a new metaphor right now, and you were starting to see this idea of the local not just emerge as an idea by activists, but also being implemented by at the city level. So for example, Mayor Hidalgo in Paris had talked about the 15-minute city. In other words, we want you to be able to live your life in the city and not have to go more than 15 minutes from where you are for a matter of choice. And transportation costs, distance, anti-locality were things that hedge funds had understood for a really long time when it came to algorithmic trading, but were also then being seen as a sort of form of poverty in poorer communities. The poorer you were, the further you had to travel. So there were already pressures for us to do that and desire for us to do that. I think some of the triggers that enable that end up being technological. And so if I looked at the reason why I would need to travel or stuff would need to travel to me, much of it was resolved technologically. So I would have to go to the office because that was where there was a fast internet connection and so on and so forth. Well, as soon as I established a fast internet connection at home, I started to travel much less frequently. So I think that there are lots of reasons why we will see more localization and to some extent more local point production. Not least that this is now also reflected in the way urban planners are starting to think. They're starting to think in terms of resilient and sustainable cities that manage on their own footprint. And we need cities in order for them to, essentially manage the population growth that we're going to see, particularly in sub-Saharan Africa. If we come to the other point, which I think is super valid, which is that trade has traditionally been seen as a way of eliminating wars and conflicts, and exchange, right? Seeing the alien or the sort of foreign is a way of, in a way, strengthening one's acceptance of other types of cultures and beliefs. And we have seen that it's actually easier to build walls than it is to build bridges. But we also have to recognize that there's some aspect of human behavior that likes to hang out with people who are like us. I mean, if you're it's very difficult. I would just suggest people try to do this. If you're particularly right wing, to go out and hang out with left wing progressive Twitter for ages and just keep doing it. Or if you're left leaning, hang out with sort of right wing anti-culture warriors for a long time. It's difficult. This this pattern of homophily, birds of a feather flocking together, emerges across networks. So I think that it is challenging. And I think it's also challenging in the sense that we have a global technology system, particularly around the internet, that emerged out of these American standards. It doesn't matter whether they were the right standards or the wrong standards. The fact is they sort of emerged from that. And we had interoperable systems. And through the actions of the GSMA and market share, GSM has become the standard for mobile phones. But those of us of a certain age will remember that TVs used to have 3 or 4 different standards. PAL if you lived in the UK, CCAM if you're in continental Europe, and NTSC if you're in the US and Japan, and one TV couldn't work from one place to another. And it creates not just interoperability, but the elimination of a lingua franca loses some of the network value, the sort of Metcalfe's law n² network value that you would expect to get. And when I look at technology standards and technology bifurcation, I don't have a great answer right now. What I see is greater demand by nation states for national sovereignty over data, and that national sovereignty over data will start to drive down into how they think about their software code, and if they're big enough, it will be reflected in the chips they actually use. So the ambition of the Chinese is that by 2030, 40% of the silicon chips they use are homegrown, home designed, home built, as opposed to less than 10% today. We will clearly lose something if we lose interoperability, and it's possibly the case that in the time that we have between now and then, that we will establish better standards, and we'll need to find some way of doing that. In the little work I've done in this area, the general view is there isn't a multilateral institution that exists that can knit all of these things together, and that we're just going to have to start as bands of brothers and hope that we can get more people to join our merry quest towards peace and harmony.
Thank you. Well, we'll open up the questions in the QA. There's many questions here. So if you'd like to ask your question, and I think it's better if people are asking their own questions, just raise your hand in the participants view, and I'll give you access to speak. So we have one question from Trista Bridges, who was actually speaking earlier this morning. Go ahead, Trista.
Hi, I'm here. Can you hear me? Hello?
Yeah, we can hear you.
Great. So the question that I had was actually around, you spoke a little bit earlier about this kind of 2-year time frame until we get back to normal, and we kind of have to learn to live with this virus. And I'm curious as to what you think might happen to industries that are basically aligned around a model that's not compatible with that at all. So I'm thinking about travel, for example, if you look at the hotel industry or airlines, the event industry, entertainment industries that really are predicated based on getting as many people as possible into one place at one point in time.
Yeah, it's a really, it's a tough question, and maybe we can unpick it sort of segment by segment. So I think if we look at the entertainment business, and say we look at the movie segment, it's I think the movie industry will have to think quite hard about the extent to which they're wedded to theatrical release versus releasing even at a premium on digital channels early on, which I think some studios are starting to do. They may later on have an issue about supply, in the sense that if they've got social distancing in place, they may not be able to film any more movies. But that's an issue. When it comes to travel and tourism and events, I think they will fundamentally have a really difficult question about how they rebase their business. And the reason is, as you point out quite rightly, this is about large numbers of people coming together. But it's not just about large numbers of people coming together. If I'm in a plane which is only half full, can you get the economics of that right? I'm willing to pay a premium, maybe if it's an important journey, but there'll be journeys I won't want to. but I also run the risk of being stranded in, in God knows where. I mean, I'm stranded in, Copenhagen or Chicago or Caracas for 2 weeks and then have to wait 2 weeks before I come back into the country. And these are all things that will, I think, markedly make it difficult for the airline industry. Now, the point is it's an important industry and it has influential political capital. So the way they work their way out of this will inevitably be through negotiation and discussion with national governments. But I find it hard, and I'm not an expert in the industry, and I don't have particular visibility about how they are thinking about making these adaptations. But with those caveats in mind, I find it hard to believe that they will bounce back to the levels of 2019, even in a 2-year period. And there are a few reasons other than the ones I've given, not least that I think that kind of discretionary spend, especially for families, is going to be lower down their agenda. 25% unemployment, 20% unemployment, many people realizing that they walked into this and they didn't have sufficient resources to feel they had any personal self-control, personal control or agency going into this. And those of us who are a little bit more paranoid and prepperish like me, we felt a little bit more control because I had some resources, because I had watched the TED talk and I had taken it seriously, or a little bit seriously, not as seriously as my friends who had hundreds of liters of hand gel in early January. So I think it is a really, really difficult, hard question. What the CEO of Boeing has said is, he doesn't expect things to return for him from an economic standpoint for a couple of years. The CEO of Lufthansa has said several years and years until we recover to the levels of 2019. I would contend that if it's years and years, that the recovery will take a very, very different shape, and that we won't likely be just jumping on a plane for a 1-hour meeting that's 400 miles away.
Thank you.
Yeah, and I would all thank you, Trista, for that question. As I mentioned yesterday in my opening remarks, I think that whatever the future holds, it will never be like what it was before, right? Like we're moving forward, we're not moving backwards now. There might be certain similarities between the future and the past, but whatever the future looks like will obviously look very different. So the airline industry will be structured differently, but also like offers to passengers, etc., and like the mode of travel itself. So I think that's important to keep that in mind, is like we're not going back and replicating what happened in the past, but more so finding new norms for the future in this new reality, which is a reality where pandemics can hit, and we need to be prepared. So we got more questions. One question about VR. Go ahead. You're unmuted.
Hello, can you guys hear me?
Hi.
Yes.
Yeah, thanks. I didn't expect actually to come to the mic. I guess in mid-March, I quickly bought one of the last remaining VR headsets from Oculus and jumped kind of neck deep into the entire bustling VR subspace in the blockchain community. And I've talked to a lot of people in the space and just asked for their honest opinion. Hey, don't you also feel like this entire spatial audio moving, this atmosphere, and that we can all meet in one 3-dimensional space from our homes feels more social than a Zoom call? And pretty much everyone has confirmed this. So I'm wondering what your point of view is, if this technology is actually going to grow and expand and thus actually shorten the social distances that are between us, whether across cities, across countries, or across continents, or if you think that that may even be cool, but it won't really take off for some reason that you actually believe in.
Yeah, well, you've asked a question that is my absolute blind spot. So I'm almost irrationally negative on VR, and I say irrationally because I can't quite people always have blind spots, and for some reason, the potential of VR, and 2 or 3 years ago, I did a reasonably deep dive into it. I just felt that the technology was still sufficiently far away from being just good enough. It just works, and the delta between doing other things like being on a Zoom call, or actually, frankly, just listening, having your headphones on and having a normal phone call, was not sufficient outside of certain very, very specialist activities. I mean, gaming might be one, but there are also industrial applications of the technology. So I buy the theory. What I haven't seen is the product service fit that will take off, rapidly and instantly and at the right price point. Now, there's no question that if we did get that fit, we have distribution channels through Apple and Google to get tens of millions of people using these things. I mean, most of you are probably too young to remember the launch of the original iPod. I certainly remember it very clearly. At that time, not many people walked around with these white plastic things in their ears. And now it's become a commonality, and it hasn't taken that long. So I don't doubt the possibility. I get the theory, but I haven't seen the fact that the technology is yet mature enough to enable that. But again, I could be wrong.
Yeah, I don't know if you've seen some of the initiatives in the crypto space. There's been quite a few crypto and Bitcoin meetups and conferences, well, maybe one or two, which use VR. And it seems interesting. Like, I haven't participated in any of these, but I like the idea of like just being able to, like, I don't have a VR helmet, but if I had one, I think it's definitely something that I would participate in. But I think the price point has been one of the things that is like quite prohibitive for a lot of people. Is like buying a $200 or $500 VR helmet.
I would just say so. I mean, I did spend time, spending a couple of hours a day in an HTC helmet, and it's just not that much fun. You feel giddy and sick the whole time. And that said, I'm sure there are things that could be built on top of a Zoom-like service. And I know that there's a whole bunch of things that are out there, not just House Party, but other things that are designed to kind of break what is quite a functional interface. I mean, Zoom has great engineering. It doesn't have great product design, in essence.
Oh God, don't get me started about Zoom product design. This is the longest time I've ever spent on a Zoom call, and we've definitely seen the failings of their product design. So we have more questions here. Audrey, Juan, two Juans. If you want to ask your question, just raise your hand.
Yeah.
Otherwise, we can just address them here. So Azim, are you seeing these questions?
I am. Should I take Audrey's first?
Go ahead. Whichever one you feel you'd like to answer.
Yeah. So this is another massive question. Sort of, she says, I think it's really amazing that these international people-to-people networks have increased due to the crisis, but the severe disruption of supply chains and a rise in closed borders, reduction in international cooperation. Intergovernmental organizations have been quite ineffective during the crisis. What are your thoughts about this? So I'm going to tackle the last part of that question first. And that'll be the bit that I'll tackle because it's a long question. So Sebastian, you've frozen again, which makes me worry that I'm not visible anymore.
Yeah,
you're muting.
I mute myself, yeah.
Oh, when you mute, you free. Okay, fine. Okay, I'll trust you there. So Audrey's absolutely right to say that the international coordination has not been brilliant. I wrote an essay on this about 2 weeks ago, which you can find on exponentialview.co. And the issue that we saw in previous epidemics and in the global financial crisis, and frankly, even after 9/11, was a coordinated, multilateral response, which essentially allowed us to marshal ourselves and surround the threat and effectively tackle the immediate threat. Now that's missing right now, but there's an additional complexity today, which actually makes this a little bit similar to the GFC, but not hugely, which is that a whole bunch of the capabilities that we need in order to tackle this are actually not held by nation states, and they're not within the remit of the multinational organizations. And so we can't discount the importance of the technology platforms, Apple and Google in particular, in this case, because of their sort of global phone penetration, but also the Microsofts and so on, and Facebooks. And one question that we haven't answered, and it was as true 3 months ago as it is today, is given we have these platforms that provide capabilities that the state has no way of providing, how should they be represented in any form of multi-stakeholder group or any form of global response to, frankly, anything, whether it's cyber threats or pandemic threats? And I don't think we have a good answer to it right now. I mean, it's uncomfortable to think of putting Microsoft or Apple on the UN Security Council, just as an absurd example, for many, many reasons. There's no democratic accountability being, not least one of them. But we have these companies that own this digital infrastructure, which is analogous to the public physical infrastructure that we used to exist in. And we don't have a good answer. The way we get to the answer is to raise a question, the way Audrey has, the way I have, and other people. Satya Nadella raises it, the CEO of Microsoft, in the Financial Times today, and start to really figure out what a sort of a multi-stakeholder coordinated approach ends up looking like, and what the rights, responsibilities, and accountabilities of all the participants are.
So we have other questions here. Juan, Audrey, if you'd like to ask your question, just raise your hand. Otherwise, we can just get to them. So, continuing on the film industry, do you think we might abandon the regional rights system and finally have content that is globally accessible? This is something I bang my head on the table every time I get to, oftentimes I want to watch a movie, right? And I download movie legally, I'll Google that, and then I'll spend 30 minutes trying to find a movie that I can watch or download legally from France in English. And so that's been really frustrating. So what do you think there?
Well, I mean, regional rights are part of the overall intellectual property framework. So I'll answer the specific question and I'll kind of get more general. I can't figure out the ethical argument that leads to the implementation of a regional rights system. I understand the ethical argument around rights and around sort of rewarding producers and creators, but I don't understand why there are regional rights except for entrenched interests. And so I would look at this question and say, I mean, clearly it's almost nonsensical to have regional rights in the way they are around sort of video and audio and music content. However, and especially as they go digital, however, there are entrenched interests and there is power at play, and the process by which the decisions get made are very, very slow. So I wouldn't bet on anything happening here because it's not clear whether it actually benefits anybody who's actually making the decision. So yes, would be great if we had global rights. I can't imagine it happening easily, and I'd be curious to what the trigger would end up being. And it might be that the Hollywood studios start to say, you know what, we're just going to charge, $30 if you want to watch a movie at home on the day of release, wherever you are in the world, and be done with it. they may do that. I mean, they're not doing it, frankly, on Netflix right now or on Disney Plus. So I'm not sure why they would do it in this area. Just a more general question, which is that the question of intellectual property is really strained in this industrial transition, and given the exponential trends that I talked about, because the value that we see in the economy now doesn't actually, believe it or not, even in these moments where we can't get enough sort of physical goods, the value in those things does not arise in the stuff that is shipped around. If you look at an iPhone X that costs $1,200, only $400 of that value is actual physical hard stuff. The other $800 is Apple's design and know-how and patents and branding. And so even something as tangible as an iPhone is made up of intangible information at value that is protected by this intellectual property regime. And it feels to me that that regime has to start to shift.
Go ahead.
I am unmuted again.
Yeah, you're on.
So thanks. So another question I had was related to the to climate change. In fact, within the last week, we had a quite surprising reversal of business and corporate thinking in Germany with respect to how the climate change crisis should be approached. They turned to with a very strong proposal to pro-taxation, pro-incentives, literally putting the pressure on business and arguing that this crisis and the fact that basically all the processes in business, so business as usual, is basically broken up, and they want this to be used as an accelerant to actually lead to positive climate change. My question is, how does the situation look like elsewhere in the world, outside of Germany and Europe? And are you maybe even aware of any bottom-up approaches to approach active decarbonization? So not, things from business or from regulators, but things that actually start at the very root. Another keyword might be local action.
Yeah, so it's interesting how Lufthansa got a bailout. That's a German airline as part of this green recovery in Germany. And I guess that goes to the complexity of the problem, the complexity that politicians have to deal with. There's a whole bunch of things that are happening within the climate change space. You have things where the problem has essentially been so clearly specified, and we know what the solution is. So in electricity generation, 1.5 cents per kilowatt hour, which is about better than a third of the for solar energy now, for solar generated electricity, which is about a third of the price of gas or coal or even oil at its reduced price, is a no-brainer. In fact, you could get 3 times the capacity for the same amount, and you can actually tackle then the intermittency problem, because you can have solar here, wind there, and high voltage long range DC lines piping the power from one place to another. So you get this situation where we clearly know the path, and that if you're investing in a new coal station or an oil station, you're really going to struggle to get the financing you need, because these payback periods are 25, 35, 40 years. So that in a sense has already been tackled. What remains though is an enormous bunch of harder to deal with situations. So land use, heavy industry, cement manufacturing, and these things make up the majority of our greenhouse gas emissions. Now, the good news is that consumers have decided. They had their own little catalyst, 16 years old and very powerful last year. And you notice that, I'm sure you know that last year was the first year in sort of public surveys that more than half of Americans said climate change was the #1 issue for the country. It was 72% of Democrats and 20-something% of Republicans, and it's the most partisan issue they have, but it was still a majority of Americans. And I think that's important, because consumers make individual choices. And given that then there ends up being consumer pull, you would then imagine the entrepreneurial sector, as they have done, to respond to this by starting to say, okay, what are the tools consumers need in order to meet this expressed desire they have to have a lower footprint. And alongside that, cities, which is where we spend most of our lives, are taking a tremendous amount of climate change leadership. And they're thinking in terms of sustainability and walkability and water reuse and all of the things that actually really matter when we think about overall environmental sustainability. So that is a positive tailwind. And finally, you have the fact that there are very few companies now who will willingly stand up and say, we don't care about our targets. And in fact, it's the other way around. So 10 days ago, Shell, which is responsible for 3% of all of mankind's emissions since 1961, has said they'll be net zero by 2050. And they join a long range of list of companies that are heading in that way. And I think at some point, the combination of all of those, together with the fact that the providers of capital, the finance industry, are now pricing in climate risk, means that we'll move in that direction. The paths to getting to beating the sort of 2 degree or 1.5 degree are really unclear and not very obvious. But I think that we've got a mix that works. The extent to which the bottom up stuff matters, I think it does matter. Lots of people say it doesn't. I happen to believe that if enough of us coordinate and demand, we can affect change. And we've already started to do that by demonstrating that we want to own Teslas rather than Mercedes. Anyway, the plural of Mercedes, own Teslas. Mercedes, yeah. And by demonstrating that we want to eat less meat, which is already also happening, we are signaling into the market. And for once, there are not many strong countervailing forces that are saying we shouldn't be doing that.
So if you have just a few more minutes, I'm conscious that you've been here with us for quite a while, but thank you for staying on so long. I have one last and final question before we move on to our next panel. We talked about gig work and how the gig economy has been sort of accelerated through this crisis. But the gig economy has existed for several years. It's well established, and there are millions of gig workers throughout the world. How does this crisis? I mean, we know that this crisis probably will accelerate it, but in what ways will the gig economy shift? Do you think? Like, how does this affect the gig economy in other ways than just accelerating it?
So the answer to this, as it is to so many questions, this is actually one of the toughest questions, is we don't really know. So let me lay out some potential paths. The gig economy, as you say, had existed for a long time, and no one really cared about it. And the world split between the Deliveroos and the deliverees. We were the Deliveroos. This is a phrasing that a wonderful British entrepreneur who runs a company called Ometria came up with. The Deliveroos were the ones who answer the door, and the deliverees are the ones who stand in the cold handing us our food. And in a sense, nobody much cared for what had happened to the contingent worker over time. And even well before the platforms emerged in the way they did, we had moved many workers onto what are known as 0-hour contracts, which are essentially it's gig work, but just not through an app. And it hadn't really been an important issue. And the way the narrative of the so-called sharing economy was presented, it was presented as freedom of choice, which is very much a kind of West Coast libertarian, stick it to the man type metaphor. And so we looked at the gig economy in these early days and didn't really dig deep enough. What started to happen in the last 3 or 4 years has been entrepreneurs started to argue that we needed to have, not just entrepreneurs, sorry, many people were arguing this, but entrepreneurs started to respond to build tools that looked like a safety net for the gig economy age. So fractional car insurance and health benefits and pension-like benefits, the types of things that a traditional employment contract might have given you. Even cash flow consistency was some of the things that were being presented. Now we sit into a situation where in the US unemployment is approaching about 20%, and The same is going to be the case in many other parts of the world. So we're going to have very little choice but to reimagine what employment relationships look like. And the last time that rich countries found themselves in this position, and I'm not thinking so much about what happened to the Southern European countries during the global financial crisis, because there was a path there and there were some political routes out, but it was after the Depression in the US, and it created the modern functioning welfare state system they have in the US, to the extent that they have one, even if it's sort of denuded to the kind that we're used to in Europe. So this is one area where it's really hard to imagine that the tools of the status quo could actually work. Because if we just use the systems that we had prior to, patient zero in Wuhan in November 2019, you'd end up with 20% of the population out of work, underskilled, not paying taxes, but getting distributions from the state. It's completely unsustainable. And so in order to tackle that, we'll need some kind of vision. And now that vision could be something like, something like a universal basic provision, a universal safety net of resources and cash that allow people to then, work in ways that are less full-time and less contracted. It might be that states say, well, we're not willing to have that, but we do want people in work, so we're actually going to request less labor market flexibility and more employment contracts. So if you want to operate in this country, you're just going to have to employ people. And I'm not really sure which way it goes. It is something to take a look at and say which of those two directions would work. But certainly what probably won't work, and we will see this play out in some of the American states, is an intentional focus on the way things were before COVID came. And the two states to watch on that, if you're interested, are Iowa and Texas.
Awesome. Thank you so much, Azim, for this, taking over from Sebastian. And so
I just want to end on this and encourage everybody to sign up for Azim's newsletter, exponentialview.co, and I read it every week, and so it's absolutely terrific. And I want to thank you. I really want to thank you for spending all this time with us and addressing all these issues. And hopefully we can do this again sometime.
My pleasure. Thanks for the invite.
And feel free to stay with us. We've got a panel now on the impacts on VC, so you're more than welcome to stay on.
I'll do that for a little bit. Yeah. Okay.
Cheers.
Thanks.
Cool. So yes, I am beyond excited to announce a panel today about venture capital, in particular, how VC is adapting to the macro environment. And thank you so much to the panelists, because there is a 15-hour difference. This is like the sort of thing that happens during Zoom calls virtually. So in this discussion, we have Gwendolyn Regina, Jill Carlson, Suna Amaz, and Nick Grossman. And so the format of this panel will be an open discussion. So I'll be here to lightly nudge question at times as a fallback, but feel free to get a conversation going to wherever you want. So first of all, please, can you introduce yourself in 2 or 3 sentences?
Yeah, I can start. Can you guys hear me?
Yep.
Well, okay, cool. Yeah, so I'm Suna Amaz. I'm general partner at Volt Capital. We focus on the picks and shovels around cryptocurrencies and digital assets. I also run a community called Token Daily. You guys might subscribe to the newsletter. It's a bunch of these vibrant and incredibly smart engineers and operators that are looking, for their next big thing, or just wanting to keep the pulse on what's going on in crypto.
Thanks, Suna. I'll hop in here. My name is Jill Carlson. I'm a principal at Slow Ventures. We are a seed stage fund based in Silicon Valley. We invest really across the gamut, from consumer all the way over to things like crypto, which Suna was just talking about. Really excited to be here virtually. This is my first virtual event that I'm participating in. Shout out to the team for putting it together, and excited for this conversation.
Hi everyone, I'll go next. My name is Gwen. I'm sitting in Singapore, 11 p.m. So good evening to everyone. My side hustle right now is on questions. So I'm really exploring the art and science of asking what is a good question. So it's on questions.com, little plug. And my background is across technology startup scene as well as a media. So I spent kind of several years doing several things. I have worn the hat of an entrepreneur. I started a tech blog a long time ago that was acquired. I also was really lucky in having started early in the internet days in Singapore and Southeast Asia in 2005. I was very lucky to start a fund in collaboration with the Singapore government. So for the last 15 years, I've kind of really kind of dabbled in both the founder side, the operator side, investment side, and hopefully today I can contribute some of that experience, and especially now as an angel investor.
Great. Hey, everybody. I'm Nick Grossman. I'm a partner at Union Square Ventures. We're a venture capital firm based in New York City. This is our office behind us that I am not in. No one's in it right now, of course. We've been investing at the applications layer mostly of the internet since 2004. The firm was sort of born in the ashes of the dot-com crisis, and have been investing for the last 15 years in what is now later stage internet ecosystem, which includes a heavy focus for me and for us on crypto assets and blockchain technology, but also all the places that the internet hasn't crept into in our lives yet, which I think are still a lot of places in terms of education and healthcare and work and so on. And this is also my first virtual large conference. And I think one bonus for me is that I think my parents are watching. So hi, Mom and Dad. Nice to see you.
Awesome. So let's kick off. Actually, that was a great transition about internet software companies, because there was a recent piece by Founders Fund, John Dodig, which I thought was very interesting, about the analysis of internet so far since the dot-com bubble, how it evolved and how it's increasingly zero-sum and less exponential growth and more stable, predictable growth. And so perhaps potentially less VC backable. And so do you have any commentary on this? Is crypto or other like remote-based startups a relay of growth in that regard? So would love to have your feedback and commentary on this. Anyone can start.
Maybe
I'll hop in. Oh, okay. Sorry, Gwendolyn, go ahead.
Okay. There's a conversation, right? Like not really panel-like. So whether VC, so I read that article as well, but just I guess on your point, Alex, whether VC will cease to exist or something, I guess it's too 1 versus 0. I don't think it is. I do think that the number of financing models will increase. Again, over the last several years, we've really seen much more revenue-based financing, where you're kind of borrowing, getting and giving maybe a little bit of equity to your current investors, where you're borrowing from your future income. I think such models will continue to kind of grow. I think VC will always have a place, because I really think that, especially for deep tech, and I spent some time, a year and a half or so, with Entrepreneur Fest in Paris, where we focus on investing in PhDs and postdocs to help them create new companies. I think for such very technologically driven models, where you're trying to do paradigm shifts, fundamentals first, I do think you still need VC funding to really accelerate R&D and accelerate growth. But that's my quick comment there. Jordan, go ahead.
Yeah, I mean, I would agree with that I don't think that venture capital is going away. I think that perhaps those in the space are going to be playing on hard mode for the next several years, just as founders are. I think that the idea that software has already eaten the world and there's nowhere left for it to go in order to generate the kinds of returns that we've seen over the last couple of decades, I don't agree with that. I think Nick was starting to speak to this himself. There are still so many areas, from real estate to insurance to education, where we haven't seen, I think, the full extent to which software can disrupt. I think, interestingly, in response to the article that you mentioned, Alex, a lot of it talks about how this notion of software's kind of already eaten the world, and a lot of the things that are going to come now, as Gwendolyn started to talk about, are going to be these more kind of low margin businesses, et cetera. I think that, you know, there's been this misconception over the last several years anyway in venture that it's possible to get venture returns in these more low margin businesses. And I think that we started to see the tables turn on that narrative over the last year or so, as you know, a lot of these sort of SoftBank backed businesses, et cetera, have had a day of reckoning, sort of rightly or wrongly. And so interestingly, I think that that narrative had kind of already shifted pre-COVID, and it's easy to now associate that with the pandemic, just because it feels like everything is being so shaken up now. But I don't think that those two are necessarily related.
I completely agree with Jill. I think that this conversation may have been more interesting if we had VCs and non-VCs on, because of course we're all going to say that VC is not dead, and that is purely because of our career choice. But well, a lot of it has to do with the thinking that went into what we selected as our career, right? But you know, for the sake that I'm assuming we're all in consensus, if you Google, you know, VC is dead, or, you know, is there nothing left or new on the internet? This is a topic that comes up every few years, and it usually happens in a calamitous time post-bubble during coronavirus. I think John actually timed this article well, because people over-index on what's happening now and believe that any change that occurs just due to recency bias is going to be extrapolated out into the future, and everything will be different. These things that weren't working are dead. It's overwhelmingly negative, especially when you're in a risk-off environment. And if you actually look to what behaviors have been happening during coronavirus, you know, screen time is up. It's unlocked a lot of verticals that have since until now been resistant to being digitized, things like education, healthcare, et cetera.
Yeah. So
I don't buy the argument that, you know, these tailwinds have vanished, though many of them have transformed. And it probably would have been a different conversation if he'd isolated certain verticals. So if you look at social media, for instance, okay, there may be more zero-sum dynamics occurring there. If I'm looking at my Instagram feed and it's primarily filled with TikTok videos, then there's clearly some zero-sum dynamic at play there. But we don't saturate one internet pasture, we just move on to different ones and unlock different verticals. And that's how I've always viewed it. And I think another thing to consider is this is a largely US-centric view. I don't think that this really applies to what it looks like around the world. If you internationally look at, you know, smartphone penetration and how folks are increasingly coming online in different parts of the world as well.
Yeah, I put the link into the chat for those of you who have not read the article that we're all talking about. But I think the basic idea is that, okay, here we are in 2020, everybody has a smartphone and a Facebook account and an internet connection, and therefore sort of internet is over and everything has been figured out. And so I think I agree with everything that was said here in terms of, like, it's just a question of, I think a better way to think about it is, what on earth hasn't been transformed by software and the internet yet? And I think there's so much in work and in education and learning and in healthcare that hasn't even begun to be changed yet. And one way of thinking about it is, who are you competing with? Are you competing with paper, or are you competing with another software company? And I think part of the point of this article was, increasingly tech companies are going to be competing with other tech companies, and that's sort of the more zero-sum thing. So I think that there's some truth to that, but I think there's still a whole lot of paper out there in the world that is causing things to be slow and cumbersome. And in the depths of every industry that exists. And I don't think that opportunity is going anywhere right now. And then I think all this coronavirus stuff has shown, like, oh man, like, it's actually accelerating the change into doing more things online and more things connected. And so even though we may be saturated in terms of how much time we can spend on a screen, I think we're just at the beginning of figuring out what we can do, you know, with software and the internet in all different, like, parts of our lives. And then, you know, we've also been, like, really long, like, crypto and blockchain, and And I think that is one area where there is wide open ocean, there's broad experimentation. You don't have big incumbents like Amazon and Apple, like blocking out the landscape. And there's new ways of designing, pure software systems that can be built by, two kids in a garage or an apartment in Brooklyn, and I think that's alive and well. So I think there's a lot to be done. That's how I feel.
I want to hop in and say one more thing about the points that the article makes, because it's not just about, and again, Nick popped it in the chat and I just popped it in the Q&A as well, for those following along at home. But part of what it talks about, it's not just about what verticals are going to remain interesting in this new kind of paradigm. It's also about what venture capital is good for. And
yep.
I think that this, again, is nothing new in sort of the age of coronavirus. I think that perhaps the current economic environment throws this point into very sharp relief, and we can no longer get away with the kind of hand waving again of like, oh, these low margin capital intensive businesses are, appropriate for venture capital just by virtue of the fact that they're capital intensive. We can't get away with that more kind of lazy thinking anymore. We have to be very diligent about the fact that venture capital is primarily good for running experiments, R&D that are going to be high return, that can have that exponential growth vector. It's not appropriate for just pouring gasoline on a fire that's already burning. A lot of these kind of misconceptions that have indeed returned markups perhaps over the last several years and may continue to do so. But again, when the day of reckoning comes in the public markets, it's always been a lot more difficult. And again, I think that this is nothing that's new to the time of coronavirus, but again, I think it's thrown into harsh relief right now.
Can I kind of jump in a little bit of a geographical context? Because I think Suna, you mentioned this is a very American-centric point of view. Mm-hmm. So my experience has been mostly in Asia. I spent some time in the Valley and Paris, as I mentioned earlier, but mostly in Asia. And when you look at Asia, it's I don't know how you all feel, but biasly, I feel like Asia has gotten much more kind of global awareness. And just to set some context, right? Asia is super huge. You have China, India, and the whole Southeast Asia and a lot of other parts, where 2/3 of the entire world's population, right? And when you look at technology diffusion, you always need, technology and capital, right? Capital to fund that technology diffusion. And it always starts in cities and in nodes in these cities where everything's more densely connected, and then innovation kind of spreads out, right? So when you look at, say, Southeast Asia, where I'm from, and it's like 600 million population or something across several different markets, you're looking at very differing kind of landscapes. You have many cities. So Singapore, I'm from, Hong Kong, Jakarta, Manila, Bangkok, Kuala Lumpur, they're all like cities where you have to look at it as one market, right? So the kind of technology diffusion that happens there, it's a very different rate as what's happening in rural areas, right? So then kind of linking back to kind of topics we talked about, so the point of kind of VC coming in, yes, it's still happening in these cities and will continue to happen, because in this region, there's still a lot of innovation that happens, sometimes slower than, say, the US, slower than China, but sometimes also faster, because we have different kinds of environments and infrastructure, right? So again, a lot of rural areas jumping to mobile first, / in a country like Indonesia, where it's a country made out of like 7,000 islands or more, or 14,000, I'm very wrongly, 7,000 maybe. And you're talking about how telemedicine, for example, is going to be way more important, for a country like that, right? So it's about the kinds of innovation that happens differently. So I wouldn't go so far as to say that it's not just, I would add on like not just verticals, but also like geographical kind of location, and also like how the speed of that technology diffusion.
That's great. I think those are completely valid to look at. I wanted to piggyback off what Jill was saying in terms of there are different things that are being funded, and there's venture capital going to high growth, great unit economic type of companies. And then there are throwing gasoline over a fire and selling a company to your buddy, or getting somebody that's already, proven themselves in some capacity and kind of saving face and having them have an acquisition or some, botched IPO. And these are completely different things to be funding. And I do think that during coronavirus, during deflationary periods, during any time of economic turmoil, we become more risk averse and we start turning in to looking at the basics and going back to the fundamentals. Well, okay, let's look away from more risk-prone activities like high growth, and let's look at what immediate monetization looks like. What do they actually have coming in the bank via MRR? What does EBITDA look like, right? And I think that in addition to that, you also have folks that are looking for, if they have felt stung by venture capital or the mistakes have been made during more bullish times, they're looking for different ways to experiment that they think are more risk off, like an income sharing agreement, for instance, right? And there are different experimental models, but that doesn't necessarily render existing models obsolete, right? So I do not think that even in a world where VC is dead, it's not that venture capital ceases to exist all of a sudden. It's that other people are looking for other forms of finding investment and funding projects alongside venture capital as well. And then based on the types of margins they're looking for, will seek different funding appropriately. But I am curious, how has your guys' viewpoint changed in terms of what you're looking at when you invest? How do you think of growth versus profit now that EBITDA is out of the window? How are you guys thinking about analyzing even unit economics, which founders before were presenting and oftentimes would get wrong because frankly they were led astray by VCs who also couldn't do the math? How are you guys looking at that kind of situation and evaluating it?
Yeah, I mean, it's
go ahead, Joe.
It's interesting trying to reason about any of that at the seed stage, because often companies are pitching us before they have any of those things. So from that perspective, on the one hand, the good news is, the immediate pitch hasn't changed materially, and it was never an expectation that, there were many data points in terms of any of those things coming in. Certainly, it's important to be able to reason about the future, however, and that's where I would say things have materially changed. Is you're always looking ahead, not only to the dream IPO vision 10 years down the line, but also what is the next round going to look like? How can we reason about what the Series A looks like, what the growth rounds following that will look like? And that's where things, again, have changed in terms of the fact that we can no longer depend on the same revenue dynamics going into a Series A round. And so for that reason, a lot of what we've been spending our time on trying to be able to think through and trying to get a grasp of is how Series A investors will be thinking about things, 18 months down the line when they're looking at a cohort of companies that have had to come of age in this environment.
One specific question that seems to be coming up a lot right now is that there's a tremendous amount of growth in anything remote, video oriented, whether that's in learning or health or remote collaboration. Zoom is up 30x since December or something like that. And so a lot of companies that are doing that one way or another are raising right now and looking for big multiples. And I think a major question is about retention and how much of all of this crazy shift in behavior we're seeing everywhere on earth this month is actually going to stick and turn into like longer term new behaviors. So I think that's a funny quirk of this moment where the growth in a lot of cases is off the charts, but like totally unknown whether that is just going to vanish when things sort of go back to normal, or whether we'll reset at some new level and we'll start to see what kinds of behaviors are more durable and longer term.
So I heard someone refer to it as COVID market fit as opposed to product market fit.
Right.
Good one. That's a good one, COVID market fit. Well, Sudha, I love your question. And well, technically I'm not a VC now, so I'm just an angel. So I don't have the firepower like all of you do. But what I'm kind of talking my companies and kind of other companies as well, it's kind of, really kind of focusing on what do you think, if you're pivoting now, new product, new business model, whatever, what do you think will continue to remain, essentially, to Nick's point, right? Because I don't want them to do something just to capitalize and leverage off this time. And then for some reason, either 3 months, 6 months, I don't know, 18 months from now, and everything dies, past COVID market, I guess, situation, and then things die. So that's what I'm kind of really looking out for right now in terms of the pivots. What basically the question is that what will not change? What will be consistent? And for consumer behavior, I don't know. I mean, that's the question I have, which is that all this video stuff, you know, will virtual museum, how will consumption of art change or not change? Will we now be more used to doing virtual museums tours, you know, that can potentially like unleash a whole new like a side of revenue streams for a lot of like art museums and stuff like that, right? But will this continue? I don't know.
Right, those are great questions to ask.
The way that I think about it is very accelerationist. Just quickly, I think that the trends that were already happening have been accelerated, and it'll be interesting when we look at like entirely new behaviors. But that's just quickly, yeah, kind of my framework for it.
Yeah, and you're seeing that in terms of behaviors and also in terms of regulations. So, you know, things that have been blocking the growth of telehealth or remote education, like those are going out the window because people have no choice. And so there's this, like everybody's learning new tricks right now. And I think accelerationist is exactly the right way to think about that. And we've been spending a fair bit of time trying to at least build a framework for, you know, which of these things will be the easiest to sustain versus harder to sustain. As an example, you know, if people start going back to work more, even though we've learned some new tricks around online education, you know, taking care of kids during the day is still going to be a hard problem, and we won't, you know, our kids won't all be doing school on video, you know, full time. Whereas events like this are, you know, really awesome and so much more accessible than a standard conference and doesn't require anyone to get on a plane. And you can imagine, you know, behavior changes like that, like really sticking. So I think it's an exciting moment to like just see what new behaviors people are learning, and maybe back to this first point about like the role of VC and zero sum. You know, there is already a huge VC pile on anything that looks like remote friendly with traction right now. So I think you will end up with like a bunch of way overpriced financings on, you know, everything in this category, and that may still be okay in the end, but there'll probably be some ugly situations there in a few years too.
I saw someone wrote quite funnily that like how a lot of companies are trying to do more Slack integrations and again remote working tool apps, you know, but it's like for that joke was about, it's not for a future paradigm of work from home. What you don't need Slack integrations. What you need is childcare, which I think is so true.
Yeah, I think on a lot of the remote work stuff, I think that people want just this silver bullet that can make it easier for them or more manageable for them or allow them to collaborate as though they were in person, things like this. But so often the tools are only as good as the behaviors that people have adopted or the processes that people have adopted. And Suna, I know you'll be able to speak to this, and Nick as well, having spent a lot of time in crypto systems and security, et cetera. But there's this notion in InfoSec or cybersecurity as well that exists that, you know, you can't just use 1Password, for instance. You can't just use some cybersecurity product. You need to institute processes around it that enable that product to actually work. I think the same notion very much applies to remote work, where people so often, managers so often skimp on the processes while over-indexing on just onboarding a whole bunch of these sort of buzzy SaaS tools, which the tools are very important. I'm not sure I completely agree with Nick that there's going to be carnage in that space. I think that some of the valuations now, again, taking my kind of accelerationist perspective, are not unreasonable. But I do think that there is a tendency to over-index on what feels like a quick fix without investing properly in the processes around them.
No
yeah,
doubt.
and I think that we underestimate how much of this will be a synthesis as opposed to your thesis or antithesis in terms of, you know, working physically versus working working from home, which is now repackaged as remote work. But ultimately what will happen is, what I think will happen is a lot of these folks have spent massive amounts of time creating policies around remote work. They've integrated and purchased subscriptions, and these things aren't going away. What they'll find is more creative ways, different use cases to use them. But yeah, we still haven't solved. The thing is, with folks who think like the future is now completely remote, probably aren't stuck at home with a lot of kids, and probably weren't experiencing Zoom fatigue, and are probably not putting themselves in the shoes of like many of middle America that are associating Zoom with like a pandemic and staying at with kids all day. And but I do think what will ultimately happen is it's a synthesis of the two. There are perks to it. And I don't think it'll be absolutist one way or the other. We did get an interesting question, if no one else has anything to say, in the chat box. And someone asked, is the adjustment that we are seeing from venture capital in COVID-19 a reversion to the mean or a more serious long-term economic hit? I want to answer this question really quickly because it's along the note of something else I've been seeing where people ask, is VC open for business, or are people not investing and just saying they're open for business and want to look good? And I think the question is so reductionist because it assumes that all VCs raise capital from LPs at the same exact time and deploy on the same exact schedule. And that's not the case. Some folks, Corona hit at different stages for different funds. Some folks had just raised their fund and are sitting on a lot of dry powder and are ready to deploy and mean it when they say that they're open for business. So the types of companies they're investing in and what they're looking for and the types of companies they're investing in may have changed. And, folks that fall in the other camp who were just about to raise and had already fully deployed are, as you can assume, looking inward. They're looking, at updating IRR. They're making sure all their companies have anywhere from 12 to 24 months of runway. They're, figuring out how to put the best foot forward for LPs when markets, rebound. And so I think that it's just really different in terms of the VC you're actually talking to. And that's the reason that people feel confused, is because it really is different based on the VC you're talking to.
I think, Jill, you're on talking, but on mute. It's one of
There
those
we
little
go.
tricks about using Zoom. There you go.
Yeah, you would think that after days and days now of back-to-back Zoom calls, I would have that down, but alas. I agree with everything that Suna just said, and I think that there's an even more macro point outside of venture capital here to make around just reversion to which mean, because are we going to see a reversion to the mean of the last decade? I don't think anytime soon. That's hard for me to see just from kind of the macroeconomic perspective, even, venture capital aside for a moment. But is this a reversion to a much longer mean? I think perhaps, because it's important to put into context that the last decade has itself been very exceptional in terms of the easy monetary policy combined with really global tailwinds around growth across verticals, across sectors, across geographies. And that in itself has been a real exception to, again, the much longer sort of centuries long mean that one might point to. If people are interested in this topic or this kind of framework of thinking, again, about the larger economy, I highly recommend Ray Dalio's book, Big Debt Crises, and he talks a lot about these cycles and whether they're sort of the short term or the long term. And I think that we may have reached the local peak of one of the short term cycles. I think that the big question, the many trillion-dollar question that we're facing right now is whether it is also a downturn from one of the longer term cycles that we're seeing in the market. And that I don't have a good answer to yet. But I wonder what you all think about this question in light of the kind of macro economy as well.
Well, sorry, Big Debt Crises is sitting on the floor next to my bed, and I realize it's not the best bedtime reading, but I think it is appropriate. I don't know that I have a real great answer there. I think Suna's point about you know, every fund being different and capital meaning different things to different people at different times is really true. And we've been trying, part of why we've been investing so heavily in crypto as an asset class is that we feel like it is responsive in a different way to sort of monetary, you know, shocks and all these economic shocks. And Jill, I know this is something you've written about a whole bunch. And I can't claim to be, you know, an expert really there, but it does feel like that's an area where there's a new sort of new forces, new physics being introduced that, you know, have the potential to create a bunch of new dynamics in how technologies get built and how, you know, things get funded, not, you know, even beginning to get all the way down the line towards what does that mean for sort of the macro, you know, capital flows in the world. But it does seem like there's a whole lot of uncertainty right now. And we've been looking for, I don't know, hedges against that, where we can find them.
So I'm not gonna really, you know, kind of really speak to the question, but I'll kind of take a slightly different tack, which is that, so in Southeast Asia, we are a smaller market, say compared to the US, which is much more global in nature. A lot of companies that result are, again, way more global and more interest globally as well from investors, supply and demand. From this side of the world, we've seen valuations kind of really explode over the last several years. I know this is part of a global trend as well, but one thing that is important to remember is that this part of the world, we do have less, I guess, less of a market, for example. So basically my point is that some companies are raising based on using global valuations when the market that they're playing in doesn't really warrant that kind of that valuation. So when you look at this, this climate right now, where the ball is more in the investor's court, I think it's a fairly healthy kind of decrease of valuations. Obviously, startups are not going to like hearing that, but I think, you know, startups are realizing that, hey, you know what, actually this whole push to let's be profitable, let's really conserve cash flow, it's making them think, okay, yes, we need to really make sure to look at our unit economics, make sure that that works well, and it's targeting their own market, right? And not just based off like all the tailwinds of the global, let's grow, let's pump in like millions of dollars, and so your valuation can be 20x, you know, of your GMV or something, right? So that's no longer going to hold, and that's not holding anymore. And so I think for this part of the world, I think that's quite important to think about.
One thing to consider, I think you guys covered a lot of ground, is that the mean isn't this, you know, plateau that is sustainable. It's oftentimes more cyclical. So you get out of a bust cycle more risk averse, you're looking at more profitable companies, things that sometimes you're straying towards, you know, unsexier investments. So you're looking at the unsexy investments, or you're looking at more enterprise, you know, based investments. Some folks become allergic to consumer, whatever. But then, you know, over time, you get more confident, markets look better, there's more frothy behavior, cost of capital goes from infinity to zero overnight, and then, you know, it's kind of rinse and repeat. And so I do think that a lot of what we think will happen in the next 3 years won't happen in the next decade. There are going to be startups that, like, frankly, don't deserve to be funded or need to be funded, but because capital is so cheap, will be. And then that's usually when you can see the writing on the wall, and you can see, you know, a bubble's about to pop, and whether coronavirus is the pin or not, you know, is no one really can predict, but or something like that. But I do think that this is more cyclical behavior, and the mean is not this perfect middle that we've achieved and always have. And then all of a sudden some black, well, this is not a black swan, but when there's a black swan that, like, you know, this occurs out of nowhere. I mean, you can see these things coming. It's just a matter of when it happens.
I just want to, this is kind of an aside, so I apologize if this is a rabbit hole no one else wants to go down, but I have not understood this whole notion this is not a black swan event, because okay, sure, you could have seen it coming, but the thing is, you can't predict when it's going to happen. You know, there's effectively no one in the world who made that call with any degree of accuracy about the current situation. And you could have said the same thing about the 2008 financial crisis of, oh, you could have seen it coming. In fact, there were people who saw it coming and who who made the right bets. And so that's just been kind of a thing that's been grinding my gears for the last couple of weeks.
A quick answer to the quick aside. I was also, kind of taken aback. So I was, researching further what solid meant, especially because this is at least a gray swan. No, but it's, I think where the crux of the argument comes is like, if you look at what Bill Gates had been saying, and what the actual labs that were set up to tackle coronavirus in Wuhan were saying for the longest time, is that in the next few years, we can see something like 2003 SARS occur in the next few years. And so I think it was not that it was predictable, but it was regular. And so that's why they thought it was a white swan. But yeah, quick clarification.
Interesting.
That feels like semantics to me. I mean, this is one of the biggest shocks that we've ever seen in the last, in maybe even hundreds of years. I mean, it's or at least 100 years. It's on the order of the Depression and world wars, that we've never seen the economy just stop. So whether it's a black swan or a white swan or a gray swan, it's big.
So one of the other questions in here, as many VCs are now going to be a bit more risk averse, focused on their existing portfolios, both things definitely true in my opinion, is this unique opportunity for new models and new micro VCs. And going off of what you were just saying, Nick, we've never seen this environment before. It is very hard to make predictions into it. And it's also very easy, as I frequently have over the last couple of months now, to go down this kind of death spiral of pessimism. But I do think that there is a lot of room for opportunity in here as well, which is kind of what this question speaks to. And so just to speak to that quickly, I think that there's always been opportunity. I think that over the last several years, we've seen many move into these unique opportunities for new models and for smaller micro VCs to come in and disrupt the way that the VC landscape looks. That said, I also think that it is important to acknowledge that venture capital is a frustratingly difficult game to get into. And so not only has the game gotten more difficult for the players already around the table, it's also important to acknowledge that I think that the seats at the table and the ability to get into the game has also gotten much harder, which is something that, frankly, I worry about in terms of the fact that if you look at the players around the table right now, there are not that many women, despite the makeup of this panel and what that may make you think. There are not that many underrepresented minorities. There's not even, in many regards, that much diversity of geography or location or thought or background. And so that's one big worry that I actually have, is that as the barriers to entry have gotten higher, just even over the last couple of months, in terms of fundraising, et cetera, that the players at the table have gotten even more entrenched. So in short, I think that yes, there are unique opportunities right now because the rules of the game have shifted somewhat, and the game has also gotten harder to play, even for existing players. But my hope is that we do see new models and new players get funded and get involved. But I would be curious, Suna or Gwendolyn or Nick, what you all would have to say about this.
I do think that.
Yeah, go ahead.
Oh, well, yeah, I do want to thank you for bringing up the fact that, just women, investors in general, but then also like brown or Black women as well. I mean, I don't see many, but so one, I do hope new players get funded, but then secondly, an advantage that has been created because the internet has touched so many verticals is that being vertical specific can be an advantage that a lot of these incumbents don't have. And so when you're looking at many investments, yes, sure, there will be Amazons of VC and that, they touch everything. They have great brands that they've invested years into creating, and, getting their name on your cap table is, like gilding the cap table, right? But then there are more vertical or niche specific funds that can capture those power laws within each vertical. So you have like the Ribbits of the world, like fintech, you have crypto, you have gaming. And so I do think that there's just kind of, I do want to avoid using Cambrian explosion, but I'm not quite sure what other phrase is more fitting, of these funds that are very hyper-focused that will just beat incumbents in every other way because they spend all of their lives on these verticals and know it like the back of their hand. So I do think that there's an opportunity there.
Totally agree. I think we work with a lot of small focused funds, especially in emerging areas like crypto, where having really focused knowledge is like a really big, important factor. And so I like the idea of, managers who are narrowly focused, who are new, who are really deep in an area. And that speaks to an extent to the diversity questions that you brought up, but it's really hard to raise a venture fund right now. Today. And I think there's been a huge growth in new managers over the last, 5 years. And then right at this second, I think it's probably harder than ever to raise a first-time venture fund right now. Man, so many good questions coming to the chat now. Where should we go?
Address a point on diversity. Just a quick one, just on that. So in Singapore, it's quite diverse. I was just like mentally going through and trying to remember like all the VCs and where they're from and stuff like that. We are very international. I would say maybe 50-50 kind of like, or rather a lot, 80% maybe foreign, but kind of mix of skin color. Just putting it out there. So it's quite mixed, but female wise, it's still quite a percentage. They're usually more associate level, so more juniors. So less. So female diversity proportion still not doing that well, but I think color of skin wise and nationality is quite diverse in this part of the world.
Jill, you want to take us to the Q&A?
Good to hear.
Yeah.
Awesome. Thank you so much for this panel. Yeah, we have questions actually in the Q&A box. One which is really interesting about VC business basing themselves on startup that monopolizes the space, and the advent of crypto economic protocols and the whole crypto space that I'm personally really fascinated about. What are your thoughts on crypto in general? I know like Suna and Nick and Jill have a lot of experience in this, so I would love your answers.
All right, I'll take a quick crack at it, and then I'll be real quick. I mean, I think a lot of platform investing over the last 10 years has been about creating sort of a data monopoly where you own a platform and all the transactions go through you, and that can be narrow, intervertical, or it can be broad and horizontal. Obviously, in crypto, on the one hand, things are open and open source, and there's a lot of mixing and remixing and forking. On the other hand, I think the nature of protocols like HTTP and SMTP and the other open protocols have a natural convergence to them where it's likely that universality may occur. And so I think there is a potential for winning protocols to be way bigger than any winning companies were in the internet space. And at the same time, what's so cool about the crypto ecosystem is that on the edges of those protocols, everything is open and hyper competitive. So, whether you believe, Ethereum or some other smart contract platform will be the sort of winning protocol for a certain function, you've got this massive explosion of interfaces and applications on top that generally require very little capital investment to get going because so much cost is outsourced, into the lower level protocol. So it's this kind of weird mix where I think it's hyper competitive and also the potential for kind of winner takes all dynamics on a larger scale than we've ever seen before.
Yeah, I agree with that. So 2 quick notes about crypto. It's really interesting to see how folks respond, when Bitcoin's up versus when we're in a bear market. You're incredibly enthusiastic. You think it's the future. For general folks that don't follow it closely, when the price is up, and then when it's a bearish market, all of a sudden it's a silly toy, or it's not cool, it's not happening. And I do think that even for folks inside the space who say they don't pay attention to price or it's not important. If you look at most paradigm shifts within industry, period, but specifically internet-wise, you see these bubbles of speculation before you get to more of this logarithmic growth, right? And so I don't see any other way for people to get into a space or like to massively get people's attention unless there's like more of the speculative period where people are making money and then they look up, right? Oftentimes people are more concerned with numbers when they're prefixed by dollar signs. And so the speculative behavior is usually needed in order to get people's attention first and then to start building and bring them in and stay for what's actually changing. And so let's look at what is changing. If you have looked at the brief history of the internet, when Web 1 first came about, the primary monetization model that folks thought was going to, be the de facto type of monetization was subscriptions, because this is what we were used to when we read New York Times, when you were reading Wall Street Journal, and we thought that it was purely just going to come on screen and it would still be subscription model. The fact that we were able to pivot to advertising, and there were jobs and industries formed around digital advertising, which wasn't possible to the extent that it was in the computer in an analog version, unlocked a different type of business model, unlocked completely different companies, right? And so now that model has been exhausted to a degree, folks are buying impressions, folks are buying clicks, you don't know what numbers to trust or not. There's room for a different type of monetization model. And I think that where crypto is heading is this community ownership of a platform. You want to be rewarded for believing in someone early. And I think this actually touches on, what are the new ways of funding that we're going to see. I do think, putting a stake behind a community or a digital corner of the internet that you really believe in, and that just gets valuable over time, it's something you want to reward your early users for. You want them to have ownership in and to follow you ardently. And I know that one common critique that a lot of these community-focused brands like Glossier have had is that over time they lost that initial core community and they didn't keep them engaged. They didn't reward them early on, or they didn't really have ownership in it, and then they just moved on to the next thing. And then they fall into the same problems that Revlon or Estee Lauder have, right? As opposed to this cool community-focused type of brand. So I do think that crypto will enable folks to be more active participants in the platforms that they follow, instead of just these passive observers that feel like they have no stake in it.
Can I ask all of you, has anyone here tokenized yourselves?
Yes, I did.
Oh, really? Like where, how?
I just raised an ISA. I believe I'm the first ever person to raise an ISA on Ethereum. And I know there's a lot of exceptional people like James Gallagher, who's a really ambitious young person who did publicly trade himself. And I was always talking to him and saying, why do you not use crypto? It's such an easy stack to do. And he had the meaning and the software engineering capacity to do so. And he didn't care about the crypto value prop, which is secondary markets or leveraging decentralized finance. And so, yeah, I just did last week and it went really well. I raised $20,000 as a future founder. And I think, it's a VC panel. I'm not a VC and I am pre-startup, I think. And so before being a founder, giving up income is way easier than giving up equity in my future ventures. So I thought that was the right choice. And
how did you design it and what did you use to build it? And
so
what were the terms?
Ethereum, so I'm a Ethereum like rationalist, maximalist. I actually think, like breaking news, A16Z just raised $500+ million for their second crypto fund this morning. And I believe this will be exclusively on the application layer, particularly either Ethereum or the platform with the best data and metrics on. But for now, it's Ethereum, I believe. And so, yeah, it's a ERC20. It's super simple. It was a Google form. I fixed the price and yeah, I got 30 participants, average of $800, and I am willing to let them vote on my life, but it's non-binding, and just to get great feedback. And now I have 30 people incentivized to help me later in life as a founder. And most of my VC connections actually decided not to invest because the returns are capped at 5x, which is not attractive. But it was a great way to to signal that. Actually,
so Alex, what was your pitch? What was your pre-product market fit pitch?
So I think I just leveraged my following that I made the past year. I've done a few projects in crypto and in the decentralized finance space. And so my pitch was, it's I think it's half philanthropy, half support of being early on someone that's kind of young. I think this primitive should really apply to under 23 programs, which is kind of like decentralizing the Till Fellowship to outsiders, like maybe like Pioneer.app, which is like a great always on hackathon. This would be great to, like, I would invest in the top 10 Pioneer winners every month. And so, yeah, I don't know, it's like, I'm super ambitious. And if you're early on in my life, I will be super grateful. You might get great opportunities. And it's a kind of badge of honor that you supported me. And so I think I'm the first one, but dozens of people are planning to do so in the next few weeks. And so this
it's amazing to me that with Ethereum, as an example, any person can just do this on their own, right? So you don't need a website or a platform or a company in order to instantiate a personal ISA. You just need to be able to write a smart contract, which is totally wild.
You might still want a lawyer. You might
probably.
I was about to say that.
I've had this question hundreds of times. I don't think the SEC cares about me. Like, no, I don't believe, like, it's only $20,000. I had some disclaimer. There's some utility to my token because you can utilize my time. You can spend my tokens in other ways. So I have like at least 10 counter agreements for the fact that it has some elements of security, but pairing a new model forgives me to do any legal contracts. But I'm happy to, retroactively wrap my token in some legal frameworks, but not for now. And I didn't want to burden myself. And I know that Stripe, Airbnb, and all the biggest companies broke a lot of laws in the past decade to rise up. So I do not, I'm not really fearful about legal repercussions for now.
This is not legal advice. This is not legal advice. Really quickly, I just want to comment one quick thing, and then would be very happy for you to, bring it back full circle. I just wanted to clarify that, for community ownership, it doesn't have to look like, a new protocol. It doesn't have to look like, an alternative type of chain. It could simply be on like a front end user facing representative of a share that you have, and then it's just denominated maybe like backed by Bitcoin and able to be sent across countries, and that way you don't have to face the legal overhead that usually comes with having it denominated in people's own currencies, and they can easily convert it. So there's different ways to go about giving people, like building in this Robinhood layer or Cash App fractionalized share layer to communities that you believe in. Take it away, Jill.
Yeah, no, I mean, I was just going to say, we kicked off the conversation by talking about, has software eaten every single vertical? And while one might have said that, yes, software has eaten personal finance, I think that what Alex and Suna were just talking about is a great demonstration of, like, sure, software ate personal finance with Mint and Robinhood and Wealthfront and all of these things, but it didn't quite eat it in the way that Alex would have you have. And so I think that, there's no end to sort of the human imagination of what we can do with all of this. And I think for that reason, we can't be dismissive of any given vertical. And so that's a big part of what keeps me excited.
Yeah, and I think it's like the thing, a lot of folks on this conference are interested in crypto, and the reason that we're so interested in crypto is because it's possible for a person to go and do that. Like, you can just write some code and build a thing that is like live and out there, and that feels amazing. And some of these things are scary and weird, and I think they're going to break in bad ways and have the potential to hurt people, and that's why there's, this is finance and money. At the same time, it feels to me like there is a tidal wave of creativity at the individual person level that is happening in the crypto space, particularly around Ethereum, but more broadly, that is just like so encouraging.
Absolutely.
I love hearing all the stories about it.
And there are forces on the periphery that we haven't even accounted for and are going to be combined in ways that we don't even know yet. So even if you take into consideration something like Uber or ride sharing services, that wasn't possible without GPS or something like Google Maps. But the folks who had done that mobile version weren't thinking, oh, this will be used for a ride sharing app called Uber, and they will use this GPS and the advent of the internet and the advent of smartphone use. But all these pieces put together gave way for ride sharing service to become possible. And so something to consider is, what could, in and of itself, a crypto is valuable to us, but what building block could it be, a piece of, right? What's like the bigger picture? And then there are other trends like AI or AR to be looking to guess where that dart may land.
I want to kind of bring it back, and I realize we only have a few minutes left, and I'll leave Alex to kind of wrap things up. But I think on my point is that bringing it back to the investment side of things, when you look at SARS that hit in 2003, mainly in China, very big companies have resulted out of that. So Youku and Taobao, for example, all started by Alibaba. And so it's really in the midst of crisis where big companies have resulted, right? So again, we briefly mentioned the GFC, and a lot of the big companies like Uber, Airbnb, and whatever has all resulted. So I think, come back to investment point of view, this is really prime time for VCs now and angel investors like myself to kind of look at the market, see where the paradigm shifts are happening, and looking to invest. So this is prime time. Excited.
Awesome. Nice ending, Gwendolyn. So thank you so much, Jean, Suna, Gwendolyn, and Nick for coming. That was really insightful, and that was unexpected ending as well.
Sure it was. Sure it was, Alex. You're still open for business on the ISA, right? Just put the link in the chat.
I had to refuse money because I wanted to cap myself to get great ROI to my shareholders. So people now just
Alex was oversubscribed, is what he's saying.
Yes. Because I didn't want it to raise too much, actually, especially it was during the bear market. So now I'm already up just by fluctuations. Anyway, cool. So next up.
Your pitch is very good, by the way. Now all of us want to go in because it's oversubscribed.
Thank you. Yeah, well, maybe when I do a company, would love to have any of you on my cap table. Anyway, so next up, we have someone that I really resonate with as I'm myself working in the crypto space. Let's welcome Brian Behlendorf, Executive Director of the Hyperledger project as part of the Linux Foundation. Thank you so much to the panelists. And I think Brian.
Thank you. Take care.
You should be on.
Bye, Brian.
Yes, I'm here. Can you hear me? Can you hear me? Hello?
Yes. Awesome.
And can you see me?
Yes, we can.
Excellent. Great. Well, thank you so much, Alex. That was a really fun panel to listen in on. And thank you to Sebastian as well for the invitation to speak to all of you. I thought today I would try to talk about the impact that, well, not only the impact, but the role for open source software and blockchain technology can play in the fight against COVID and adapting to this new reality. So Alex and Sebastian, I presume I just go forward and talk, and then we kind of open it up for Q&A.
Sure. Yeah. That format totally works. Go on.
Okay, great. So, and welcome to San Francisco. I thought I would just kind of have a more interesting background than my normal kind of work life. So let me just try to set the stage a little bit, which I know a lot of this conference has been about kind of talking about this new reality. But to set the stage just a bit, even walking into this, even before a lot of this exploded, we'd been dealing with a crisis of trust in society. There's a marketing firm called Edelman, who for the last 25 years have been running something called the Edelman Trust Barometer, which is a survey to try to look at, who are all of the different, how much do consumers and businesses trust institutions, trust professions like lawyers and doctors, trust brands, like Coca-Cola and Apple, right? And just trust that society will be there for them. And that barometer had been tracking to very much abysmal lows for those last 25 years. That basically, as a society, we're not sure how to believe what we're told. We're not sure who to turn to when things seem uncertain or bleak. And even in brands, that trust has been affected, right? Even in such stalwart kind of companies like Apple and Google, there's been that gap in trust. And that's made it hard to figure out, how do we listen to our political leaders when they say certain things? We've certainly seen in the United States a much greater reliance upon mayors and upon state politicians to show leadership on when to shut down and how things will be reopened, that sort of thing. And so we're seeing a lot of society kind of bifurcate and try to look for kind of local sources of leadership, right? We're also seeing a lot of concern about, and even again before COVID, we were seeing a lot of mistrust of the kind of centralization that was happening in the tech sector. Centralization to kind of the big cloud providers, centralization, new forms of centralization, such as the rise of Uber, for example. Certainly a lot of that drive to centralization and drive to kind of big infrastructure was something that venture capital really loved. Everyone wanted to be the Uber of this category or that category. But I think a lot of the news and a lot of the concern publicly had been about how that concentrates power and concentrates wealth and concentrates a lot of the engines of a healthy economy, right? Healthy economies are made up of lots and lots of entities that compete, but also work together under common kind of rules, right? And so into this context, adding this tragedy like COVID-19 only kind of amplifies these further. And it might have been okay to deal with these when times were flush, when people were kind of making good money, when there were a lot of free services being offered. But there was a disturbing report some of you might have seen yesterday where even Google said, look, their ad revenue, which drives so many of the free services available online, has taken a big hit in March. No surprise, right? A lot of that is based on consumer spending, on retail, on travel, on the kinds of sectors that are going to be worst hit. So even the tech sector is not going to be, immune, bad pun, to some of these hits, right? And it opens questions like, some of the things we take for granted being free, like Google Docs, which we all depend upon perhaps more than we should. Will that continue to be available for free? And so open source software has always tended to kind of flourish in these difficult times. I mean, this is perhaps my third kind of recession, or fourth-ish. Certainly 2001 was a moment when a lot of the flush times of the first kind of dot-com boom settled out, and while you had a lot of companies consolidate and collapse and a lot of the investment kind of pull back, you did see a lot of growth towards open source software happening at that time. That's when certain tools, the use of Apache obviously was well established before then. Linux was starting to be a phenomenon in the enterprise before then. But early 2000s was really when open source software as an underlying paradigm, especially critical to businesses, took hold, right? Where in 99, 2000, it was kind of freaky, the fact that there were big companies using Linux and Apache. But shortly thereafter, it became the bedrock of how Google built its infrastructure, of how Facebook built its infrastructure, but also at a very retail level about how so many companies revamped how their IT infrastructures worked and their approach to technologies, to developing technology. And I should have actually started with a bit of an intro. For those of you who don't know, Brian Behlendorf, I'm Executive Director of Hyperledger. We are a non-profit consortium focused on the development of enterprise blockchain technologies, really at the heart of all sorts of use cases around supply chain traceability, trade finance, digital identity. I'll get into many of those in a second. But the Linux Foundation, which got its start in kind of that stew of kind of the 2000 crisis, the 2001, 2002 financial crisis. It started as an organization to try to coordinate the enterprise interest in open source software, particularly the Linux kernel, where there was a real need to find a route for the Linux operating system to grow and become a force in industry without it becoming trapped by a single vendor, right? Or the exclusive domain of, be it Red Hat, be it IBM that was growing at that time, be it Canonical or others. All of those companies needed a way to grow their businesses, especially coming out of that crisis, but do it in a way that didn't confer all those benefits to a single winner, right? To a winner-take-all phenomenon. If you did that, you would end up not actually raising the floor on the capabilities of the tech sector the way that Linux as an operating system really could. And obviously, there were other projects in the open source world that started to grow at the time. I mentioned Apache. I was a co-founder on that. That grew as a phenomenon, as an economic, commercial phenomenon, even a bit before that crisis, but just took off from that point. And not just around web server technology, but also around big data, around increasingly these days machine learning, but also into like Office suite tools and that sort of thing. And the phenomenon coming out of that crisis, and even the 2007, 2008 crisis around, really was about the industry, I think, recognizing that critical foundational role that open source software can play, and really a capacity building role. It wasn't just about here's good software that lots of people can use and build on top of, like it's a black box, but about how open source software at its heart, with the transparency in the code, the visibility to how it's being built, the ability to modify it and adapt it to different needs. I don't think you would have had a Google or a Facebook or an Uber or any of these others without open source software emerging. And lots of studies have been done about this. I think the number is roughly on the average enterprise software product, on something on the order of 85% of that code is pre-existing open source code that has been adapted, integrated, built, with the remaining 15% being about competitive differentiation for that product, right? On consumer products and hardware, it obviously varies. Even Apple iPhones, though, have a ton of open source software inside them. Android, as everyone knows, has an open source underpinning. None of this is to say that open source is the only way to build software. If anything, it depends, I think, on companies adding value on top of it, on the periphery of it, to get this economic engine going where companies work together on the common bits and then are able to optimize their R&D spending on the proprietary bits, right? Just enough in the common to make it actually work as an ecosystem, but then spending perhaps even more on the differentiated functionality at a higher level of the stack, right? And that's now a pretty well-honed model for how to build not just open source software, but ecosystems of mutual support that create these engines, right? And that's been the Linux Foundation's MO since its inception, certainly around the Linux kernel and the Linux operating system. And then starting about 8 years ago, expanding into adjacent technology domains in cloud computing, software-defined networking, blockchain technology like with Hyperledger, but also into different verticals. Automotive-grade Linux is now at the heart of the vehicle software sitting inside vehicles from Toyota and Daimler, and it's actually a collaboration with hundreds of other tier 1 and 2 suppliers. And we've recently launched other vertical initiatives in the film industry, in artificial intelligence, and all these other kind of domains that are realizing where the companies in those domains are realizing where they have common cause, where there's common technology challenges, we might as well work together, again, to optimize spend. And it's almost like the same drive to adopt open standards, but now elevated to talk about common code that might implement those standards, but gets everybody further faster, right? So back to COVID-19. In this world of both collapsing trust, but also a world that is increasingly comfortable with the idea of open source software, it was actually no surprise to see this very early on in the crisis in Italy, a group of people get together and say, there's a critical need for PPEs to fight this crisis, for protective gear. There's some of those that can actually be made by 3D printers. Let's work together on kind of the headband protection and other gear. And most interestingly, in a certain kind of valve for ventilators that cost a whole lot of money, where the design of this was pretty simple. It was a way to turn one ventilator into multiple ventilators, so it could be shared amongst a group of people in a clinic, in an emergency room, in an ICU. And it was something that would cost hundreds of dollars and be backlogged if you tried to buy it, but could be easily printed on a 3D printer. That group, without asking for anyone's permission, without needing, kind of a top-down kind of approval process or RFP, they went design this ventilator part and shared those designs online. and that those designs were iterated upon. They were improved. There's actually a GitHub repository hosting that as well. And to see that kind of ground level innovation come up, it was great. And it was something that where people didn't care about credit, they didn't care about licensing the IP, they didn't care about trying to control it. They said this is critical to get out there and shared. Shortly thereafter, we started to see lots of people building open source projects and open source APIs around trying to organize access to the information about emerging caseloads, right? Because every country, every health authority in different states in the United States and elsewhere that was keeping track of where there were cases, where there were deaths, started to have different ways of sharing that data, and it got super complicated. And people started to build APIs to be able to make querying those data sets faster, to be able to tie those data sets together. And now if you go and you search open source COVID-19 APIs, you'll get lists of dozens of these that have proven instrumental in trying to wire them up into overlay dashboards that you'd see, in some of the on CNN and on BBC and on kind of news websites. Those the people building those charts, those researchers draw upon those underlying data sources, and a lot of that is using open source software to coordinate that. And then even in some very kind of specific areas too, like there's an open source project called Chime, the COVID-19 hospital impact model for epidemics, something that UPenn put together, which is a way for hospital administrators and health authorities to try to anticipate, given all this data, what is the impact going to be on capacities at hospitals, given beds, given ventilators, given ICU units? How do we anticipate for that? And it allowed for just a real fan out of trying to understand the pandemic and understand where it was heading. And a lot of this just brings to the front kind of the things that I think open source is really good at in these fights. It's good at resiliency, right? Having to worry about whether central actors are going to deliver on their promises is something none of us want to be in a position to when people are dying around us. And open source software and open source creative culture and kind of the maker culture says we have to be self-sufficient. We have to be able to build the things that our lives depend upon. The cloud is nice, but the cloud isn't going to fix my problems if they don't have an API for it already, right? I've got to take hold of this and do it. You've seen other people start to say, maybe this is the basis for figuring out how to do certain public-private partnerships. The Chime health model is one example of that. It's been interesting to see some of the folks responding to security holes in Zoom by talking about some of the open source alternatives to Zoom out there, such as something called Jitsi, something called Big Blue Button. These are longstanding efforts to do virtual hosting that are starting to see a tremendous amount, not only of developer interest, but people also concerned about privacy and security issues that have been plaguing Zoom and the other teleconferencing systems, and companies starting to say, well, maybe there's a support and services model around these open source video conferencing tools that might be worth exploring. I think it's also going to be a path out from some of the more advanced kinds of use cases people are thinking about for this fight. So one example that I mean is, you perhaps have heard of the Google and Apple exposure notification API, right? This system that where if you have a phone that supports Bluetooth Low Energy, if you're running an app that's authorized by Apple or Google to talk to these APIs, the operating system will keep track of, basically transmit beacons, numbers that leave kind of a digital trail of where you've been. You'll also record the ones that have been heard around you, and that can be used in a contact tracing paradigm to try to notify people who might have been exposed to somebody who's recently tested positive for COVID-19. There's huge concerns, rightfully so, about privacy and security in such a system. I think Apple and Google have designed a mechanism that actually avoids a central collection of all that data. The problem is the apps that talk to those APIs, they themselves might be at risk, right? So there could be a need for an open source app that talks and sits on top of those APIs, where the software behind that app is something that is standardized across health authorities, where there's scrutiny to make sure that app isn't revealing data it shouldn't be revealing without the end user consent for the sharing of that data. That's the key thing, is where does that end user consent come from? It's a way also for the public to address their concerns about the centralization and the privacy risks of having that data available just to Google and Apple. Having an open source app running on top of that is a way of trying to help keep that whole system honest. So there's a bunch of conversations along those lines that between technology companies, private health authorities, and others, where open source might actually be a path to addressing these very real privacy concerns, but also trust concerns that they and the public would have about how these systems would operate. Shifting gears just to talk about blockchain technology, and in particular enterprise blockchain technology. And I've spent most of the last 4 years kind of immersed, not so much in the crypto side of the blockchain space, but in the enterprise deployments of blockchain. Not that they are opposed to each other or two wholly separate worlds. In fact, there's been a lot recently to bring the world of Ethereum technologies, smart contract technologies, and kind of where Ethereum's going with its 2.0 platform into the world of enterprise blockchain technology, and try to represent this more as a spectrum from permissioned and perhaps private to fully public. But the use cases that have been pioneered over on this side, as I mentioned, have been very much around supply chain traceability, around trade finance and other types of financial applications that map to how the systems of the world work, only trying to make them not only more efficient, but more transparent, more auditable, more easily auditable, I should say. And then also have really emerged in this kind of digital identity space as a way to try to move us away from kind of a central server view of how digital identity works, you know, that your identity is tied to your Facebook account or your Google account or your Apple ID, and instead to something that's more about kind of certificates and badges and things that you hold in a wallet, very much like you might hold your cryptocurrencies in a wallet, but then can present the way that you're used to presenting in the real world, you know, your driver's license, your passport, your diploma, but other identity documents as well. And so already before COVID-19, lots of progress has been made along and deployment into production for these kinds of use cases that have now come to fore. So as an example, there was a launch of something called the IBM Rapid Supplier Connect, which is a network they've stood up, but involves a lot of the companies in the medical supply chain, providing PPEs, providing test results, providing all sorts of supply chain critical needs in the fight against COVID-19. And there the point is to provide in a number of, not only in terms of automation of a lot of the points of the supply chain, but really the validation of who the companies are who are providing these services. There's been a lot of fraud in the procurement of PPEs and face masks and that sort of thing. A lot of parties having to do business who've never met each other. There was an article today about the state of New York sending $69 million to somebody in California to buy a bunch of ventilators, and without any kind of clear kind of background or clearance and no delivery of those ventilators yet. And imagine that now happening across international borders, that sort of thing. So international trade depends very much upon knowing the parties you're doing business with and having an agreed upon set of rules to work. And so the deployment of this and other networks out there to address these needs, I think, is an incredibly powerful kind of way to apply it. There's also been some folks looking at using this new approach to digital identity to potentially address the interest that's out there in immunity credentials. If as part of reopening, right, we're going to require things like proving you've had, when the vaccines are available, access to the vaccines, perhaps even a history of having tested positive and then negative, or have an antibodies test, in order to do things like get on a plane or go back to work in certain health critical kind of fields. Having a passport, a way to prove that, is something that people are arguing is pretty important. I'm not going to argue whether it's important or not. What I will argue is that if it's built the old bad way as a centralized directory, you can basically say goodbye to privacy, not only for who has tested positive or not, which might be sensitive in many ways, but where people are presenting those credentials, right? In the same way that if you present, you log into, you connect to a site and you're logged into Facebook, and Facebook has a tag, a small image on that, or a Facebook login on that website, Facebook already knows that you're visiting that website, right? That kind of pervasive surveillance is something we should try to mitigate, if not even remove. This approach to credentials is privacy preserving, it's consent oriented, and it avoids that kind of super cookie problem where the issuers of credentials know everywhere that you go. So there's an effort organized now called the COVID Credentials Initiative, where it's the builders in this space kind of working together to figure out how do we build this in the right way, in a standardized way, work with the health authorities and the governance models around the issuance of these certificates, but also make sure that the plumbing is there. And it does seem like these underlying technologies that have come out of this space, or something called verifiable credentials and DIDs, distributed identifiers, have real play in that space. And it seems that most of the deployments of the self-sovereign ID, user-centric ID, use a blockchain as at the very least, as a distributed key management system, but potentially as well as a place to record hashes and basically timestamps of the documents that have been issued. Again, to allow for increased integrity checks of these documents, and that's really powerful. I mean, if we can get a system out there in time that protects people's privacy while still allowing them to go back to work, and allowing us to get, think of this, perhaps put the immunity credentials and the antibodies test stuff aside. Just think about, there'll be a period of time of probably a year before the vaccine is pervasively available to everybody who needs it to get to herd immunity. We'll want to be able to do things like reopen schools. Schools today already require immunizations, in most schools do at least, for many of the common kind of diseases. How do we get that to be efficient and quick and not bureaucratic and not require a lot of presenting of pieces of paper with stamps on them, or doctor signatures or other things that are hard to verify and hard to do at a distance, which is still going to be essential, I think, to how we operate until the vaccine is pervasive. How might we make that work? And on that line, there's other people looking at can we use these similar digital credentials, backed with blockchain technology, to not just help individuals go back to work, but help businesses get restarted as well. Over the last few years, last year, one of the biggest deployments of some of the stuff we built at Hyperledger around digital identity has been by the government of British Columbia for an initiative called the Org Book, which sounds a little weird, but it's basically the establishment of self-sovereign ID for the registration of businesses in the British Columbian government, so that you from a wallet, you can present these credentials when you are applying for a license to serve alcohol because you're a restaurant, right? Which might be a different agency than when you are trying to pay your business registration fees, which or trying to go and get a permit for construction, right? But being able to present these permits across these different agencies and have the individual business and the business owner be the point of integration and the pivot point between all these different actions is a much different and much better, frankly, way of wiring together digital infrastructure between businesses and government than anything that centralizes it on a single agency or even a single state government, right? Because often these agencies are at different tiers, state, local, or even federal. So they are not only expanding that project, but doing looking at implementing a system called Safe Entry BC in a prototype around all the types of operations that you're going to need to certify businesses that they can re-enter and reopen. Whether that's making sure if you're a restaurant that you're spacing people appropriately distant, or if you are want to have payroll issues for staff that you furloughed, being able to move all of those kinds of engagements to be digital, to be something where you don't have to wait 12 hours for an overburdened support staff at a state agency to answer a simple question, or to get a process signed off, where you don't need, you know, notaries and signatures and stamps and other kind of face-to-face ways that we prove trust and prove integrity when we engage in these kinds of transactions between business and government. If that all can be optimized, digitalized, while still guaranteeing trust and still guaranteeing confidence in that the system works, that would do a lot to reopen government more and more quickly. Finally, there's an effort called mepasa.org, which is focused on something a bit more generalized, saying there's all these data sources out there about the spread of COVID, all these data sources around supply chain traceability issues and verification issues. We're never going to integrate these all into one backbone or one network, but can we find a way to at least collect the metadata about these information sources, the normalization required between them, in a way to make that provable and trustworthy, that doesn't centralize that on a single big website, on something like Google running a big clearinghouse for that, or Amazon running a big clearinghouse. And so mepasa.org is a collaboration between a bunch of different companies in the blockchain space, as well as small and large, as well as the WHO and a number of public health authorities, to try to sort these issues out. A lot of education going on, a lot of learning curves to be climbed. But it is all based on open source software, and it is all based on blockchain technology. And there's a lot of folks really optimistic about this solving some deep problems. So that's a very quick tour. I know I mentioned a lot of different projects. All of them are very easily Googleable. There are different efforts at different stages, but it's certainly not a good time for any of us, kind of emotionally, physically, whatever. But for these technologies, for these movements, this is a time for them to really stand and deliver, because there's some real ways to have an outsized impact. So with that, I'm going to pivot over to looking at questions in the Q&A. And if Alex or Sebastian or anybody wanted to jump in with some questions, I'd be happy to take them.
Yes, sure. Thank you so much, Brian, for this. I guess, so we have a few questions. I'll start with mine so that I can let people ask their questions. So as you said at the end of your talk, there's a lot of optimism towards blockchain. I am definitely one of the optimists. My career has been revolving around Ethereum mainnet. And actually, I wanted to touch on your point about like private blockchain, public blockchains, which I mean, like at most for you, permission blockchains and the transition, because I really believe there will be a transition. And actually EY and Consensus just announced a baseline protocol, which would be great for enterprises and businesses to switch from permission blockchains to the Ethereum mainnet, maybe with privacy related, or maybe it will be scalable because, you know, transactions are still expensive. What are your views on this? I see maybe you're against it. I would love to get your opinion because I'm not as well versed into permission and enterprise and Hyperledger solutions than you are. So I would love to get your input there.
Sure. So so there's some very real needs that drive the demand for permission blockchain systems. And a permission blockchain system, by the way, doesn't have to mean private. These are kind of two separate things. But let's talk about, for example, the domain name system, right? Putting aside blockchain just for a second, the domain name system is a cooperative network, lightly coordinated by ICANN, right? That kind of sets the terms for domain name registrars. And anybody can start a domain name registrar. They enter into a contract with ICANN, and then you can start registering domain names. And you have to agree to a set of legal principles and technical principles in order to be a part of that system, right? And that system works with this very lightweight kind of governance that ICANN establishes, but it guarantees, for example, that your domain name that you register, it can move from one registrar to another. And also, if you have a trademark and someone else registers a trademark in your name, there's an adjudication process for sorting that out, right? So those processes, I know there's a lot of public blockchain proposed alternatives for how the domain name system works, but none of them can frankly deal with this need for adjudication and human governance that you have in the domain name system. Permission blockchains are a bit more organized around that. They're a bit more, and yes, you could model that with a lot of sophisticated programming on top of an open, kind of the public blockchains. But the permission blockchains allow you to say, here's the network of known entities. You don't care so much about anonymous participants. You don't really care so much about, you certainly don't care about free markets for the floating cost of writing transactions to the network, that sort of thing. You actually are happy fixing the costs of at least the baseline for publishing data into this network. And so what you're trying to do is get a higher order thing accomplished than trade tokens, right? And so that kind of thing, that model of kind of a mix of algorithmic governance and human governance is what blockchains are really good at implementing. It's conceivable you could re-implement the today's domain name system as a permission blockchain and actually have all the governance niceness you'd like and a lot more efficiency in the course of doing that, a lot more auditability in the course of doing that. And whether it's the need to follow GDPR rules, it's always a good idea not to publish personally identifiable information to a blockchain anyways, whether private or public. But at least on a permission blockchain, if something was written incorrectly, you have a very clear human governance model around pulling that back and being able to do a hard fork to purge that data as a last resort. It'd be much harder to do that on a public blockchain network. And then finally, there's a real world of certain data residency requirements and really just a default bias towards conservatism when dealing with things like medical records, right? That still suggests that even with great cryptography and great smart contract systems, there's still a risk that you don't have when you have a more controlled environment. There are some people who've likened it to training wheels, that people will start on a permission blockchain and then move to the public blockchain as they get more confidence. I think there's some use cases for which that might be true. I think there's also people who've compared it to VPNs. But that argument is actually not an argument against permission blockchains, because not only do we have VPNs these days, no one reasonably argues against removing them, right? Because every additional layer of security can create an obstacle, but it also, there's a principle that says good security is implemented in layers, right? It's a belt and suspenders approach to things. I do think using public blockchains as a way to do a kind of coordinate communication between permission blockchains is interesting. At the very least, fence posting hashes at the tip of the tree of private blockchains, the public ones make sense. But there's a lot of people for whom the speculative nature of the public blockchains as envisioned today is an issue. And I think when we see central bank digital currency start to emerge, most of which will not use public blockchains as the way of transmitting or storing value, I think you'll see a lot of the cross blockchain needs for moving money between different networks met by those networks. So I don't know. I think this jury is still out. But look, I also believe there's a big role for permission blockchains to play as the roles emerge. I actually just did a talk 2 nights ago with Joe Lubin to our community. Consensus is a major part of Hyperledger. We think it is a spectrum, but there will always be needs for both ends of that spectrum.
Awesome. I think Sebastian has a question.
Hey, Brian. Hey, good to see you. So bringing it back to the context of COVID-19, and I appreciate all your thoughts and insights here, but bringing it back to the context of COVID, I personally think that blockchain is in the sort of progression of maturity of technologies, across the board, whether it's public or permissioned or private or whatever, that blockchain is actually quite immature as a technology. And the use cases are also at a very early stage, even though we've seen like tremendous growth in DeFi and in use of permission blockchains. How do you think that this particular crisis may accelerate some of these applications on either side, or like permissioned and non-permissioned, or somewhere in the middle with some of these hybrid models? How do you think that that this particular crisis might accelerate some actual use cases and like actual things being implemented?
Yeah, so I certainly think if you think of this like a stack, that where the lower level of the stack is the plumbing, and the higher level of the stack are the end users, the consumers in particular, that we have a pretty good story on the lower end of the stack. You see networks today, permission blockchain networks like the Food Trust Network, which was largely around food safety. This Trust Your Supplier network, as I mentioned. A lot of other deployments, whether a Fabric or even permissioned versions of Ethereum, Ethereum, like the IIN, which is a quorum-based network that JP Morgan runs. These are seeing real traction, real performance, real use cases and needs. That I think is ready for a tremendous amount of scale, and I think you'll see organizations that might have been hesitant to jump onto that because they could still operate in the old way actually have to move on to those because that's where the activity is going to be, especially if these are critical to the path of sorting out solid sources of PPEs or tracking supplies of vaccine as they get out there. And they're, in fact, in the pharmaceutical supply chain space, there's a number of projects that will launch soon that are directly speak to the efficacy of this and probably the urgency to it as well. Where I'm more concerned is on the end user experience. And for many of the kind of enterprise deployments of this technology, end users don't even really know. Their product shows up at their door that they ordered online, right? But around digital identity in particular, I think this idea of identity wallets, whether that comes to you from your current cryptocurrency wallet or whether it's something that Apple Pay and Google Wallet and these other kind of native to the platform types of wallet systems embody, or it's something from a startup, we're going to start to see people understand, okay, this is what an identity credentials wallet is about. And this is why having one is a good idea. This is why I could trust it. That's where I think there'll be a lot more movement than we would have perhaps otherwise seen. And those technologies, again, the plumbing is ready, in my opinion, and the way that credentials get issued and that sort of thing. And the industry types are working together on going further up that stack. The last mile, that end user experience is something that I still don't have a lot of clarity around. But I'm hoping, that we get that soon, at least in the use case of presenting, vaccine records and verifiable credentials.
Awesome, thanks. Yeah, actually, we have a related question in the Q&A about how blockchain technology. So the question reads: blockchain technology today, is it capable of scaling in a decentralized and open way to the level needed to support the various initiatives you've mentioned, for example, contact tracing?
Yeah. Well, the public and private blockchains have very different stories around scalability. I've followed the Ethereum 2.0 efforts pretty closely, and those will provide a lot more scalability than you see today on the Ethereum network. On permission blockchains, you do see some of the production networks today supporting hundreds of transactions per second, and theoretically into the thousands of transactions per second. By way of reference, right, the Visa network on an ordinary day sees 20,000 transactions per second. Scalability, though, is a little bit of a red herring. If you design your application right and you design the information system right, you can fit everything you need to, I think, within whatever window you're given. You're going to have to make trade-offs in other ways, but you don't need to put every person who's being tracked by contact tracing as a data item on a blockchain. You don't need to, for contact tracing in particular, I actually would hesitate to say that there's a serious blockchain role to play. I do believe there's a serious open source software role to play in bridging that gap between what Google and Apple have presented with their APIs and the end user experience. There's also a need, by the way, for open source software on the public health authority side to track these, to ingest kind of these reports and understand, okay, here are the people who are self-quarantining, here are the people who've now tested, to effectively manage that as a public health authority will require a whole sector of software that really has been underinvested in and underfunded. And a faster way to get there and lift all boats might be through an open source coordinated approach on that. There are conversations happening along those lines now. But you use a blockchain when you want to prove something, when you want to verify something, when you need, so for supply chains, that is much more important. The pharma supply chain projects that I see coming down the pipe are definitely anticipating they've got to fit all of this into a certain window of how many transactions per second or per day, that sort of thing. It's less sensitive to the need to have to confirm a transaction immediately or within 45 minutes or whatever that you might when you're trading cryptocurrencies. And it's possible to squeeze a whole pallet's worth of IDs into one hashed ID and just register that right as a single kind of event on a blockchain. Yeah, these are design time constraints that everyone's going going to have to work out. There's no brick wall that I see, though. There's no fundamental kind of barrier. This is about helping, about architects and engineers working together to figure out how to work within constraints. But none of those constraints that I've seen suggest that any of the use cases are impossible.
Awesome. And yeah, actually, touching on your point about private permission versus public blockchains, it's both worlds can actually cohabit. Actually, central bank digital currencies like China, correct me if I'm wrong, but I think the Chinese central bank issued like a digital currency on a permission private blockchains, and they did say that for international transfers, they would need a permissionless public ledger. And so this is why I think outside of their realm, there's Ethereum as a settlement layer. I think this is what I saw last week.
Okay, I hadn't seen that. I mean, it's not even clear whether the Chinese central bank currency, digital currency, uses or even needs a blockchain in the first place.
Yeah.
What a Chinese central bank digital currency is basically China doing what, to this point, they've been happy to let Alibaba and Baidu do, which is have, WePay and Alipay, Tencent and Alibaba do, which is WePay and Alipay as built-in parts of their app. I think to some degree they wanted a public option as an alternative to that, which is, individual accounts at essentially a state bank. And, you don't really need a blockchain to implement that. You do need a blockchain when you're doing movements between banks. And in fact, in the United States, we have a Federal Reserve that is not one bank institution, that's centralized the way it is in China. It's actually 12, is it, or 13 or 15 regional Federal Reserves who all have to collectively agree when they want to raise the rate or lower the rate. But they all have different assets and they all wire money to each other. And to the top tier banks as well that they backstop. So using a distributed ledger as a real-time gross settlement system between banks is a very different beast than a consumer level kind of thing. And all of the research going in now into RTGSs between banks as a path to a digital dollar or a digital euro or digital krona in Sweden, all of that has been with permission blockchain systems that I'm aware of. There's a strong hesitancy towards proof of work, amongst those parties. Hesitancy towards even proof of authority type models. Proof of what's the other one I'm trying to think of?
Proof of stake.
Proof of stake. Sorry, I was thinking proof of scale. I knew that was wrong. Proof of stake. I just that's such a different model than how the regulators are used to working and the banks are used to working. It's not necessarily my objective to talk them into proof of work, and I'm not even sure it provides strategic value to them at that point. The global picture, the international, what's the unit of trade globally? The role that the dollar has played so far. I don't think there's many people saying that that's going to disappear anytime soon. It's one reason why there is research going into a digital dollar initiative. Giancarlo and David Treat at Accenture, along with research the Federal Reserve has been doing for years, actually, on how to do these kinds of things. I think means that it won't be the first, but it'll certainly be ready in time. But it will be a more multipolar world we're heading into, anyways. So the euro and the yuan will have a big role to play in those. I'm just not sure we'll see, the ETH as a global reserve currency in any reasonable future. Sad to say.
Okay.
For the few ETH that I own, it'd be certainly a great outcome too. But
okay, cool. Thank you very much. Wrapping up now. Thanks a lot, Brian, for coming. Switching gears now a little bit from technology and blockchain to more geopolitical issues. So our next guest speaker today is Axel Kaiser, if I'm pronouncing this right, visiting scholar at the Hoover Institution at Stanford. Axel is the executive director at the Foundation para el Progreso, and we'll talk about government interventionism and economic policy. Axel, thank you for joining us today. I think you're on.
Can you hear me?
Your mic is a bit blurred.
I'll try that.
Oh.
Hear me better?
Oh yeah, now it's great.
Okay, yeah. Okay, that's good.
Awesome.
Okay. So thank you very much for this invitation. to speak about how the political economy of the world, probably of the Western world, will look like in the coming decade or in the near future as well. I've been studying this for some years, some decades even, and what you find usually is that measures that are put in place in times of crisis never go away. And so it's very hard to see an expansion of government that takes place at some point during a crisis, even during war times. And many of the measures that are introduced are kept in place. Now, of course, that's not the case if you take a look at the German economy, the way that it had been run by the Nazis and things like this. It dramatically changed thanks to the influence of Ludwig Erhard and a classical liberal, by the way, and social market economy philosophy. And it was also backed at some point by the occupation groups, by the Americans especially. So that's not what I mean, but I think a good example of this is the Great Depression in the United States. If you take a look at what happened after the crash in 1929, Herbert Hoover, who was the president, he began a huge program of government intervention in the economy. And some people say that he did nothing, but now we know that the real father of the New Deal was Hoover and not Roosevelt, who came after him. And what Roosevelt did was basically to deepen and to further develop these government interventions that that Hoover had put in place, and also introduce new ones, of course. And so many of the institutions created during the Great Depression, probably all of them, with few exceptions, never went away. And all this played a huge role in the creation of the welfare state in the United States, or something closer to a welfare state in the United States over the decades. And they kept expanding and expanding. Fannie Mae, which was at the epicenter of the last financial crisis, because along with Freddie Mac, that was created decades later, they were subsidizing basically, or buying all these mortgages and selling these mortgage-backed securities and financing the housing bubble. And well, Fannie Mae was a creation of New Deal. And so this is an example of, and there are many, many others, of how institutions that are created in order to offer relief at some point, they become permanent because the political cost of getting rid of them is too high. And then you have interest groups, vested interests, of course, that that want to keep these institutions in place and benefit from them even. And so what is happening now in the world, but I will speak more about, mostly about the West, is that unprecedented measures of intervention, both from the fiscal side and also monetary interventions, have been implemented in a very short period of time. And because we have such a dramatic shock on the supply side, it means we are not producing, we are not selling stuff, we're not producing stuff. This is not a problem that has to do with aggregate demand, like economists like to say, but mostly with the incapacity of the economy because of the lockdowns to keep producing. And because of this dynamic we have now, these interventions that government is doing, I believe, are not going to go away. Maybe the scale will be reduced, But just as in the financial crisis in 2008, central banks promised, and they said that the massive monetary stimulus and the low interest rates, almost zero interest rates, in some cases negative interest rates, they were going to be there for a while until the economy recovered, and then they were going to normalize the situation, and QE was going to be reversed and all that. They tried to do that. The Fed tried to do some of that recently, but the markets immediately reacted because I think they're used to the monetary morphine. And so since we are not going to have a recovery, a V-shaped recovery, that's the way they call this very rapid normalization of the economic activity. Since we are not going to have that, I believe the case for maintaining these measures will be even more compelling than it used to be. So it is my opinion that we are entering a whole new phase that we could call the probably the Japanization of the Western economies. Why Japan? Because Japan introduced lots of interventionist measures and monetary stimulus, already for decades, and it's sort of a situation where you have very low growth, you have higher and higher debt, and it looks like they have reached a sort of an equilibrium in Japan, but the economy lacks dynamism. And there is also something that has to do with the homogeneity of the Japanese population that makes it easier probably to go away with very low growth rates and with lack of dynamism in the economy, that I don't think it's viable in the West. But still, these interventions, we have to understand, are huge distortions for the price system. So prices send signals, and these signals are crucial in order to allocate resources to different sectors of the economy. If you manipulate interest rates too much as a central bank, and I'm all in favor of abolishing central banks and going to a free banking system, but the reality is that we do have central banks. But if you manipulate interest rates for too long, what happens is you send the wrong signals, and so people start probably, if they are too low, they don't save enough. They start investing in long-term projects that are very sensitive to low interest rates, and then you have booms of the sort we had in the 2000s with the housing bubble that burst in 2008 after the Fed had to raise rates because inflation was going up. So money is a crucial issue here, and prices and interest rates have to be those that the market dictate, and not those that central planners of central banks think are the appropriate rates for the economy. They have no way of knowing really what the natural rate is, interest rate is, and what it should be. So I'm very worried that these very, very low interest rates that we have had already for over 10 years, and now are going to keep there, being in place, are going to create enormous destruction in terms of the sound development of capital and the savings on the savings side, and creating huge stimulus for people to, if banks start really lending, to spend more than they should spend. And so we will have a problem from that part. And also, you see central banks now are buying everything that moves, basically. So they are picking winners and losers, something that the market should do and not central planners of any sort, and allocating credit. They are buying government bonds. Now the Central Bank of England, they are even financing the government directly. And this is was like a taboo in the among economists, mainstream economists. Like you should never have central bank printing the money to give it directly to the government. If you buy government bonds or debt, you do it in the secondary market, not directly from the government. Well, you see now the central bank in England is doing precisely that, which gives also credit to some very crazy ideas like modern monetary theory that are going, you know, around, and that people like Alexandria Ocasio-Cortez and others have been defending. Like, yeah, we can just print our way out to prosperity, and this is very dangerous. We have tried that in Latin America many times, and it has always ended up in disaster. So I'm very worried, because if you take a look also at the central bank in Europe, the ECB has been a very destructive force in Europe. That's my opinion. Other people think differently, but they are now monetizing debt. They have been doing it for a while, and they have basically said, we are going to print all the money that's necessary and buy everything that we have to buy, government debt or whatever, even corporate bonds and things like this. So when you have such a massive government intervention and you mess with money in that way, I believe that first, it's very hard to put an end to it, because the cost it's too high, and you can have really a disaster if you start selling all these assets that the central banks have purchased. You will have an immediate impact on interest rates and the value of these bonds and stuff they have in their balance sheets. So that's one thing. And then you create a system where people are dependent all the time on this stimulus, a monetary and fiscal stimulus. So the moral hazard of the whole system increases. And this is what happened after 2008. We have even more fragile financial system now, according to many measures. And that's a huge liability for the world economy. And if we do not really correct this problem, which I think we will never do, at some point you can have a fiscal crisis in countries like the United States, because the amount of debt you're accumulating, it's unsustainable. And what makes it possible to accumulate all that debt to a large extent is the unwillingness of central bank, of the Federal Reserve, to buy government debt, and so they have in their balance sheets, they have accumulated trillions of government debt. So this is something that is completely against all rules of sound monetary policy and sound fiscal policy. I'm not saying here nothing should be done in order to help certain businesses and to provide some assistance to solvent businesses that have liquidity problems. You probably can do things in order to help them. But the thing is that here we are going a step further, or many steps further than that. We are really starting to create a monster economy in which the shots are not being called by the markets anymore, but by central planners. And I don't see this ending in a very positive way. I think this is going to probably produce a catastrophe. In the short run, you might feel a relief. Yes, the shock is not as bad as it could be, but in the medium term, in the long run, what you will have is the inability of the economy to grow. This will create huge social problems. You will have mounting debt that will create also political problems. And it will destabilize, in my opinion, the system, the political system even, because you cannot take debt forever, and you cannot print money forever. And even if you have several deflationary forces playing a role right now, you have, of course, a lot of people unemployed, people are saving money, they are not spending. So these are deflationary forces. But I think in the medium and long term, the problem we will face is inflation, and higher numbers of inflation like we have not seen in a long time. This is an unprecedented intervention. The Fed has printed like 6 trillion or something in the last couple of weeks or months, or that's at least what they are planning to do, achieve that stimulus. And this is it's huge if we take into account that since the Fed was created in 1914 to 2008, they had created a base of 800 billion, and now it has multiplied in a decade by, what is it, a factor of 6 or even more. Now it's even more than that. Like it's really crazy when thinks about it. And I don't know how they're going to implement an exit strategy now if they were incapable of doing it in 2008 when the crisis was much less severe in a sense. We did not have this this huge destruction we are seeing now worldwide in terms of the real economy. And so I have to say that I'm very, very pessimistic. I think normality is not going to come back anytime soon. Times before this crisis were also not normal, with this huge liquidity injections and massive government interventions and governments accumulating debt, although some governments had done something in Europe to deleverage a little bit. But in general, we have a broken system. That's what I believe, and it has a lot to do with paper money and central banks, and these ability of politicians to be financed by, or the possibility they do have now to be financed by central banks. Since we don't have a gold standard, we got rid of that in Nixon put an end to the gold standard in 71. So in order to be able to print the money, no, to pay for the Vietnam War, for social expenditures and so on and so forth. So we could go into the details, but I prefer to provide a general picture, and we have to go back to basic economics. And the market is a spontaneous order, and the way that resources are allocated in a market system is by prices that are free and are not intervened by the government. And now we see people like even Paul Krugman suggesting we should fix some prices in the economy. This has all been tried before, and it has always failed. And what we really need to do is to shrink the size of government. We have to think about money in a different way. We have to probably, I don't know if cryptocurrencies will have the stability necessary in order to become real currencies, like generalized use. I hope so, but we have to enter a new discussion in terms of can we go on with a system that's based on paper money? Now it's electronic money, central banking and central planners manipulating interest rates, and now even allocating capital and doing fiscal policy, which was never the role of central banks. That was never intended to be like that. So I would also mention that the ideological battle is going to get more intense, in the sense that people who defend a limited market and who believe in freedom, private property, and a limited government, an open market, and limited government, they are going to be have to be much more persuasive in defending these ideas, and it's very similar to what happened during the New Deal. Suddenly, even if the New Deal started before Keynes published the general theory, but suddenly it was all about government spending. And even now, some economists, many economists actually, probably a majority of them, believe that Second World War solved the problem of the Depression, which is not true. It was not the war, like Robert Hicks has argued in one of his books about Depression and war and Cold War. He has shown that that was never the case, and destruction and mobilizing the labor force so they can go to battle is not a good way to reduce unemployment, and you cannot not really take seriously an argument like that. But the idea that the New Deal was a fantastic program for recovering the economy and or dealing with the problems of the market system, the capitalist system, is very widespread. And this has created a myth, and FDR is seen like as a hero, while he was one of the main reasons why the Depression was so long in the United States. So I believe now there are differences, of course, and I hope there will be no war. And we have also other forces playing a role, like this whole fourth industrial revolution that could create enormous productivity gains, and from there we could save the day with that. But for now, what is very clear is that we are not living in a capitalist, real free capitalist system anymore. It had not been the case for a while. The interest groups, lobbyists, and they were colluding with the politicians everywhere in Brussels and London and Washington, everywhere. And I recommend a very good book by Luigi Zingales about this capitalism for the people, in order to have an idea of how capitalism has been corrupted in the United States. And now that the government is spending so much money, like there is no tomorrow, basically. Like, you could really print and borrow your way out of anything. This is going to be even worse. And I predict that we will have social unrest in many countries, in developing economies, in Latin America, that's for sure. We will have defaults. Argentina is going to default, if we could even consider it as defaulted already, but it will default. We will have other countries in emerging markets having huge problems, which will create frustration and social unrest, and we will have people falling under the poverty line by the millions because of these crazy lockdowns, which I believe could have been reasonable at first because no one knew very much about the disease. But now, in my opinion, they don't make any sense, and the cost is going to be much greater than the benefit. So this is a very general picture I'm giving, and I hope we could go into more details in our discussion. But still, I want to end this comments by saying that, by quoting Ludwig von Mises. Ludwig von Mises, who in my opinion is one of the greatest economists in the 20th century, if not the greatest, he said that the greatest damage of depressions and economic crisis was not so much unemployment and the drop in economic activity and all that. It was the moral damage. It was the feeling that the market was not able to respond appropriately, and that the crisis was a product of capitalism and not of interventions by central banks and governments in the market economy. He predicted the 1929 crash, and he attributed it to the monetary policy of the Federal Reserve and central banks, and no one believed him. And the 2008 crash was clearly a problem generated by artificially low interest rates by the Federal Reserve, if you ask me. and many people believe this as well, many economists. And so what we need to do is to encourage people that have interest in the money side of things to spread and defend the idea that government doesn't have to have a monopoly on money anymore. We need a free banking system or something like that, because this, I fear this might collapse at some point, creating a mess like we have never seen. And if that happens, we will have social unrest, we will have political crisis, unprecedented, maybe even, who knows, even war. So I hope not, and that would be the most pessimistic scenario. But if this really turns out the way that it could, because it's not impossible, and it doesn't look pretty, so what I'm saying is very likely. And so I would go back to the sound principles of classical liberalism that enable the West to grow prosperous, or in the social market economy of Ludwig Erhard, if you don't want to be like a very strict in terms of limiting government, but still have some reasonable free market where government sets the rules of the game and helps those that are not in a position to help themselves. But still, capitalism is a driving force, free competition, rule of law, and not the welfare state, and not central banks deciding where credit is going to be allocated, and all this very, very harmful policies we have been following over the last decades. So let's go back to the ideas of freedom, because freedom works, markets work, rule of law, and not welfare state and huge government spending. And also, unfortunately, we will see a process of deglobalization that will also have an impact on consumers, because supply chains are going to be more inefficient as they grow or become more local and less globalized. So as I said, I'm very pessimistic, and we have to speak about the benefits of freedom and defend the ideas of sound money and the markets as a response to solving social problems, and not government. That's the only way that in a democracy you can make changes, by changing the climate of opinion first, and then you have a shift in political economy, and can have a hope and a shot that in 15, 20 years, when people are tired of this system not working anymore, maybe they will take your idea seriously, and then you will have reforms in order to bring back the foundations of prosperity. I think that's more or less what I had in mind to share with you, a general overview of the problem, and yeah. So if there are any questions, I'll be happy to.
Awesome. Awesome.
Yeah.
Thank you, Axel. Yeah, actually, we have a question from Patrick. I think you are allowed to talk.
Yeah, hi. Thanks for your talk. So, I mean, I think I have a very different, let's call it, socio-political point of view than you do. You seem to talk a lot about money and how it affects the socioeconomic situation today, but I feel like you're ignoring a large part of this discussion, which is how governments choose to spend their money, so the fiscal side of it,
Right.
and the democracy that in a lot of Western countries that drives that. Can you bring that into the points that you're trying to make, and maybe consolidate it with what your view of monetary policy has been?
Yeah, you're absolutely right. I did not mention the fiscal side so much, or it didn't go, developing that point so much, because I believe money is even more important. you have to just take into account that governments would not be able to spend so much were it not for central banks buying the debt. So if it wasn't for the Fed, you would have a spike in interest rates, and the American government, the US government, would have to be more careful with spending. It is true that in a democracy, you have what Milton Friedman called the iron triangle. No, you have different groups, interest groups, deciding or pressuring, exerting pressure in order to direct resources one way or the other. And so what happens with the money that politicians spend? Well, you have the classical public choice theory that says that politicians in the end are maximizers of their own interest. And so the way they will spend the money is the way that benefits themselves. That doesn't mean they're stealing the money necessarily, but they will try to direct this money to interest groups and people that are important for them to be re-elected and their own constituency, even if it's not the most efficient way to spending the money. And of course, you have a problem in democracies where people vote for having government handouts and government some sort of government assistance. Like if you have a majority of the population that are retirees, for instance, it's very hard as a politician to say, okay, we are going to cut social security, or we are going to not pay you as high as a pension anymore, because they will not vote you anymore. So and you have that problem in Europe and also in the United States, but in Europe mostly, where you have a large part of the population, voters, that are retirees or about to retire. And yes, you have a time bomb in terms of unfunded liabilities, but no one dares to do anything about it. Some governments have been increasing their retirement age, but that's not going to work in the long run. So so you have this tendency in democracies that Alan Meltzer, he wrote a very interesting paper many decades ago about this, showing that you have this tendency to redistribution in democracies. And so politicians, it's the old bribing people with their own money slogan. No? So it's a nasty way to put it, but to some extent, it's not that false, you know. So the fiscal side, you have to take into account also that the only way to pay people or to give people some social services or anything is by taxing them, because debt is a sort of deferred taxation. You take on debt, yes, but then you have to pay it at some point in the future. Otherwise, you have a default, and then you cannot provide the social services anymore. Anyways, or you have to monetize debt. And in that case, you have inflation, and then purchasing power is being reduced, and is more or less a default as well. So anything that government gives to anyone has to take it from someone else. And that's why I'm very skeptical about the role of government in all this. And also, we know this for a fact, this has been studied, that you have the lobbyists with offices in Washington and Brussels, everywhere in the capital cities, trying to get a slice of the cake, huge cake that government spends.
I mean,
and so, yeah, so I'm very pessimistic in terms of the ability of government to spend wisely.
I think that, I mean, you make some interesting points, but regardless of whatever monetary base any society decides to use, whether it's centralized or decentralized, there's always going to be a political game around how that money is created and used. I think that something that could be interesting, and I would love to hear your thoughts on this, is that put aside politics for a moment, perhaps the metrics that we use in terms of how society makes judgments about how money is spent are fundamentally wrong. Like I would say that societies today are more oriented towards growth, which is the main driver for contracting debt. But if we saw it another way, say as the velocity of money rather, perhaps we would be able to allocate resources more efficiently. What do you think about that?
No, I don't know. I mean, velocity of money is something that you cannot really control that much. It depends on different factors, inflation expectations and many other things. But if you have a free market, you know, like the one that the United States had for most of its history, I'd say the New Deal was a game changer, but you still had a free market, of course. It's not like everything went away. And during the New Deal, it was debatable to some extent, but after that, you could make the case that you know, you still had a free market, of course. But that's the best way to allocate resources, because that's the role of prices. I mean, there is no way the government can know where resources have to be directed, and there is no way. I mean, if you are talking about helping people who are poor, that's one thing, and even then, you have to be very careful in terms of, are you going to subsidize to give them the money, like in a negative income tax, for example, and you're going to do a supply support, or are you going to give them the money to demand? So people have the money and they can spend it, like the voucher system in schools and things like this. I mean, you know,
I would say that,
and with the banking system, you know, if you don't have a centralized banking system, there is no way that government can print money by using the central bank, because that's the only way they can do that is by having a central bank that's buying government debt, and central banks are going to do that regardless of whether the government is solvent or not, you know, and they're going to keep interest rates down artificially. You had a free banking system, that would not be the case, because banks that are going to load too much government debt, if the debt is getting riskier, they're going to lose their, people are going to go for a run on those banks, and then the bank is going to be more careful. So government will have a limit, and that happened also with the gold standard, because the gold standard was sort of, you know, a safe in the sense that people would go and demand their gold back if the government was spending too much money and printing too much money, basically. So there is the fiscal side and the monetary side go always together, and inflation is, we know it's a monetary phenomenon, but it's closely tied to too much spending, to overspending. So yeah, so I think even Alan Greenspan, you know, he was in favor of the gold standard in the 60s when he was a young man. He wrote an article defending the gold standard, so governments could not expand by printing money and using central banks to do it.
Yeah, it's a very interesting point. I don't know if anyone else has other questions, but if no one does, I don't mind asking a couple more.
Patrick, I think there's other questions here in the chat.
Other questions, yeah.
Maybe we'll circle back to you in a couple of minutes.
Okay.
So there are many. I can start. So someone asked, are you familiar with the concept introduced by Radical Markets by Glenn Weil? I'm not sure if you know about ideas like Hubbard attacks, credit funding, voting, and ideologies such as like increasing returns economy. Have you any thoughts on this?
I've been, I don't know a lot about that. I've been mostly, you know, involved with the classical political economy studies and they're working now. Yeah.
Okay, sure. That's fine. We have lots of questions. How should the US federal government respond to the financial crisis hospitals in the US face after stopping elective surgery and losing revenue while facing 1.5 to 2x expenses due to the coronavirus pandemic, short of cash relief from the Fed, as we have seen in the CARES Act?
Actually, if any of the people in the Q&A want to ask their question, just raise your hand and we'll give you mic access. But yeah, go ahead, Axel.
Yeah. So if you have an emergency and then you really need resources for the healthcare system in order to, you know, solve all these problems or to cope with this emergency, you have to provide these resources. I'm not saying government shouldn't play a role there. Some people who are experts on the healthcare system in the US have, you know, analyzed the way the whole system is distorted and incentives are not put in the right place, and That means government intervention has made everything more expensive and less efficient, and interest groups have benefited, and not necessarily people who are the consumers or people who are using the system. But still, it might be that if the only way to provide assistance for these hospitals and people is it by the Fed intervening, well, okay, go for it. You are in an emergency. That's the only way you can do it. But I'm not so sure that's the only way you can do it. The thing is that the system, probably the healthcare system in the US, and I'm not an expert on that, it's an issue in itself, and some people spend their entire life studying that. But from what I've read, it's a system that needs an overhaul. And probably this will offer the opportunity to also, think about the system again and how it has been dealing with this crisis. But I don't believe that the Fed should be involved in helping, as a general rule, in helping anyone. The Fed should be there for, if it's there, that should be there for interest, for keeping inflation low. We know it has a dual mandate in the US, which I think is a mistake, but keeping inflation low, that's the role of the Fed. They shouldn't be, doing health policy or anything like that. And if the government that would, had more fiscal space, which in the US still has, because the dollar is the reserve currency of the world, but at some point they will not have anymore. But probably the government should step in and give more money, provide more relief to this to the healthcare system. I know it's a complicated issue because what are you going to do with the next pandemic? Because it's going to come another one. The Fed is going to bail out and going to intervene in order, to help people everywhere, or the healthcare system or hospitals. Is that the role of the Fed? I'm not so sure about that. Is it going to be normalized? What are the costs going to be of that? And why that sector and not others? Why don't we do it on a permanent basis? And that's why I fear we will have very high inflation in the future, because these sort of interventions might get naturalized. I hope I'm wrong, seriously, but you cannot print 6 trillion and expect to get away with it with paying no cost.
Right. Yeah, that makes total sense. So yeah, attendees, please, you can raise your hand and we can answer a question. Actually, I have a personal question. So yeah, we all agree on the bull market, the inflation that's been going on the past decade. And this might be the result of exiting the gold standard. And so that can only go for so long. And now we're seeing crypto rising. And so what about a potential crypto standard? Do you think that, for instance, Bitcoin-backed stable currency or Ethereum-backed stable currency, which will then bring the gold standard with skin in the game that we've seen was working, could be a great way because it's much easier to use, to transfer, to store, of course. And so maybe that could be another way to rebuild a new foundation for the economy with some sound money.
Yes, Hayek, the Nobel laureate, he wrote an article, a book called The Denationalization of Money decades ago. And he was basically saying, let's leave the market provide the money. And let's, let people decide which money we want. Now we are forced by government to use certain types of money because we have to pay taxes only with dollars or with euros or whatever. So there is and also you have a central bank that controls the money and also. So, but I believe, and there is a lot of discussion about this because some economists say, no, cryptos are too volatile, they cannot be money. You cannot have money, if Bitcoin, for instance, one day is $3,000, then 1 month later is $8,000. That cannot be money. Money has to have a more stable value over time. But we don't know really yet if at some point, and I believe this is going to happen in the future, Bitcoin will stabilize. It might very well be the case that Bitcoin or Ethereum or one of these cryptos at some point in the future, might take a while, but that they stabilize in price and that they become, used as money more frequently if technical issues are resolved, especially for many people who don't really know how to deal with these technologies, which is not so easy for many. So that can be an option, and it could also compete with other sorts of money, not necessarily crypto money. Maybe if you had a free banking at some point, you will have cryptos, you will have people issuing whatever the denomination of the money. Maybe you will have money also backed by gold again. Who knows? If you leave the market to work, you will have different options, and then some of them will prevail and others will disappear. And it's a system we had in the past, not with crypto, of course, but with different sorts of money competing. And it was very successful in Scotland, for instance, and also in Chile, my country. The best banking system we ever had, according to all measures, was a free banking system, and in the 18th and the 19th century, and other countries the same. So I'm very open to that, and I think it's the only way out of this disaster that the governments and central banks are doing with the regular money, with the traditional money.
Yeah, totally. That's why I thought like this would turn your pessimism into optimism, because I think this is neutral, just like gold backing, and this could be a great way. I actually disagree that Bitcoin will stabilize or Ethereum. I think they're all inherently volatile because it's so easy to trade it on the free market, but we can build it as foundation, just like gold, to build stable currencies on top of it. And we've seen this, right, which is now a big company led by South American mostly, and it's really amazing to see them thriving now. Awesome. So do we have other questions? So there are questions about money printing. Maybe we can go over some of them. If you want to raise your hand, happy to let you talk. Or yeah, I can read one, and then we can maybe switch off to Patrick for if he has any more questions. So Louis, maybe I can unmute you first. Louis, yes, you are allowed to talk if you want to. Hello? Or else I can read your question. So the infinite impression of money by the central banks makes us think that they maintain the system. Do you think that there's a kind of Ponzi scheme hidden in the shadows that the government must keep? Which is kind of a weird question, but yeah, again, like the criticisms of money printing.
I'm absolutely convinced that the welfare states in the West are a Ponzi scheme, and that are based upon, as I said, this paper money, and that they would not exist if we had a free banking or even a gold standard, because you have to take a look at how the price of money has evolved over time, like value of money, in the US and even in Europe, everywhere. And everywhere you see a decline in the value of money, the purchasing power of money. And this was not the case for a long time in the US, for instance, in the 19th century. And so it's I think it's a Ponzi scheme. It's sort of a Ponzi scheme, and the pension systems for sure. Pay-as-you-go system is a Ponzi scheme. That's 100% a Ponzi scheme. The pay-as-you-go pension system like we have in Europe and most of Europe, for instance. And so, yeah, and the only way that can work for so long, or for a longer period of time, is by printing money, by the Fed printing the money that the federal government needs. It's the only way. If you had to pay that with real money, it would be impossible. And what do I mean by that? It means that retirees, and this is already happening, are seeing their quality of life decreasing every year because many things are getting more and more expensive. So yeah, there is no way around the fact that you have to produce the wealth that you are consuming. And what governments do and politicians do with this system is they spend more money than they would be able to spend if we had a gold standard, for instance, or if we had even a free banking system where they only could collect taxes. and they could, you know, only take so much debt, like the market is able to provide financing for. And for instance, I close with this comment. In Chile, we have in the constitution an absolute prohibition of the central bank to buy government debt, even in the secondary market. This is very unique in the world. So we cannot buy government debt directly from the government, and most central banks cannot do that. But in Chile, we cannot even buy it from the secondary market, from bondholders, to perform open market operations in the central bank. Why? Because that would be an indirect way of financing the government. And because we had a history of hyperinflation, in the 1980 constitution, we put an end to that. So yeah, so I could go on, but that's basically my reflection on that.
Yeah, that makes sense. Actually, there's someone from Chile asking a question. As a Chilean, do you believe then that social unrest there will not be possible to control once the virus crisis ends?
We had a huge crisis in October last year, and it lasted for many months. For people who are not familiarized with what happened in Chile, it was a complete collapse of public order, and a lot of violence, and subway stations were destroyed, and you know, supermarkets were looted, and people died. It was a catastrophe. And once the virus is gone, we will have a huge economic crisis because of the lockdowns. And I believe violence is going to come back, not in a massive scale, at first at least, but it's going to come back. And I don't see the Chilean state with the capacity to react to violent groups. We already have a guerrilla in the southern Chile that is linked to cartels, even in Colombia and things like that. No one is doing anything about it. So there is no real rule of law in Chile. This is a fact, because the state has lost the capacity of enforcing the law. We have no law enforcement, and that is a result of decades of anti-police rhetoric and reforms that have made it impossible for them to. And I am all in favor of limiting the ability of government to, abuse people, of course. But you have to keep a sense of proportion in that, and we have lost that. And so you have activists also in the criminal courts that are very left-wing activists that are releasing all these people that commit crimes, and also are persecuting and punishing the police officers that take them away. So I think it's a situation that will not be able to control for a long time.
Okay, nice. We have another question by text from Child Narayanan. So it goes, if we move to a setup without a central bank, what are your ideas on the kind of public institutions that would fill the space of conventional social security apparatus?
Well, that we don't have a central bank anymore does not mean necessarily that the government as such cannot have social policies in place. The thing is that they have to pay for that with taxes in an honest way. Let's put it this way. They have to tax you in order to pay for social security or whatever. And what they cannot do is to print the money and then spend it. And so they cannot expand beyond a certain limit. So you could have a free banking system, and then government would raise taxes, and and if people don't want to pay more taxes, then they would vote those Congress men and women out of Congress, and then so you would have sort of a control in that. But still, if we would really go to a 5% GDP type of government, which is my dream, is like what the US had in the late 19th century. The civil society would do these things. Yeah, if you read Alexis de Tocqueville's Democracy in America, when he wrote this book in the 19th century, mid 19th century, he observed that civil society in the United States was so engaged and was so active in solving problems, from alcoholism to criminality to all sorts of education, all sorts of things. And this social capital has been eroded by the development of the welfare state. The welfare state has taken over this, has weakened society, has destroyed solidarity, true solidarity, and has made society poorer, and has also led to decrease in the ability to live together, because we used to come together in order to solve these social problems and to organize, communities, and all this has to some extent been affected by the welfare state, and also created perverse incentives for people to depend on the state, which is terrible. So I believe that, and in the same is, if you take a look at Argentina or Chile, even or the UK, many countries before the state expanded, you will see these private associations of individuals taking care for themselves. Even pensions and things like this were organized voluntarily by people who would put every month some money in order to have a sort of insurance in case one of them died, so the widow and the children would not be on the street. So these things would come back. They still exist, but not in the same, with the same intensity and in the same way that they used to exist in olden times.
Awesome. Okay, cool. I think we have a question from Patrick again.
I have a question, I guess, that's kind of based off of this last question. In your vision of a quote unquote free banking system, what is the role of government in consumer protection, regulation, access to money? And why, I mean, I haven't really heard you justify why you think that would be better in terms of social stability versus what we have today. I mean, granted, there are lots of problems with the system that exists today, but I mean, I feel like it's a big jump to go from, governments contract debt that's creating social, or that will lead to social unrest, and then, not have any justification as to why there wouldn't be in a counter scenario or in the opposite scenario.
So you would never have a perfect system, that's for sure. You have to compare advantages and disadvantages. Still, if you take a look at the literature and economic history, and you compare the era with central banks versus the era with free banking systems, you see better results with free banking systems. And in terms of inflation, in terms of crises, in terms of depressions, the duration of depressions, for instance.
There's so many confounders in that. It's impossible to say that it's directly linked to central banking.
No, yeah, you have many economists who have argued that.
And there are many that haven't.
Why George Selgin, for instance, you can go take a look at their work on banking. Even Milton Friedman said that you read one of his in Capitalism and Freedom, he's very critical of the Fed, and he has even an interview where he says you have to abolish the Fed. When he was very old, he said that. So, and of course, the Austrian school economists, all of them, no one among the Austrian school economists, they favor a central bank. So yeah, you could have, and if you had a central bank, maybe if you had an honest gold standard, then that would be also a good way to solve part of the problem I'm saying, or I'm describing here. But the free banking system has the benefits of the free market, that you can choose the currency you want to trade with, and you can control the banks in the sense that if you think your bank is issuing too much paper, then you withdraw your deposit, your bank can go bust, but not the whole system. And yes, you would have bankruptcies. Some banks will go away. That's capitalism. It's all sorts of businesses. You have companies that go away, that go bust. I don't see why banks should be any different. You wouldn't have a lender of last resort, which is a huge moral hazard, and the central bank has to play that role, a lender of last resort. And so, yeah, it wouldn't be a perfect system, that's for sure. You would have problems. But overall, I think if you look at the evidence, you would have a more stable system, you know, and you wouldn't have. And also, you have to remember, we are speaking not only about central bank in the US. We are speaking about central banks all over the world. Like, take a look at Latin America, what central banks have done. Like, it has been a complete disaster. Like, hyperinflation everywhere. So it's even worse than anywhere else, you know. So yeah, so I do believe that. I mean, we have the same experience in Chile, and all studies show that the free banking system in Chile was much better than the system with a central bank. So
you could very easily make an argument that that's due to the conditionality on loans put onto those countries by the IMF and the World Bank.
No, because in the 19th century, you didn't have the IMF.
You don't have empirical information from the 19th century to be able to expound.
Sure. I do have empirical information about the central banking system in Chile and also in Scotland and Canada. I mean, the free banking system.
You can't ignore the founders. You can't ignore the founders.
You do have the records
that you're making.
You have the records of the banks, and you have very good economists who have done the.
Yeah, but we have very limited tax information. So just to put everything on the monetary system, tax records don't go back that far for many countries that you're referring to. So we don't have data in the same way that we do in modern history.
You do have. I'm talking about something different. One thing is the stability of the banking system and the duration of depressions and the price system. And prices you can measure. Has always measured. All been measured, and even you can go hundreds of years back, and they have been able to reconstruct prices. So that's one thing. The other thing is taxes, and that's also, you have records in many parts, even in Europe, in all churches, like how much money they would pay into the church. There was a form of taxation as well, you know. And so you have pretty good evidence, I think. The economists have done a good job in reconstructing, in many cases, evidence about how the system used to work, in terms of the fiscal side as well as the monetary side. Of course, nowadays the information is much better, but I don't know. I wouldn't, you know, agree with you on that. Like, I think they have done a good job on economic history in that.
If you read Capital in the 21st century, we have limited information on so many countries. In fact, most of the tax information comes back from like the later part of the.
You mean the Piketty book, the one that's full of false statistics?
I don't know what you call a false statistic. I mean,
well, the Financial Times published an article showing that the statistics were wrong, that he used a lot of wrong numbers, and then you have other people who have refuted the whole book. Deidre McCloskey, Javier Salain Martin, Kevin Murphy, other professors have, you know. I thought the book was interesting, but you know, I wouldn't take it seriously, really. I mean, not because it's Piketty, it's because I think the book has several problems in terms of statistics and also in terms of theory. So
you're citing the Austrians.
I guess you can debate this for a long time, but I think most of the book is flawed. Yeah.
You're citing the Austrian School of Economics, and that school is totally not based on any empirical information. It's all philosophized.
That depends on what you read. You know, if you go read Murray Rothbard's History of the Great Depression, it's full of statistics and empirical information. If you go read, Mises wrote a lot about the economy, real economy of the Austrian Empire, for instance, and Hayek got the Nobel Prize because his theories showed to be very, very useful for understanding the real economy, at least in terms of prices. And so, I'm not only talking about the Austrian school economists. I think many economists have something to contribute to the debate, and not only Austrian economists, also Chicago school economists, and others that are not necessarily as free market oriented, have made some interesting insights offered. So.
All right. I think we'll close here. Thank you so much, Axel, for this discussion. Next up.
Thank you. No, thank you.
No worries. And thanks, Patrick, for the useful debate. And awesome. So I think next Sebastian will take over me. Ash Middleton is next, talking about how COVID-19 is forking the Asian model I let Sebastian handle the next part. And thank you so much, everyone, for attending. And please stay on because it's going to be really interesting.
Thanks, Alex.
Thanks.
So as we near the last couple of hours of day 2 of Reset Everything, I am pleased to welcome Ash Milton. And I also want to thank you, Ash, for stepping in at the last moment. If you're looking at the schedule and wondering why Ruth Ben-Gate couldn't make it, she sent me a message earlier saying that she had the flu, or had some fever. And so, wishing her well, hoping it's nothing too serious. But Ash Milton has agreed to come on. Ash is a writer at Palladium Magazine. And Palladium is a nonpartisan publication that explores the future of liberalism, governance, and society through responsible, slow publishing and long-form analysis. So as Alex was saying, he's going to be talking about COVID-19 and forking the Asian model here in the West. I'll hand it over to you, Ash.
Yeah, thanks, Sebastian. And I'm also managing editor at Palladium Magazine, so just disclosing my involvement there. So the Asian model, COVID-19, and some of the geopolitical fallout. Basically, what I'm looking to do in this talk is look at this concept of the Asian model, which is something that has been discussed widely in media, Western discourse, etc. Especially during COVID-19, people have been looking at the response of countries like Taiwan, South Korea, Singapore, obviously also the response in China, and it's being compared to the response of a number of the major Western states. We're seeing pluses and or benefits, and we're seeing negative effects of this model. China hid information. It failed to react very quickly. On the other hand, in places like Singapore and Taiwan, the same model was able to respond more effectively. So what I'm going to do in this talk is essentially define the model, look at how this current crisis is starting to create forks in what we sometimes talk about as a very hegemonic model, and some of the lessons we can learn, and perhaps some bold posits about the future. And I will try to convince the people listening to this, that in fact, these concepts like geopolitics, like hard and industrial power, matter maybe more than they have in a long time. They can't be routed around very easily. So to begin with, what is the Asian model? When we discuss that term, what we're usually looking at is a number of East Asian states. We're looking at China, Singapore, South Korea, Taiwan, Japan to a degree. We're seeing developments toward this concept in countries like Vietnam, Indonesia, and Malaysia. But what is it? Essentially, on the one hand, we have these countries beginning to look, or having looked in some cases for some time now, like Western countries in terms of their industrial advancement, their material expertise, their level of technology, their standard of living. On the other hand, a lot of these countries have political systems that we would consider more authoritarian, more collective, less free in the way that we think about the concept in the West, less room for individual liberty. And so in that way, this model seems like something distinctive. What does seem to be the case in all of this, though, is that the familiar Western liberal democratic system no longer has a monopoly on economic prosperity. And why is that important? Well, in the Cold War, material prosperity was one of the big advantages that the US had over the Soviet Union, and that the Western Bloc had over the Soviet alliance sphere. It's pretty common to talk about things like freedom or democracy as being the key concepts that won over dissidents or people who left that sphere. And that's true to a degree, but I think that it's often overlooked the degree to which pure economic opportunity motivates things like people leaving their country, sometimes at great risk. If economic prosperity is no longer a monopoly of the Western model, that's going to have big consequences for its legitimacy and how it can promote itself abroad. Now, the Asian model is interesting because it actually can fall on both sides of Western alignment. And this is why it's generally been not an ideological deal breaker for the US or its allies. On the one hand, you have China, obviously now at a more strained relationship with the West than ever before. But through the 90s and 2000s, the West was very dovish toward China. Nevertheless, that's clearly a pull in the geopolitical sense that is not Western. It's not Western aligned, it's independent and sovereign. It's making decisions without regard and sometimes adversarially toward the West. Still, it has industrial development, it has had an increasing standard of living, but it has a party state political system that is not free in the Western sense of that term. On the other hand, though, we have states like South Korea and Singapore. Both of those states are Western aligned. Park Chung-hee's regime in South Korea was not a democratic regime. It was highly authoritarian. It was coercive in the private economy. Businessmen were hauled in front of his industrial committees. But that same economic program created the advanced economy we see today and made South Korea into an important economic power. South Korea, despite having had that regime that's problematic in an ideological sense, is a Western aligned country. Lee Kuan Yew in Singapore is another example, and he was really the one who created this concept of an Asian model. In Singapore, he used a mix of protectionist and market measures and increasingly moved to a market system as Singapore developed in order to make a prosperous country that he thought could stand on its own 2 feet, and it has. Despite being a neighbor with Malaysia, there's never really been risk of reabsorption. Likewise, it's managed to remain on fairly good terms with its Chinese neighbor. Singapore is more or less Western aligned, but it also has a more authoritarian political system than the West would really permit, despite having a larger degree of economic freedom. So what's going on here? What is the purpose of calling this an Asian model? Well, there's a few reasons this might be. Maybe it's less threatening in some ways. If you're Singapore or South Korea and you're the leader, you're the government, and you see the need for more authoritarian measures, but you also want to keep the West backing you, maybe you say, well, of course we're a liberal democracy, but with Asian characteristics, with particular differences that are necessary for our local situation, but we don't need to pay too much attention to those. It then allows you to remain a US ally. In the Chinese case, as we'll see in a little bit, it also actually allowed them to do something more, to create a model of government which they see as distinctive from the Western one, and one which they are in fact promoting in various parts of the world. So the Asian model might be something like a convergence rather than, a single thing that's been developed by a lot of different players. They're learning from each other. Deng Xiaoping in China learned from Lee Kuan Yew. People have learned from South Korea. Vietnam is now learning from the Chinese model. And so there's continual development and exchange going on in the creation of this thing. What is happening now? Why am I talking about forks in the Asian model? Essentially, this is what brings us to the question of decentralization, which has been talked about a lot during this conference. And I'm going to focus here on China and Taiwan specifically. And the reason is that, and basically a lot of the arguments I'm going to make here, I originally made in a piece at Palladium magazine called "Only the State Can Succeed at Decentralization." Why am I making this bold claim? We'll see momentarily. When we've looked at the response to COVID-19, I would put to this audience that China and Taiwan can be sort of thought of as the two ends of a spectrum of response when it comes to top-down central coordination versus a more decentralized form of coordination. On the other hand, both China and Taiwan have strong central governments, although ones with different political cultures, and they have increasingly well-developed local institutions, especially on the economic end. So let's look at China first here. What I'm basically going to do here is go through these two models and argue then that we're going to be seeing a fork in what we used to talk about as a Central Asian model, or as a centralized, unified Asian model, rather. China has had decentralization, in fact, since the 80s. It's been in a lot of ways responsible for their economic development. what is the form of China's decentralization? China's decentralization is top-down. It is controlled carefully by the party state, by the Chinese Communist Party and its central committee. It's also something that is obsessively undergirded with theory. I think that when we look at China, something that has been missed in the West is the degree to which they're obsessed with theory and prediction and analysis of their own actions. Had people looked at what the party itself was saying about its economic policies, I think we would have been far less surprised now when China did not end up becoming, more politically liberal as it became economically richer, which was the prediction that a lot of people had made. So because China privileges political centralization, its decentralization has been mainly economic and material. We're seeing special economic zones, of which Shenzhen is the biggest example. Some of those institutions were adapted from what they studied in places like Hong Kong, Taiwan, Macau. And these special economic zones allow for extensive economic local action. You have foreign investment, you have markets, you have people creating businesses, you have experimentation, you have different regulations as well. In certain regions like Hong Kong and Macau, you have different legal systems as well, which the Chinese party state has more or less integrated into its one country, two systems model. And theoretically, you could have iterations of this. Vincent Garten wrote for us in Palladium about Zhang Shigong, who is one of the premier Chinese thinkers working on this concept within the party state. He proposed something called one country N systems, a system where you can have many different jurisdictions occurring on a local level with their sovereignty still vested in the party state and preferentially promoted according to the interests of the party state. So political centralization, economic decentralization to a degree, because the state sector in China is still quite strong. And if you look at the bolts and nuts, so to speak, of the Chinese economic system, one quickly realizes how much of that wealth is used to support the public economic structure. And why does the party do this? Well, the party has always been terrified of destabilization. They have memories of the Cultural Revolution, which was a form of domestic destabilization. They've also obviously always feared foreign destabilization as well. So the resulting culture here is one that wants dynamism in the economic sense, but important decisions at least are something that they control. And if anyone has worked in China, it's a pretty common observation is how hard it is to find information about anything in China. Who's in charge, what are institutions really up to? If you have a lack of information like that, it's fairly reasonable that you're going to see a suspicion of local action, especially in a country where the political system is so based on very low trust relationships within the government. China is also promoting this model around the world. So we have at Palladium covered a number of these projects, the Belt and Road Project, which is the prominent Chinese brand for a number of development programs and trade deals that it's made with countries around the world to varying effects. You have Chinese involvement occurring in Africa as well. Rwanda, Nigeria, Ethiopia are pretty prominent there. Chinese developmental involvement is one form of this, but in places like Lagos, there are even Chinese-backed special economic zones, essentially. And so we're seeing both political and economic influence there. I also want to recommend a recent testimony by Daniel Tobin, who is a member of the National Intelligence University. He gave testimony to the US-China Economic and Security Review Commission on a number of the initiatives China has taken to promote its model around the world. So if you want to go down to the rabbit hole, there's a good resource. Let's flip now to Taiwan. Obviously, the strained relationship there, we saw the World Health Organization being pretty averse to even mentioning it as a distinct entity. But geopolitically, there is a government in Taipei which considers itself independent. And I think even the very bullishly pro-China factions say can't really get around that fact. Taiwan's model is distinctive. So rather than a party state, which Taiwan doesn't have, Taiwan's political institutions are more open. They're more familiarly Western in that sense. And in fact, one of the big transformations that happened in Taiwan in the last few years, in the 2010s, was something called the Sunflower Movement, which was a Taiwanese movement that was suspicious that the Taiwanese government was essentially becoming too close to China in trade deals that it was undergoing and so on. Through the course of the Sunflower Movement, you had the rise of a programmer and hacker community called GovZero. So G0V is the moniker they use. Basically, to make a very long story short, in the course of that movement, a number of programmers entered the Taiwanese government, and the Taiwanese state ended up having a systemic upgrade in their technological competency. Audrey Tang, who is the digital minister in Taiwan, has spurred a lot of this. And Taiwan has basically developed a fairly fleshed out model now of digital governance, which is very distinct. It is still centralized in certain ways. So when the COVID response began, the Taiwanese government accessed things like migration data, insurance data, etc., to inform its decisions. On the other hand, it's left a lot more room for social action on the ground. So the GovZero community created a number of apps, for example. One of those apps tracked mask availability at various hospitals to make sure that they could trade with each other, that people could go to hospitals where there was a larger supply to make sure shortages didn't happen. Basically, a number of these initiatives taken by civil society in collaboration with the Taiwanese government were extremely important, and it was part of the strategy employed in Taiwan in its COVID response. You still have also an openness of data, and this is something that I think is distinctive from a lot of the discourses in the West, including in Europe, where openness of data is part of the equation here. However, there is greater regulatory room in Taiwan for voluntarily disclosing this data, for having ownership of it once it's disclosed. And obviously, in a country where you have higher political trust in general, you're going to have people more willing to disclose data and more willing to collaborate on the platforms that that disclosure allows. And so even before the current pandemic happened, Taiwan had experimented with things like digital platforms for having citizens respond on policy questions. And some of these platforms are, for example, the Polis platform, which hosts things like the V-Taiwan program. Basically what these programs do is when a policy question arises, citizens participate in them and can, through answering questions, through voting on positions, come around Schelling points, essentially. And the Taiwanese government can use these Schelling points to inform the policy decisions that they make. So a number of these experiments have gone on in Taiwan. It's its own rabbit hole that one can go down. But essentially, what's the result? Taiwan's digital model and its governing model in general is based on higher trust in the population, on more room for voluntary and local action that's also social and political and not only economic. And there is an emphasis on inclusivity in terms of its technological strategies. So those are the differences in the Chinese and the Taiwanese model. Other countries that we've mentioned, South Korea, Singapore, can be thought of as falling on something of a spectrum here. Singapore has a lot more centralized action. South Korea does as well, but South Korea also has extremely strong privacy laws. And so the reason I think it's useful to use Taiwan and China as ends of a spectrum is because it lets us see the array of policies that exist among these East Asian states. And this will bring us to the argument that there is a fork going on here. Geopolitically, that's driven by the fact that as the American-Chinese relationship becomes more strained, it's likely that we will see a greater willingness to back governments like those in Taiwan, those in South Korea, as a way to counterbalance Chinese power. And to the degree that people have been looking at the East Asian model as being more effective in things like delivering state capacity, in responsiveness, and so on, it will be useful but also beneficial to have local adaptations of that model such that the superpower, China, doesn't have a monopoly on what an Asian model looks like. And so for a number of these reasons, I think that we're going to see forks. Political reasons, because states have an incentive to distinguish themselves, particularly from China. On the Chinese side, it has an incentive to distinguish its model from that of more Western-friendly ones. But also because, in concrete terms, there are real differences here. There are differences in technological policy, in material results, in the way that citizens interact with these systems. There are also similarities, though, and I think that those similarities are going to bring us to some interesting questions. First of all, decentralization in both cases is coming from the center rather than against the center. What do I mean by this? While the party state is very top-down and centralized, and Taiwan is more open, inclusive, and perhaps trusting, in both cases, the forms of governance being used are being used to inform centralized action, to make sure that states and governments can act more effectively and quickly in the response, and more generally in the policies being used here. When we're seeing other countries being influenced by these models, it's governments who are being influenced by them. We have Saudi Arabia, for example, which had been working on a special economic zone, essentially something like a charter city called NEOM. We've seen, as I mentioned earlier, Lagos looking at how to use special economic zones. We're seeing political power actors using decentralization to strengthen themselves. And I think that's an interesting development and one that's not discussed enough. In Palladium, one of the first pieces I wrote, this is about a year and a half ago now, was on charter cities. And if people have been involved in this, they probably know that charter cities kind of come out of a very libertarian ethos. The idea is that cities will be built that can finally route around, sclerotic, bureaucratic central power. But interestingly, the special economic zones and charter city type arrangements that we've seen successfully done around the world are not done against central power actors. They're done by them to route around often sclerotic middlemen agencies. For example, the Chinese special economic systems or special economic zones were set up in part to route around the mid-level bureaucratic agencies that Deng Xiaoping and his faction saw as obstructive and untrustworthy. So decentralization then starts looking very different from what we've assumed. And in both cases, in both of these forms of the Asian model, I think we are going to continue to see decentralization from the center. I also think the distinction between these two systems is not really individual versus collective. Insofar as we want to talk about a common Asian model, I think it's based more on the fact politically that that distinction is seen as a sort of false binary, a false dichotomy. It's something more like cooperative versus directed models. The Taiwanese model, I think, sees itself as creating systems that allow cooperation to occur. But this action is still taken from the center. Maybe the equivalent, the simile here might be like establishing something like transportation systems. There are obviously winners and losers from a transportation system, but the aim of them is essentially to allow other people to do things. The China model is far more top-down. And this would be more akin to things like publicly owned industries, where strategy is coming from the center. And that distinction allows for both individual and collective action, but in different forms. I think it basically disprivileges the dichotomy of individual versus collective, because what is being built here is something more like a feedback loop. In the Taiwanese case, that feedback loop is between central and local action on all spectrums, social, political, economic, and so on. In the China model, it's more economic, but perhaps also increasingly geopolitical. You're seeing Chinese involvement now in places like Serbia. We've seen it obviously for a long time in some of the Latin American countries like Venezuela. But with 5G, we're going to see it increasingly in countries that were considered reliably Western aligned. Palladium magazine has covered the 5G question in the past. And one of the best explanations I've seen for things like the sanctions that were being placed when 5G was being discussed was because American diplomatic efforts were not successful in, particularly on continental Europe, in convincing those governments to not cooperate with the Chinese. Once the sanctions were in place, we saw Korean companies, for example, Japanese companies, start to get deals more easily. What are the implications for elsewhere? I think that we will see countries still looking at the Chinese model, but as that relationship sours in certain places because of debt or because of just an overreach on the Chinese part, it may be the case that, especially if there is Western backing, forms like the Taiwanese model or the Korean or the Singaporean model might gain more attention, especially as a way to distinguish countries from China or even stop them coming totally under Chinese political influence. Palladium has covered Rwanda, for example, where the government there has drawn some inspiration from this model in recent years. I want to look at America as well for a moment, because in American discourse, there's a lot of attention being given now to the lessons that can be learned from the East Asia model. I don't think that either model can be simply replicated into America. I think that's kind of a dumb assumption or question. However, I think that America and Americans need to be open to learning lessons. You know, the Soviet Union fell because it was not able to update its institutions, its politics, and its culture forbade it from learning lessons, because essentially it was already supposed to have the best system in the world. If America falls into that same mental trap, then it will start inevitably to undergo the same sclerosis and decline as the Soviet Union. However, America is neither China nor Taiwan. I don't think that a high trust model that is operating on an island with a unitary state works in a country that is highly diverse, is geographically and demographically huge, and has a different history. The China model obviously also does not fit into American or broadly Western culture, which does privilege individual liberty and action. But as those terms have kind of been continually evolved, we could say, you know, what does individual liberty look like when you're living on a farm in an American territory in the 19th century versus what it looks like living in New York in 2020 after this crisis probably looks somewhat different, even though they come from the same cultural root. What America needs to do, I think, is look at why the systems work where they work. And I think that the decentralization question is very important here. And so I'm going to end on this concept. Decentralization in both cases here has the goal of creating positive feedback loops between central and local actors. This, I think, is something that's common to both the Chinese and the Taiwanese branch of the Asian model. I think in the discourse here, decentralization is often seen as adversarial, right? You're trying to fracture or break from some kind of central actor. I think that this kind of ignores how decentralization often really occurs. Even in the early industrial period, modern markets were being promoted by states, the British Empire, French Empire, for political reasons. I think that if we're going to empirically think about where decentralization is headed, we're going to have to consider which power actors are driving them and for what reasons, and what are the resulting systems going to look like. I think also that there are discourses now in America which are themselves starting to do this. So state capacity and industrial policy are concepts which have returned to American political life. This refers to the concept that state action can actually create value and drive development. More specifically, that it can actually drive decentralized action as well. In fact, this is part and parcel of an American tradition, the American system or the American school, built in the 19th century and which lasted until the early 20th century, which used a mix of central actions such as tariffs to protect local industry, but then also had a lot of room for private companies, for regional and state governments to take action. Basically, decentralization and central action were seen here as two tools which could be used for the goal of developing a country. Essentially, rather than seeing either of these as an end in itself, there was a higher order goal, which was national development, and both had to be used in a strong way in order to reach that goal. And it's interesting that when we talk about an Asian model, that same logic has now been replicated and is seen as something new and untried, when in fact it's been this deep part of American history as well. I think that finally we're also going to have to take the states doing this seriously. The big mistake that we made, I think in the 80s and 90s, was assuming that when China in particular talked about having not state capitalism, but socialist markets, when it talked about the fact that the markets were meant to serve the party state, we more or less dismissed this as kind of, oh, this is just ideological dress. It's just for legitimacy. We all know that they're going to become a democracy at some point. In fact, if people had listened and read and engaged with this is obviously not to say that it's always honest. This is not the case. But if people had taken seriously that decision makers in China had different goals, I think we would have been much more quick to predict the direction of their development. Going forward, I think that we're going to want to do this not only with China, but also with governments who are creating their own forks of the Asian model. So they are, in the end, real alternative models. I don't think that we're just seeing local adaptations that are going to be absorbed into the Western mode. Decentralization in this case is going to look very different from what we thought in many cases. But I think that if we look at how it's successful, people here who are interested in decentralization can maybe start to create forks of the American model as well. And I think this is a conversation for another time, but that leads us to some very interesting places. So I think I'll end there, and perhaps we can open this up to questions.
Yeah, thank you, Ash. That was a fascinating talk. And I think it just kind of flows pretty perfectly with the rest of the content that we've covered today, which was fairly focused on long-term trends, politics and economics. It just fits so perfectly. So I'm glad that you could join us.
I'm very glad. Thanks again for the invite.
While you were, so we'll open up the questions. If you have any questions, please leave them in the Q&A, and we'll be fielding questions and giving the opportunity for people to speak. Just raise your hand if you'd like to pose your question on the air. So, I mean, one of the things that we were talking about earlier today is how the COVID crisis potentially puts us on a trend towards more local consumption, more local production, less of a dependency on sort of foreign production and supply chains, et cetera. If we are on this trend of more local economies, et cetera, where presumably, the dependence on China, like for example, here in France, most of our healthcare production for things like ventilators, masks, etc., is coming from China. If we're on this trend where dependence on China is reduced, then how does that affect basically your proposal here that China is growing in influence? Would that potentially reduce China's influence generally?
Yeah, I think the big question here, right, is like, will we actually end up doing this? We've already seen over the last really decade or more that a lot of Western governments seem to not be able to carry out long-term strategies in the way that perhaps they once did. Once the crisis is over and once the media and the political discourse flips to the next issue the way it always does, will we actually have the political clout and like willpower to implement the sort of changes? To relocalize entire supply chains is an extremely huge order. When South Korea did this, when it created domestic supply chains, it was done by the state being the first buyer for strategic industries that were domestic. It was a 10, 20, sometimes 30-year process, depending on the industry, to build up that economy. And this was done by a government that was fairly unified and under extreme geopolitical pressure. Are Western governments going to have that kind of willpower? I guess we're going to see. Speaking personally, I hope that some do. I mean, it's very clear that there is a lot of dependency here. But what will China do as a result? If we end up doing this, I think that its influence will diminish in certain areas. I think that a number of countries are going to start trying to diversify away from China anyway. Palladium's covered Kazakhstan, for example, which is a quite rapidly developing country that's often overlooked. And it has embraced a model where it tries to kind of counterbalance America, China, Turkey, and Russia against each other and become more of a crossroads country rather than just, a vassal state of one power. So we might see some countries trying to diversify in that way. I think that if America starts updating its conceptual model of governance, it's probably best incentivized to frame or to conceive of that as the return of an older American tradition. And I mentioned here the American system, because this kind of undermines the Chinese line that its model is sort of distinctive. China cares a lot that countries which see its model as successful see it as inherent to Chinese socialism, which they still hold as their guiding principle. Perhaps someone will have a question on this, but I essentially do take the view that China runs on a Marxist conception of power. I don't think that it is, state capitalist. I don't think that it's kind of, people will talk about capitalism with Confucian characteristics or something like this. What we have is a party state with a Marxist conception of power that uses markets in a way that is consistent with its interpretation of that ideology. So if America can break that monopoly on the idea of, a more dynamic form of central action, then maybe this will countervail Chinese ideological influence as well.
Okay, I understand. And when you talk about the fall of the Soviet Union, and because it failed to upgrade its governance system and its political system, and the risk that the U.S. or the West more generally perhaps faces in also having this similar fate if it doesn't upgrade its system in a sense. What do Western states effectively need to do, or what is the direction that we need to take in order to avoid falling to too much influence from China and generally Asia?
So yeah, I discussed this a little more in my original article at Palladium, but essentially, and I'll focus on America here. I think it seems to be quite clear that at the federal level, what you really have is not a unified federal actor. You have a number of different factions, you have regulatory bodies and elected bodies. They have distinct interests from each other, and it's actually quite difficult to implement strategy on a national level. The result, I've always been suspicious of the notion that you would ever see things like, it's fashionable to talk about maybe states seceding or American Civil War. I actually don't think that the demographic prerequisites for something like that exist, at least not in the near future. But it can certainly be the case that you have like zombification occur from the top down. So we saw this happen to an extent with the FDA. When emergency procedures were put in place, the FDA's regulatory system actually slowed down things like approval of tests and the like. And obviously, this is impeding both central and local action, right? Federal response is impeded by a body that kind of is not directly controlled in an effective way. It's not directed in an effective way. And local action, companies manufacturing tests, maybe in some case state and local governments that wanted to coordinate that sort of thing are now impeded by a regulatory body at the federal level. This is sort of what I hinted at in the Chinese case when I talked about how part of the impetus, I think, behind Deng implementing the special economic zones was circumventing what he saw as corrupt or disloyal middleman factions. I think that what America will ultimately have to do is find ways to both centralize coordination at the federal level. So what I mean by that is like the authority and ability to create strategy. I think a case of this being done well in the COVID response was actually the COVID-19 open database that I believe the White House was behind that initiative. And, they made available not only public and private data, but even pre-publication data so that local industries could benefit from it. But you're having this on the one hand, and then you have FDA obstruction on the other. This is a federal system that doesn't have good coordination. I think it needs to improve that coordination. On the other hand, making it easier for local action to occur, like medical institutions in different states being able to trade information with each other, which is an obstacle right now. This would unleash the ability for competent local actors to respond to federal strategy. And that's what I kind of mean by both the center and local action being simultaneously strengthened in a sort of positive feedback loop. I think that's the key logic that's being applied here.
Okay. Do we have any questions for Ash? So there's one question here, which is somewhat related, I think, to my question, but is, what can we do to prevent our democracy in the U.S., generally in the West, to turn to full authoritarianism? And I think this kind of broadly more relates to the current crisis. And yesterday we talked a lot about privacy and the risks to civil liberties that this crisis poses. So, what are your thoughts on authoritarianism from this respect?
So I think we kind of have to think about what, and I'm going to take a very basic definition of authoritarianism here as, power grabs and running roughshod over personal freedoms and law and the like. What causes that to happen? I think we often assume that kind of power begets power. If you had a federal government, a Congress or a White House with authority to take fairly decisive action, this would kind of inevitably slide into authoritarianism or dictatorial power and so on. But there's ways in which it can occur, But I think what's often overlooked is the way that actually division and factionalism and perceived threats are actually what spur those kinds of moves. So, looking in the Chinese context, the Cultural Revolution didn't happen because Mao had, a firm hold over China. It happened because Mao was surrounded, as far as he was concerned, by enemies. He thought that, at any point he might be overthrown. He saw ideological dissent, and he decided to launch the Cultural Revolution as a way to destroy those enemies. Likewise, let's take another example. South Korea, under the Park regime, which was an authoritarian regime, existed and was allowed to exist by the US because of the communist threat from North Korea and from China. I think that the way that we circumvent or maybe that we guard against that possibility is by building institutions that are effective and that are also secure. So let me give an example here. I mentioned that Taiwan has experimented with a number of digital platforms that allow citizens to participate in how decisions are come to and how policies are carried out. Well, I don't really see the federal US government doing that, or even most states, but perhaps cities can start to experiment with technologies like this. Why can't San Francisco or New York start to upgrade with technology how those decisions are made, so that when central action occurs, it's informed by the people living in those places who are impacted by those decisions? And this is one example. I think that in some ways this is already obviously meant to be the ideal, but we've seen that the way that a lot of times elections usually work is that some or another political machine is put in power. And maybe the US is right now, it doesn't have the political ability or culture to do that on a large scale. So I think we have to identify the institutions that have the possibility to act, and then think about, okay, how can we allow the central action to occur in a way that doesn't lead to more chaos and factionalism, which I would argue is what spurs the authoritarian response.
So do we have any other questions for Ash in the Q&A? Well, it looks like we don't have any more questions.
I had a thorough talk then.
It was pretty thorough. So tell us a bit about Palladium.
Sure. So Palladium is based in San Francisco. It's a magazine that covers issues of technology, of geopolitics, of development, and essentially some of the stuff I talked about today. What is the future of governance? What kinds of governance models are going to come out of this crisis, and what models are being developed right now? That's the question that we're interested in. And so, we've done a lot of on the ground work, I'm glad to say. We're less than a couple years old. We've already had stories come out of Venezuela, out of the Balkans, various regions of China, Kazakhstan. We were present at Davos in 2019. And so I think we have a strong focus on actually looking at what's going on in order to inform our analysis. There's a lot of purely theoretical writing that goes on, and we kind of try to avoid that. I think that also on the decentralization question, some of the concepts I talked about here are stuff that we're going to try to develop. And so I encourage people to follow some of that analysis. I think it's going to be useful for people working in the crypto space, but also, governance policy and the like.
Yeah, I mean, we've had obviously like several people here in this conference that are coming from the crypto space. Not as much as we would have typically, because I mean, I do run a crypto podcast. It's been a pretty diverse and I'd say interdisciplinary group of speakers. I mean, coming from the crypto side, I think like a lot of the conversations right now are around government-backed central bank-backed digital currencies. You know, things like DeFi and bringing people into new financial ecosystems. Obviously, Bitcoin has a big role to play as well as like, you know, in this narrative of being, you know, the new reserve currency or like a safe haven currency or something like that. I think that, you know, perhaps out of all of these sort of different narratives, the Bitcoin as some form of, you know, trusted store of value asset that is a sort of antidote to, you know, central bank bailouts is probably the one that is most likely to prevail. A lot of the stuff that's happening in DeFi and that ecosystem, and I don't know if Alex is still with us, but Alex is pretty deeply pretty deep in this ecosystem. I don't see a lot of that having a lot of influence outside of that ecosystem, outside of that community. I think it'll stay relatively contained. And then the central bank backed digital currencies, I tend to think, and actually Jim Bianco, our next speaker, I tend to follow his point of view because we've talked about this, and that is that there will be stable digital currencies that operate at a scale that are much larger than Bitcoin or any other cryptocurrency, but they won't be backed by central banks. And it's more likely, and I don't know if Libra is what's coming, but
we've actually covered Libra as well at Palladium.
Sorry?
We've actually covered Libra as well at Palladium and kind of the possibilities of that. I think that, you know, in all these cases, I know that central banks are a major issue that people in the crypto space look at. I think, and you know, that's quite valuable. I think that what is sometimes overlooked here and, you know, this is both public finance and central banks.
Sorry, I think we lost you for about 10 seconds. You said what sometimes overlooked is?
Oh, sure. Sorry about that. When you have an economy that's primarily focused on the financial aspect, so, you know, when you have the banking system in the US as powerful as it is, you even have things like debt being sold in companies like GE and Ford, which are supposed to produce, you know, real manufactured items. You're gonna start ignoring, as an economy and probably as a political system, real production. And so I think that the question earlier about you know, having supply chains become local again is pretty important there. You know, crypto has a lot of interesting applications when it comes to things like exposing the problems of, say, fiat or central banking systems. And there's a lot of interesting discussions that can go on there. But when a single rival superpower controls all your medical devices, when it controls a lot of the day-to-day items that you use, you know, one cannot kind of purely survive on, I think, local economies or on forking new currencies. I think that inevitably you come back to what are we actually making? And to me, questions of finance or of currency should be more about how does this make things like liquidity available for producing those things.
Alex, did you have anything you want to bring up? I know you're back. You just came back, right?
Hey, yeah, I didn't have the chance to fully hear your talk, but that was nice that you touched on crypto. So yeah, I'm not
just talking about how DeFi wasn't going to grow to anything very significant.
Oh, really? Oh, well, I can discuss this. I think I have a prediction actually that I'm risking my skin in the game on is I think we'll see a central bank digital currency be released this year. And the fact that it will be in a permission blockchain or a private blockchain or a public blockchain doesn't really matter, because we can build kind of interoperable bridges between them. And I think that's a huge growth relay for DeFi. And so the new financial products that the community in Ethereum especially has been building, and it's a better system. It's more transparent. It's actually backed usually by ETH or by Bitcoin instead of unlimited money printing by the Fed. And so there are great rates like Compound, where you can basically have savings account with a 10 times better yield. And so I think these innovations really will be huge. And I think if crypto—
Do you have a prediction on which governments might be the first movers?
Well, I would say China, I think, issued a paper on the fact that they are planning to release their own stable coin, so digital currency. And
right, the DCEP, I think it's called.
Right. And what's really interesting is that, sure, China within its borders can do pretty much whatever they want with the parameters of that currency, but outside, for international payments, they are settling on Ethereum, which is really fascinating, because then that allows the whole DeFi space, all the products being built right now, to be leveraged. So that's really interesting.
Interesting. I think that part of the talk was about political culture and like higher versus lower trust political cultures, and in particular the fact that Taiwan probably has among the higher trust ones in the Asian model, whereas China obviously has one of the lower trust ones. I think it'll be interesting to see what moves Taiwan continues to make into that space. I don't actually think Taiwan early on was very open to crypto. I think it shared kind of the same suspicion as a lot of governments did. But given that there are so many programmers working in the Taiwanese government, and that like these inclusive and decentralized platforms are already being used there, it'll be interesting to see. I think obviously the flip side of that is that Taiwan is a fairly small country, and is being locked out of influence by a lot of international actors.
Right. Yeah, that totally makes sense. Like countries with decent, great systems like Taiwan, that you probably know more than me on, or Singapore. Yeah, if you have a really healthy system that works well, although because they are on a smaller scale, yeah, perhaps crypto value proposition is not as attractive. And so maybe adoption will be slower. So yeah, I get this point.
I'm interested to hear if you think that geopolitical power matters if a state is rolling out crypto. Like, if you're a superpower and you roll out a cryptocurrency, or like a stablecoin or anything, is that going to make you more effective at getting people using it? Because Venezuela's attempt failed for obvious reasons.
Venezuela attempt failed? You mean like they tried to issue a stablecoin?
Venezuela, I can double check this. We actually did some writing about this when the protests in Venezuela were happening at Palladium. But I believe Venezuela had tried to get into the crypto space because their own currency was essentially useless.
You're talking about the Petro.
The Petro, yeah, that's correct.
Yeah.
Oh.
I mean,
and in that case, like a country that didn't have influence or clout or wealth was not able to get anyone to use their currency.
Yeah, I mean, I think the Petro was more of I'd want to say like a PR stunt than anything else, and I think there's been quite a bit of coverage around this. That, well,
So I mean, was it live? Was it issued? How was it distributed?
Yeah,
I would have to. I'm not super familiar on the details of how its experiment was done.
Actually, Patrick had a question. Go ahead.
So
Sure.
a little bit off of this topic specifically, but I was just curious to know, like, what you think the repatriation of supply chains to Western countries, what the impact of that might be on how Western countries organize themselves fiscally, and how they're able to draw on their tax base, if that changes the tax base.
Sure. Yeah, I mean, I think we are, like, quite frankly, going to see the end of a fiscal policy focused essentially on keeping the deficits as low as possible. And there's maybe two distinct reasons. So governments that are coming out of more populist style origins obviously have an incentive to build up legitimacy very quickly. But governments, and so I'm in Toronto, and the Liberal Party government here under Justin Trudeau, for the first few years of its first government, basically said that we are going to run deficits and focus essentially on investment. And, you know, after essentially 10 to 15 years, where I think the model of deficits first and austerity in Europe, like, this has delegitimized itself. So, you know, with this added spur now of wanting to bring back supply chains, I think that states are going to start looking at spending more through the investment lens, which maybe makes sense, right? Like, if you're just doing QE repeatedly, you're devaluing your own currency. But all you're really doing is supporting a bunch of zombie industries like the banking sector, for example. Whereas if maybe you're willing to spend to actually start building hard industries or rebuilding hard industries, then that is how investment works. Do Western governments have the long-term planning ability to do this? I think that's a different question. I'm a little pessimistic on this, but maybe we'll get surprises.
Cool. Thanks.
Yeah, no problem. I'd be interested, if we want to keep the discussion going for a little bit, on the crypto end, because this is something that I personally haven't looked at as much when doing this research. You know, I think a lot of the crypto discourse has been around, you know, or routing around government, like official currencies, or around central governments. I'd be interested to hear if people think that if we do see governments getting into this space, whether they're, you know, the legitimacy that maybe this lens will actually be successful or not. I think I've seen Russia had also, you know, had discussion going on about the same topic. I'm not familiar if they're actually doing anything on that front.
Right. Yeah, I think it's a great question. There's a lot of different, I think, like, having a central bank or like an issuer or some currency involves so much trust, then even though citizens might dislike governments, it probably is the best source of trust. There's also Libra by Facebook, which is a giant tech company.
Mm-hmm.
So what do people think is most trustworthy? Like a private company who's kind of known for not being perfect with privacy, or a government that they might not trust, or maybe like a completely outsider alternative. Like we've seen MakerDAO, which is a company issuing a stablecoin called DAI, which is backed by ETH. So we can say like they almost adopted the Ethereum standard, like a reference to the gold standard. But even then, like they will probably struggle to get as much traction as the distribution that the government or Facebook can get. So it would be really interesting. Sure. I think most consumers perhaps do not care as much if it brings utility to them. And so if it's widely accepted and it's easier to transfer, and maybe governments have some incentives like a tax reduction if you're using those currencies, or I'm not sure what to imagine. But I don't think, like, you know, Facebook has a lot of privacy concerns amongst tech-savvy people, but still usage remains super high, especially in Instagram or WhatsApp. So I don't think that trust in institutions is a huge problem towards the adoption of cryptocurrencies that are government-backed. So that would be my take on it.
Interesting. I wonder if it might not be more useful to basically think of, you know, some of the largest companies in the space as being more similar to states rather than small startups, right? Like the sort of just global geopolitical power that Facebook has, for example. Should we really be comparing this to like some small tech startup, or should we be comparing this to the stuff that countries can do?
Yeah, I would argue for the latter. And I think most of Silicon Valley think they are above governments, especially as like Facebook has more users than any country in the world. This makes sense. And
Yeah,
I would
I think it's a very good point.
Just look at the situation with Amazon right now in France. Like this is textbook what you're talking about. So in recent weeks in France, Amazon, so the high courts basically said that Amazon could no longer operate their logistic facilities in France because they had not respected social distancing guidelines and had not implemented policies that would protect their employees. And their response to this was basically, well, you know, we're sorry that the French government thinks that we shouldn't operate in France anymore. So, well, you know, you're just going to keep getting all your stuff and you're still going to be able to receive all the things that you order. Meanwhile, in the background, they're just shipping from Italy or Germany or the UK or anything.
Of course.
Delays are slightly longer, but people are still getting their.
Yeah, I mean, Amazon is particularly interesting because if you look at the actual corporate structure of the company, it seems to be almost ready to be challenged by states. Like its team model and the distinctions between departments are pretty much, as far as I can tell, such that like if the US, say, went really ham on the antitrust front, Amazon could pretty much split up into a bunch of different companies and then continue operating more or less the same way.
Really? I wasn't aware of that.
Palladium has done some work on this as well, and I think that if we see companies, because Facebook to me seems like a company that has always been really hesitant to think too much like the organization that it actually is. You know, when you see Zuckerberg speak about these issues, Twitter is a little like this as well. Although they're so politically relevant, they really try to, you know, maintain the stance, well, we're just platforms, we're just, you know, we're providing a service, we're basically companies. Amazon seems to be a little more ambitious. I mean, when you're talking like Jeff Bezos getting into like the human space flight game, in addition to delivering like everything on Earth pretty much. This doesn't seem to be an organization that thinks the way that a normal company does.
Yeah. No, I think this very much reflects this idea that, you know, big tech companies are not just big tech companies, but they rival the sovereignty of states in some respect. And we've seen this with Amazon, we've seen this with Facebook, and there will be others, I'm sure. This is really interesting, but we're gonna have to end it there because we have our next speaker. Ash, you're more than welcome to stay with us. Actually, I think you probably enjoy this next talk by Jim Bianco. So I want to thank you very much for being with us and for taking.
Thanks again for the invite.
At short notice.
Thanks, Ash.
No worries. Have a good rest of your day.
Thanks.
Thank you. Hi, Jim.
Hi, how are you?
Good. So our next speaker is Jim Bianco. He is the CEO and founder of Bianco Research. Bianco Research is a research firm in the financial sector. They provide insights and analytics for the financial markets. They've been around for several decades, have decades and decades of experience. And Jim is a macro thinker, and he looks at high-level financial trends in global financial markets. I first heard him on the really excellent Macro Voices podcast that I recommend everybody listen to, because the wealth of information from this podcast is just absolutely astonishing. So it really helps you get a really deep understanding of what's going on in financial markets right now. And Jim's interview was just as interesting as any other episode and that they produce. So thanks for joining us. And today you're going to talk about the Fed. And actually, I wasn't able to pay much attention to this because yesterday we were on here all day long. But there was that Fed announcement yesterday. So hopefully we'll get to talk about that a little bit.
Yeah, thanks for having me. Make me feel old. I mentioned decades and decades of experience as well, too.
So go ahead.
Oh, okay. Let me talk about the Fed and what happened. Let me start inside out a little bit with the Fed. Yesterday they had their meeting. They didn't move interest rates. They didn't do anything of significance. But the only thing that kind of came out of it was a couple of things. One, Chairman Powell said that all the programs, and I'm paraphrasing here or summarizing, all the programs that they have, don't worry about the size of the program. If need be, they will increase the size of the program and make it a much larger if they have to. So assume everything they do is unlimited. Number two that he said is that they haven't started some of the programs that they've done yet. Like they haven't bought corporate bonds, they haven't bought ETFs, they haven't bought municipal securities. But the announcement effect has definitely helped the market quite a bit. It has really pushed the market up. And he did say, though, that they will do those programs eventually. Now, corporate bonds might come fairly soon as well. Number three, is as far as where the Fed is standing was, and the last major thought was, they are not in favor of negative interest rates right now. So don't look for the Fed to intentionally create negative interest rates. Now, the market might create them because remember, all a negative interest rate is a really, really high bond price. You like that technical term there? A really high bond price. If you trade well above the maturity price of the bond in excess of all the coupons, you get a negative interest rate. Now, the bond market could do it, but the Fed won't engineer a negative interest rate. So here's the question. Is the Fed making it better? And the answer that I think to that is, it depends on what you think the Fed should be doing. There are no atheists in a foxhole. There are no capitalists in a crisis. We can have this crisis, and on one level, and I'm sympathetic to all these views, and I'll give you mine too along the way. On one level, I can go a full Ron Paul on you. Government should be involved in anything. Failure is part of capitalism. You got to just let everything shake its way out. And yet with a pandemic like we've had now, with 30 million people filing for unemployment insurance in the last 6 weeks, which is an astonishing number to try and get your head around, the economy could very well collapse. Now, on the other side of the equation, if you want to do like Donald Trump says, well, we'll get past this and then we'll go right back to where we were and we'll boom like we've never boomed before, that is suggesting that there will be a complete status quo and there will be no change to anything, except we're just going to bide our time and wait out this pandemic. That's a mistake too, because it's apparent things are going to have to change. It is apparent we're going to need to see the economy bend and fold. There's going to be changes to the supply lines. There's going to be changes to the way that we work. This format that we're in now, working at home, might be very well a permanent feature from here forward. Maybe not every day, but some of the days as well too. We need to basically have a very serious question as to, why is it that every downturn we have to bail out the auto companies? Why is it that every downturn we have to bail out the airline companies? Why don't we allow new thinking, new ideas, different ways of doing things in some of these industries? By constantly bailing them out, we preserve the status quo, and the status quo is what gets us into trouble as well too. So if the Fed's attitude, which I don't think it is, was big changes coming fast, a lot of people are going to just get washed out to sea, let's try and help manage the process of change. Okay, that's one thing, but allowing it to happen. Or if their attitude, which I really think is more likely the case, let's not change anything. Let's just print money, borrow money, and let's keep going until we get past this pandemic, and then we'll just go right back to where we were before and nothing needs to be changed. That's a mistake. That doesn't allow the organism of an economy to, get rid of losers and encourage winners. Look, the whole purpose of capitalism is to take money from bad ideas and give it to good ideas. And right now, we don't seem to be doing any of that. We're giving money to all ideas, is what we're doing now. Is a little while ago, Boeing raised $25 billion. Could Boeing have raised $25 billion if there wasn't a Fed backstop behind it? I have my doubts, but nevertheless, there is a Fed backstop, and they did allow a company that reported negative airplane sales next year. Yes, they had more cancellations than they sold planes last year, to raise $25 billion to stick around for, I assume, more negative airplane sales as well too. So we're not allowing that kind of change to come down the pike as well. what are the concerns that I have with what the Fed has been doing? The biggest one I have is with the bond market itself. And these numbers are really hard to get your head around. So I'm saying this so when you hear me, yeah, you're hearing me right. Since March 13th, 6 weeks, the Fed has bought over $1.5 trillion worth of securities, $1.5 trillion in 6 weeks, approaching $2 trillion. That would have been an eye-popping year, and they did it in 6 weeks. Yet during that 6-week period, the 10-year Treasury went from 62 basis points, 0.58%, to 72 basis points, excuse me, 0.58, to 60 basis points, down 12 basis points. That's nothing. Why is it that with world record buying, bond market can't move? The answer is, I think, is what you're seeing is that everybody else is liquidating their portfolios to the Fed. Oh, so they're all going to risk, and that's why the stock market's going up, and that's why Boeing is getting their deals done to some extent. But a good part of that money, over $1 trillion of that liquidation, has found its way into money market funds. So by going into money market funds, a number of these people are expressing more fear than they are expressing a willingness to take risk as well too. So I think it's really the question you have to ask yourself is this economy, what state of change are we in the economy? If you want to view this like a hurricane, it comes in, it floods a lot of basements, we have to do a lot of cleanup, and then we go back to the way we were. That's one way to look at it. Or if you want to look at this as Peter Schiff likes to say, that COVID was the pin, but the bubble was there waiting for a pin, and quit analyzing the pin and more analyze the bubble, meaning that we're going to have larger changes underway with this as well. I'm more into that camp, that we're going to see bigger changes as well from that camp. So why is it then that everybody is liquidating their portfolios to the Fed? Ultimately, I think that there is a fear of a malinvestment, and there's a fear, and that malinvestment is the Fed, by holding interest rates too low, stimulating too much, that while in the next year, we will probably see more deflation than inflation in the next year as the economy reels from the shutdown and however long it takes to restart. After you get past that, I think the market is looking at large deficits for many, many years and or inflation. And that's why the bond market has been struggling, even though it has had record buying. And so I've been a bond bull forever. And I think now that the 39-year bull market in bonds ended March 9th, maybe we retest it as we go from here. What next for the Fed? Two things. The stock market sold off 34% peak to trough in 6 weeks. A lot of people are now saying that was it, that was the bottom March 23rd. Let me restate that. There will be no bear market rally. That we had a straight line sell off. That was it, and the bull market started on March 23rd. If that's indeed the case, this will be the first time that I can find any bear market that has never had a bear market rally. Bear market rally usually is what we're doing now. It's not uncommon for a stock market to retrace 50% or 2/3 of the previous advance, only then to go back down the low. The previous advance is supposed to, what it's supposed to do is get people to stop thinking that the low is that there's going to be a retest, which it largely has, because it seems like the consensus view is now that's it, it's over. The Fed is genius. Give Paul the Nobel Prize in economics. He single-handedly saved the economy. He single-handedly saved the stock market as well too. That's what it's supposed to do. And yet the rally doesn't look like anything special as well. If there's any nuance I would give to the rally, the US market is outpacing small cap US stocks and foreign stocks, the EFA index. And yet the Fed has actually printed more money than everybody else. So I think that that's what's been driving this market as well too, is with the Fed. So I suspect that we're going to get some kind of a retest. I suspect the retest might be sooner rather than later, because what you've got going on right now is there's an old saying in the markets, right? You buy the rumor, you sell the news. Well, the rumor we were buying was we're going to restart and it's going to be okay. We're going to restart and there's going to be a cure or a therapeutic or a vaccine or all of the above as well. And now we're at sell the news. We are restarting. Georgia, the state of Georgia, opened up its restaurants and businesses starting Monday. Next Monday, Texas is going to do something else like that. By mid-May, 2 weeks from now, half the country will be started up, and some of the European countries will be started up too. Now we're going to see the reality. We can always spin good yarns about how great it's going to be and how much we're going to boom when we start. Now we're starting. And there's no more reason to spin yarns. There's only reasons to measure it now. And if the measurements come up short, people are afraid to go out. People are afraid to make orders. Businesses want to start working, but if they got no orders, they got no business. That's what happens. I think the disappointment sets in, and that's what gets the market to roll over. Last thought for you, and then I'll open it up, Sebastian, if any questions anybody has, is will the Fed buy stocks? That seems to be the favorite question of everybody. And the answer I'll give you is not unless they're dragged screaming and kicking, and that might even be enough. They really don't want to do it. And they don't want to do it for a couple of reasons. One, they don't want the political blowback. Let me give you a quick little nuance on this. So currently the Fed is buying corporate bonds. The Fed can't really buy corporate bonds. So what's happening is Congress, through the support packages, the $2 trillion bailout stimulus bill, or whatever we're calling it this week, allocated money for the Fed to buy corporate bonds. So they set up a special fund. It's been funded by the taxpayer through the Treasury, and the Fed is providing the financing, and they hired BlackRock to do the trades. So all the Fed is doing is they're being the financier in it. In reality, the buyer is the US Treasury. The buyer is the US taxpayer. The Fed is now in bed with the Treasury, and they've completely lost their independence, at least at this point, as I see. They got a letter from Maxine Waters, a Democrat congresswoman from California, saying that if they want to allocate any of these funds to any of these financial firms to help them, that financial firm needs to have employee representation on their board. They need to have a $15 an hour minimum wage. They need to have all of these other rules and all of these other policies in place. Now, those are fine. Those are political goals, and you can agree or disagree with them. But the point is, the Fed is going to get caught up in political goals, and they are right now. If the Fed buys stocks, they're immediately going to get pressure from Congress. All right, Jay, now that you own a bunch of stocks, here's the type of person we want you to vote for on the board of directors. Somebody who agrees with the New Deal, disagrees with the New Deal, is in favor of family leave, is in favor of this, or isn't in favor of that. And it will become so politicized. In fact, Fed, not only that, we want you to divest yourself of energy stocks because we don't like them. We want you to buy solar companies because we favor those, just to pick one of many types of examples. So they don't want to buy stocks. What they probably will buy is ETFs. They might buy spiders. They might buy cubes on the next downturn as well too. But I don't think that they're actually going to buy stocks. So really, the question is, what should we be doing? Should we be doing nothing and letting 30, 40, 50 million people go unemployed and play some big version of the Hunger Games? Should we be trying to hold everything together, still every day come in and still say it's still January 2020, let's just try and put January 2020 back together? Or should we maybe find a middle ground and say, look, world has changed. Deglobalization is coming, de-risking is coming, work at home is coming. These are going to mean enormous changes to business models. Companies will fail, other ones will sprout up. What we want to do is help the transition, and as opposed to prevent the transition. And I think right now what the Fed is trying to do is prevent the transition. So are they making it better? In the very short term, there's 30 million people that are probably going to be happy that they're there. But in the long term, I don't think they are. Sebastian, you there? I think that's what I've got.
I'm here.
Let me open it up for questions.
Sure. I'd like to maybe address some of these things here, so one thing that you mentioned where I thought maybe we could deserve some clarity is around the bear market rally. So for other laymen such as myself, can you explain what that means and what are the implications here?
Yeah. So the larger trend of the market is what? And I think the larger trend of the market is down, meaning that March 23rd's low was not the low for the entire move, that there's a lower low coming. But since March 23rd, the market has been rallying. It has retraced or recovered about 60% of the losses that it took before that. That's fairly typical. If the market goes back down to its previous low or a lower low, then the primary trend will have asserted itself. And what this rally was it was a bear market rally. It was a rally within a larger downtrend. And that is very common to have these big, sharp, short in days rally, to make it very difficult to try and short the market all the way down, because you wind up having these kind of rallies that kind of get in the way. If, on the other hand, the February 19th to March 23rd sell-off in the stock market, 5 weeks, 34%, was it, and it's over with, then there is no bear market rally. We're in the 5th week of a new bull market. That's never happened before, that you've actually went down once and it was all over with. You didn't we have like these stair steps on the way down. So I think what we're doing is we're just building a stair step to lower stock prices. And this stair step is gone up high enough that it's made everybody doubt that we're going to go down. And that's basic contrarian opinion. And that's kind of the way you want it. How's that? Does that help make sense?
Yeah, absolutely. Yeah, that makes a lot of sense. And thanks for clarifying that. From the point of view of, I've written down a bunch of questions here. So from the point of view of, like many states coming back online and coming back to work and opening restaurants and things like that. So I'm here in Europe and France, where we have a sanitary situation that's quite dire on the sort of scale of countries and how COVID has affected us. Certainly not at the same level as the U.S. at the moment, but if there were to be, and I personally think that it's quite likely that there's another peak in the pandemic. If it happens that there's another quarantine at some point where we have to shut down again, and perhaps we have to shut down 2 or 3 times because of these false starts, like we want to start the economy again, and there's pressures to do that, but in fact what's happening is we're just making the problem worse and worse and worse. What do you think could be some of the longer term trends on the economy, and like how low could things go if, say, in 3 months from now, or around Christmas, like we have to shut everything down again?
If there's a reinfection rate or a second wave, I think it would be devastating for the economy. And I'll give you there was a story yesterday in Bloomberg, and they quoted Jess Staley, who's the CEO of Barclays Bank. Barclays Bank has a big building with thousands of people in it, 50, 60 stories in Midtown Manhattan, like hundreds of other companies have. They're looking at the social distancing rules that are going to come down the pike. And one of the social distancing rules is going to be no more than 2 people in an elevator at any one time. It's not possible. It's not possible to either live or work in a high-rise building with 2 people in the elevator at one time. The only reason it's working with residential in New York City is about 1/3 to half of the population of New York City is left already. So what Jess Staley of Barclay said was that, look, here's this giant multi-billion-dollar building and we got many, many floors on it. We might never go back to that building. Now you might think, oh, that's kind of alarmist. It might be, but if there's a second wave, then you can look, whether it's Paris or New York or Chicago, where I'm at, and you can look at all the big high-rise buildings and go, they're done. They're not, no one's going to want to live there. No one's going to want to work there. You can't get on the subway to get there. You can't get in the elevator to get up to the floor. You can't work in close proximity of everybody else. That's why I think if there's a second wave, it will fundamentally change the way we live in urban areas and the way that we work in urban areas. And there will have to be a big rethink. I think what we're doing right now is going to be permanent. I think, not every day permanent, but every day you go to work, there's going to be a certain number of people that you're going to communicate with that used to be in the office next to you, which are now going to be on your computer at home via Zoom or something else. And you're just going to keep rotating through and in and out of the office.
Yeah, no, I really agree there. And I think that, it's the likeliness of a second wave in a lot of places, like in Europe or in the US, is probably quite high. And that if this does happen again, and fundamentally our urban living situations, living in big cities, just has to come apart, and people start moving out into smaller secondary cities or into the country, as is predicted by like a lot of analysts and things like that. That like there's really going to be a fundamental reset. It's not even like what happens to the economy. Is just everything gets reset. Like our entire mode of life gets reset on a really fundamental level. And also the remote aspect, if the tools and also the behaviors and like people's ability to work remotely become more widespread, I mean, then really it kind of puts into question the entire premise of living in a big city. Like, okay, you live in a big city for many reasons, perhaps, like I live in Paris because I love it here. There's a lot of culture and everything, but at the same time, I live here because there are opportunities here and I want to be physically close to those opportunities. Same reason why people go to Silicon Valley or anywhere else. If we have the tools and if remote work becomes commonplace, well, that in itself kind of falls apart, and there's really not that much of a need to live in a big city anymore. And I think like just at a more like societal level, that just...
Yeah, I mean, exactly. I mean, you look at the big cities, and you ask the question, right? Why do you live in the city? Because there are things that you like to do, which almost always involve large gatherings of people, whether it's a restaurant, whether it's entertainment. So you're in Paris. So I'll boil it down for you. When is the next Roland Garros finals going to be in front of a packed stadium? Is it going to be this fall when they do it? Is it going to be in 2 years? Is it going to be never? I mean, that it's only going to be a televised event in front of a few people at some point. These are the type, and if you can't do that, and you can't go to a restaurant, and you can't go to theater, and you can't go to a big office building with lots of other people to work with, and you can't live in a high rise with other people, what's the point of living in a big city? So there is going to be some kind of a big change. Now, I'll tell you right now, what some people are trying to think about is that everybody's hoping for the big Hail Mary pass, an American football term there, and that is the vaccine. And I'll just make one quick comment about a vaccine too.
We've had talks about the vaccine here, and
yeah. So my only comment is, how many coronavirus vaccines have been developed in the history of medicine? 0. They've never developed one in the history of medicine. Now, the argument is, well, they've never really been under the pressure to develop one like they have now. I kind of disagree with that. That doesn't mean they can't develop one right now. But I think what we're really hoping for is kind of a prayer. Oh, don't worry, that we'll find something that we could all, oh, good, we get the vaccine, we inject ourselves, we could just go right back to the way that we were before. If that happens, it happens. But the track record in developing coronavirus vaccines has not been very good.
Yeah. All right, we're going to go to questions now. I'm kind of hogging you here, but we're going to go to questions. So if you have any questions that you'd like to ask Jim directly, just raise your hand. Otherwise, we'll just start reading them here. But it's always better to get people on the microphone, I feel. So raise your hand if you'd like to ask directly. Okay, so I guess people are a little shy today. So
I don't bite. You can ask.
I'm just sorry.
There's actually many questions in the Q&A. There's over 10 questions.
Oh, okay, so we've got some people here with their hands raised. So I hope I'm pronouncing this right. Abhay, go ahead. You have the microphone.
Hey, can you guys hear me?
Yes.
Hey, so I had a quick question. So back in the 70s, as you guys probably know, there was an oil shock, and that caused a huge supply shock, but it also caused the prices of everything to go up, which further caused like a demand shock. And in response, the Fed lowered interest rates and they pumped money into the economy for pretty much all of the 70s. And this worsened the stagflation. And in 81, I think it was 81, we had a new Fed chairman, Paul Volcker, and he had to step in and jack interest rates up to 20% to really reset the economy. And though that was bad in the short term, that's what has led to the last 50 years of economic growth, in my opinion. And it has all in that, like, interest rates have only gone lower and lower. Now we're back at zero, and I feel like we're at a bifurcation where it's either like we can jack them up again, or we can go into and do what the ECB and the Bank of Japan have done and go into negative interest rate territory. And I was wondering, which way do you think, as far as interest rates go, that the Fed could go, and how long can we keep things at zero without some further action? And do you see any parallels with what happened in the 70s?
Well, the 70s were kind of the opposite of what we've got going now. But to answer your question directly, Jay Powell yesterday said no negative interest rates. Now, the problem with negative interest rates, it sounds great as a borrower. You know, Donald Trump is all in favor of negative interest rates. Why? Because he's a real estate developer. And somebody told him, here's the deal. You borrow a lot of money from the bank and the bank pays you a dividend or pays you a coupon payment every month. Wow, what a great idea. I borrow money from the bank and the bank pays me the interest payment every month. The problem is the financial system is not set up for negative interest rates. It was not designed with negative interest rates in mind. It doesn't work properly. Europe has negative interest rates, but Europe has a big out because the US never had negative interest rates. And it's the reserve currency, so they could kind of lean on the positive cash flows, positive interest rates of the US in order to keep them going. So I don't see negative interest rates as being a policy that they want to pursue, nor should they, because I think it would be very painful for the financial system. At the end of the day, crippling the financial, hey, look, you can call them banksters all you want, and you'll get sympathy from me, but crippling the banking system is not going to make things better. And that's what you risk with negative interest rates. What more can they do? I think what they're doing now, they went to zero in interest rates, and now they're buying everything. They're buying treasuries, they're buying corporates, they're buying commercial paper, they're buying ETFs, they're buying municipal bonds. They can expand those programs by buying more, or they can expand those programs by buying other assets. That seems to be the road that they're going down. And if you looked at the announcements today out of the ECB, they seem to be going sort of down the same road. Now, the ECB's got negative interest rates, and the problem there is, you know, they can't admit mistakes. So they didn't touch their interest rates. They left them at minus 50 basis points. But then what they wound up doing after that is they wound up adding a bunch more borrowing programs. So they're going to buy stuff is what they're going to do. I ultimately think if they do enough of that, that on the other side of this, you'll probably get some inflation and higher interest rates in the long term. But over the medium term or so, I think you've got, the risk of deflation. And over the medium term, we're going to see investors do what many of them said to me: co-invest with the Fed. Is that the game everybody's playing now is they're trying to front run the Fed and trying to buy what they're going to buy right before they buy it and sell it to the Fed at higher prices. Hope that got to your question.
So we have another question here. Jim, a big fan of your work. How do you frame the stimulus in terms of big buckets? How much is liquidity? How much is asset liquidity? How much is just adding debt? And how much is grants or government spending? And how do you frame what this means for the market?
Okay. if I had to put it into those terms, in total, something like about $6 to $8 trillion of total stimulus has been announced. Of that number, maybe 2.5 to 3 of it has been government programs, so that we're going to borrow $2.5 to $3 trillion, and the other 4.5 or 5 or so of that is been promises by the Fed to expand their balance sheet, which they've already done 2 trillion of that already. By the way, if you want to put those numbers in a different venue, they have promised either through borrowing or through printing the equivalent of about 4 years of income tax receipts as well. A lot of that money that the government is borrowing is going to go towards grants, conditional grants, where they're going to basically, it starts off as a PPP loan, you know, a payment protection loan. And then if you meet certain criteria, which are not hard to meet, which is basically hire your workforce and don't fire anybody, then they'll forgive the loan and you get to keep the money. As far as what the Fed is doing, they're in the process of through these special purpose vehicles financing the purchases of securities. Although, as I mentioned at the top, they haven't gotten to some of these programs yet, like the corporate bond program, but it's coming. If the Fed maintains the policies that they've had in the past, they will never sell them. They will never sell them. They will hold them until they mature. That's probably one of the reasons why people have asked, why is the Fed focused so short term? Because they don't want to sell them. They don't want to buy 30-year bonds because they don't want to hold on to them for 30 years. They want to prefer to buy 4-year bonds or 3-year bonds or 2-year bonds, because then they can get rid of them in a couple of years through a natural maturity process as well too. But they're hoping that by providing the liquidity that they're going to give support to the market. Now they have because the Fed's in there and everybody's co-investing with the Fed and everybody's running with the Fed right now. The question you have to ask yourself is, if the Fed wasn't there, suppose is in the next minute, a headline came across our screens and it said, Jay Powell changed his mind, cancels every support program the Fed has. What would the markets do? They'd crash like 1987. I don't think that's a very controversial idea as well too. And so they're artificially supporting markets higher than they would be otherwise. Their hope is the economy restarts and whatever the fair value of the economy is, rises to their artificial support and justifies it. But if it doesn't, that's where I think that the bear market rally ends, is that we know the market, I think, is higher than it would be normally. We know it's overvalued, but hope is a powerful thing. There's this, you know, that there will be a restart and things will get better. Well, it hasn't started, but we know it's coming, so we can imagine whatever we want out of it. But now that it's upon us right now, the question then becomes, what does it look like? And if it doesn't look like what you know we think, it's going to be slower, it's going to be less robust, then I think the market could go down. So the Fed is trying to support prices by buying them. The government is trying to hand out money in the form of a loan, but actually it's more of a grant. Eventually that loan will be forgiven. Hope that answered that question.
So there's a couple of questions about digital currencies, and we've talked about this before, you and I, and so, you know, here is one question. We're seeing China experimenting with digital currencies. The Dutch are considering one too. I didn't know about that. You know, how would a non-central bank digital currency have to evolve to become a reserve currency? So I guess here we're asking about, you know, potentially Bitcoin or stable coins in DeFi or something like that. And maybe you can also address your thoughts on central bank digital currencies as well.
The U.S., as far as fiat land goes, the U.S. dollar is the digital currency. I'm sorry, is the reserve currency. There is no fiat currency that will replace the dollar. The yuan is not convertible. The euro is not big enough. The yen is not big enough. And then they all get smaller after that. Taking all of the warts out of your fiat currency and creating it to a digital currency, you know, a digital yuan or a digital euro doesn't fix that problem. The next reserve currency will be a crypto. It will be a non-government crypto, I believe. Now that I've said that, I don't know if it exists yet. I don't know if it's coming, if it's already one that we already have, and it still might be many, many years away at that point. How do I think it's going to evolve? I'm in the US, and I can tell you in the US, my perception is that when it comes to electronic payments, the US is woefully behind everybody else. That the rest of the world really accepts electronic payments. I believe in Europe, it's Sweden is probably out there. And in the third world countries, if you look at Kenya with M-Pesa, there are more people that will accept digital payments through their phone one-on-one in Kenya than there is in the United States. So if you ask me how a digital currency, non-central bank currency is going to come about, some non-governmental, non-backed currency is going to come that is out of the reaches of a government. And it's going to take hold in the rest of the world. And it will come to the US last, is what it will come. But by that point, it will be so big and it will be so important that it will be impossible for them to ignore it at that point. So I think that that's how you're going to get a digital currency in order to become the reserve currency. Now, it needs to do two things at the same time. It needs to be both the medium of exchange and a store of value. So it needs to have some kind of a platform on it that can satisfy, if need be, several million, if not tens of millions of transactions a second. And it also needs to have something like a stable coin has, of some kind of a store of value. It cannot do like Bitcoin is doing, you know, where it was yesterday, it rallied $1,000 in an hour and a half just because it has. No one is going to want the currency in their pocket in order to have that kind of extreme movement from hour to hour. So the idea is there. And I think the idea is there, but we just haven't worked it out. I used to, for a hot second, think it might be Libra. And I'm not so, sure, but I do think I wasn't the only one that thought that, because when they announced Libra and they sent Dave Marcus up to the Hill, boy, the congressman just jumped down his throat. And that's because he came up with an idea that was going to compete with them. And, and it was so funny because I used to joke, it was the members of the House or the Senate Banking Committee or the House Finance Committee that were grilling him about this. Yeah, because the legacy banks in the status quo are giving these congressmen tons and tons of money to maintain that status quo. And how dare you come in and upset our gravy train? That's why it can't come out of the US. It's going to have to become so big everywhere else that it's going to be forced upon the US. But if you look at the way that electronic payments are accepted in the rest of the world, it's there. If you can create the right structure, that structure will be adopted by everybody else, and then it will have no choice in the US at that point. Follow-ups to that? Any other questions on that subject?
Yeah, sure. We got lots. You have about 5 more minutes because our next speaker's starting at 3/4 after the hour.
Sure, I can go right up to them.
Okay, cool. So it's so the economy will eventually test the low. Additionally, the fact that we will likely see everything sell off as a result of leverage being deployed into this rally, along with your analysis that bonds are on thin ice as well. So the question is there a safe place to hide, or would you advise a continuation of the shorting the market by staying in bonds and cash?
As far as a safe place to hide, the answer is there I always interpret that question to mean, is there an asset class that you can hide in that should perform relatively well? Well, the obvious one is cash. It won't return you anything except all your money. It's the return of money as opposed to the return on money as well. So that's one. The second one, in terms of asset classes, I would argue is gold. But the problem with gold is it's so financialized. why do you buy gold? For the same reason you buy Bitcoin. It's supposed to be a way to get your money out of the financial system. And then what do people say? Well, I just bought GLD. GLD, you're still in the financial. Go buy Tesla. It's the same thing. You did not get your money out of the financial system if you bought GLD. Go to a dealer and buy coins. That's how you get your money out of the financial system. And guess what? The premium that physical gold is trading over the spot price on the exchanges is at a record. And a lot of the dealers are finding that coin dealers and gold dealers, they're running out of the physical price. I ultimately think that will be a play as we move forward, will be that the get your money out of the financial system play of gold will work. But like I said, if you're going to think that you're going to play that with futures or GLD, you're just a step away from Tesla. You haven't accomplished what you're going to accomplish. What about a crypto? Crypto is not going to work either, because I can put my money in Bitcoin, but I can't do anything with Bitcoin in reality until I exchange it back to dollars or euros or something, and then use it for something that I need. Once people start accepting it so that I could get my money into the financial system and not have to go back to it, it would definitely work. Now, as far as, so that's the asset classes. It'd probably be cash number one, gold number two. That's asset classes, because I don't think bonds are going to be a good return. I don't think stocks are there yet. As far as opportunities within the asset classes, sure, there might be some opportunities within the asset classes. If you like some of the consumer staple stocks, if you want to make a case that there might be a low in energy, I think it's still too early to be looking for a low in energy as well. I think that the healthcare stocks are overdone and that they might be a short right now as well. But those are more trading ideas than anything else as we go forward from here. There is some select electronic platform companies in the financial sector like TradeWeb and MarketAxess that I've been high on for a long time as well too. But again, those are trading ideas. But I think your question was more about asset classes. And right now, with things so in flux and so many unknowns coming, and the big unknown coming is going to be, how does the restart look, and does it work, and do we have a reinfection? I think you're better off just worrying about the return of your money in something like cash, at least for the next several months. Seems like the best idea.
Or buy stocks of companies that are making safes.
Right. Well, there's always going to be that idea. There's always going to be, individual ideas up and down the line all over the place.
Yeah. Okay, I think we can probably do one last question. What is your outlook on earnings over the next year? Are we likely to see the 50 and 80% declines that happened in the tech and housing bubble?
Yes, earnings. Clubber Lang from Rocky 3, what's your prediction? Pain. That's what my prediction is for earnings. As far as 50 to 80% declines, we're already predicting that the second quarter earnings, the quarter we're in now, which will be reported in July, is going to be down 35% from a year ago. So we're getting into the ballpark of that. The analyst community has already announced they are going, well, they didn't announce, but they're going to be slow. They're going to be slow to getting the earnings right, because a quarter of the S&P 500 companies have cut off their earnings outlooks. Nobody wants to go out and hack their earnings call without justification from the company. They don't want to get the company mad. And if you're an analyst in a company, the dirty little secret is it's not just you want to get the company mad. You don't want to get your customers mad. Your customers are usually fund managers. And the fund managers get upset with you. You're shitting all over my stock by cutting the earnings. Stop doing it and stuff. So you're going to want to cut the earnings when you've got obvious reasons to do it. And if the companies are not providing guidance, you're not going to get it. So they're going to be slow at dropping their earnings. Earnings are going to continue to fall materially. They are falling faster than the stock market has been rising in this bear market rally. So what's been happening is the market's overvaluedness has really been skyrocketing by the measures that people like to use, forward earnings and everything else. Stock market is getting pretty close to the 2000 peak in earnings. The excuse you'll hear is, yes, but we know that it's going to be a disaster for the 6 months or year. We're investing in what we think earnings are going to be in 2 years. And we see value based on 2-year out earnings. To which I've always responded, okay, show me a chart of 2-year out earnings going back 30 years. So I know when it's overvalued, when it's undervalued. It doesn't exist. So you've just made up a metric with no historical reference and then summarily said the market's cheap by this made up metric. I don't know if it is. You don't know if it is. But to your direct question, earnings are going to keep going lower. And I think that they're going to, because the analyst community is going to be intentionally slow at trying to cut their earnings. Yeah, we'll get to 50 to 80%. Yes, that by the traditional metrics, it will look like the market's overvalued. And the excuse you'll hear is, it doesn't matter what 2020 is going to be or early 21. We know it's a disaster. We're betting on where we think it's going to be in 2022. That's a made up metric. I don't know how that metric would have looked in 2008 or in 2000 or 1987. That metric didn't exist then. So I have no idea what is cheap or rich by that metric. So people are largely making up some of these valuation numbers.
We have actually one last question from our next speaker. So
okay.
Go ahead, Kriyan.
Oh, yeah, thanks a lot. Yeah, what you just said about the made up metric, I mean, I would echo that and ask it as a question. That would sort of imply that the entire market has one time horizon, which they're claiming is 2 years and you're claiming not so. I mean, don't people have all sorts of different time horizons, and we're seeing some kind of mix of guesses and time horizons in the pricing?
Yes, the market does have all different types of time horizons most of the time. But what's happened in this crisis, I believe, is everybody's time horizon has collapsed to the same thing for now. Everybody's looking, trying to say there's some period of time where everything's going to be a disaster. The second quarter, the third quarter, maybe it's part of the fourth quarter, and so that doesn't count. Nobody, don't pay attention to that. And then there's going to be some kind of a rebound. This is unusual that it's like this. In fact, it might be the only time it's been like this, other than extreme financial crises. And then once we get past this, people will go back to their old time frames. But it is interesting because if you read analysis and if you talk to people, and even me in my presentation, we all have the same argument, or I'm sorry, not the same argument, the same time frame. We that is the next couple of quarters are going to be really bad. And then hopefully the next few quarters or a year or two after that will be better. How much better will that be? And that's what we're basing our opinion on. But in normal periods, yeah, we're all over the lot from the next minute to the next 10 years. But right now, I think we've kind of all settled into the same time frame. That might explain the volatility that we see too, because we seem to have collapsed the time frames down. What's your take on it? You agree with that?
Me, who asked the question?
Yeah, do you agree with that?
Well, I'm not sure because, I'm not a big trader, although I'm interested, but I'd like to follow up with my take on it as a question, which is, does this mean in your mind that, strangely enough, there might be a longer term time horizon at play right now overall? Because, as you say, everyone knows it's going to be a disaster over the next few quarters, and they're looking out farther than that. Whereas normally most people are looking, if they're not high-speed traders, they're only looking at the next quarter or the next earnings report or something like that.
Yeah, I do think that there's going to be a longer term time frame at play, and I also think that what's going to make that longer term time frame difficult, and this gets to kind of my Austrian leanings. I think that if the market is allowed the creative destruction that it should, we're going to create new industries, we're going to create new companies, we're going to see a big turnover in what we perceive as the leaders of companies. I wouldn't be surprised if in 5 or 8 years, if you want to go way out, we're going to have 5 dominant companies, none of which will be the FANG companies today. There'll be some new companies that will come out of this. And so I think when people look to that longer term time horizon, I don't necessarily think that they're looking through the current list of available companies to figure out where that's coming from. Those companies don't exist yet. Those companies are still to come as we move forward from here. And that's where I think that they're going to start to focus on with that time frame. So the venture capital type, that's what keeps the venture capital money very popular. That's what keeps the startup money very popular as well too. Because in startup land, Roger McNamee, famously of Elevation Partners, once said that he became very rich with startups, but like 95 to 98% of everything he puts his money into goes to zero. and 1% of what he does put his money into goes up 1,000-fold, and it makes him a rich person. And that kind of investing mentality to find the next great idea, I think, is really where everybody's going to focus on it.
Jim, I want to thank you for your time and for these extremely valuable insights. And yeah, thank you so much for coming on. I think we learned a lot about what's going to be happening in the next couple of weeks, months, years. And, you know, hopefully we can have you on again for next editions of Reset Everything, because I'm sure we'll have some more.
Sounds good. I had a good time. Thank you. Bye-bye.
Thanks. Cheers. So our next speaker, well, you've already been somewhat introduced to, Creon Levitt, who is with us. And can everybody see Creon? Okay, I'm gonna go ahead and Creon Levitt is the Director of Research and Development at Planet. They're a firm that does satellite imagery. I was like on their website a couple of days ago and like downloading these super high definition photos of satellite imagery, which is really cool. And previously he was at the NASA Ames Research Center and has worked in aerospace for most of his career. So Creon, it's great to have you.
Yeah, thanks, Sebastian. I'm thrilled. Right, the title of my talk right now is called Potential Upsides of COVID-19. And my apologies if anyone has already seen me give an earlier version of this talk, but I've updated it now. I gave it like a long time ago, and some things have changed. And so, yeah, I decided kind of early on, why not, look at potential upsides. Everyone is wringing their hands and, afraid they're going to die with the virus. And so I thought, okay, there's enough of that. There's that famous "never let a good crisis go to waste" quote, who I can't remember who it's attributed to, but I was thinking, what are some things that might actually just naturally and with high probability occur that are good because of the virus, and what are some things that are maybe possible? And then also, what are some things that are kind of impossible, but unless we explicitly, go for it and try to make it happen, that the things that we could leverage in the crisis and make positive changes. So yeah, I'm going to present just like a sort of spectrum of ideas on this, and then hopefully we have time at the end where people can ask questions, or more importantly, give me new ideas I can steal, so that in the next version of this talk, I've got even more potential upsides that I can discuss. Okay, so first, a couple things before we get into the ideas. The first thing is that, as I said, only a few of these are original. Most of them are stolen, and I try to give credit where credit is due where I've stolen them. But if I miss something, do let me know if you know the source. The other thing is that every one of these quote unquote, potential upsides or good ideas or whatever, having to do with COVID, probably almost all of them have a shadow side. Like, you could run it the other way. There could be unforeseen consequences. Things might not work out in the sort of naively optimistic way I'm presenting, or maybe they're just a bad idea masquerading as a good idea. So I recognize there's a shadow to each of these potential upsides, but I'm not going to spend a lot of time on that right now, because there's enough good stuff to talk about, I think. Okay, and the last thing to say is that maybe normally my talks are more of a tutorial and scientific nature, and so they're lush with high resolution imagery. This is not so much. This, unfortunately, is mostly a talking head, because it's from textual notes, and it's a little more abstract, okay, and fast moving. So the ideas are going to be roughly classified into 4 categories, and sequentially we're going to go through them. One is potential upsides in the sort of technical, scientific, and medical fields. And that might be more of the bulk of the talk, because that's sort of where I live, is in technical and even to some extent molecular biology areas in the past. Then that'll segue into possible economic upsides of the COVID-19 pandemic. And these things overlap, and then that's going to segue into potential cultural upsides. And then that can segue into potential spiritual upsides, for lack of a better word. And, obviously these things are going to get a little bit maybe more far out and subjective. as we move through the technical to economic to cultural to spiritual spectrum. But nevertheless, that's how I've chosen to organize it. You got to organize this stuff some way. So just to say, so I'm an aerospace engineer and applied physicist. Work at Planet Labs, a satellite imaging company. I spent 32 plus years at NASA working on a whole variety of different things. But one of the interesting things is that a bunch of the work I did at NASA was on what's called quantum chemistry or molecular physics, or I was basically studying molecules, and then that got me really into molecular biology, which I didn't really do at for NASA, but I got really into it and started collaborating with a bunch of immunologist and virologist friends over many years now, and that's kind of ebbed and flowed, waxed and waned. But I did teach myself a fair bit of molecular biology, and particularly I was involved at first in it back in the late 80s, early 90s. So that's going to inform some of this perspective on what's going on now in an exact way. Yeah, and then curiously enough, my whole introduction to molecular biology back in the late 80s and early 90s happened to be because I was friends with a couple who were immunologists in Philly, and so I got interested in immunology as the first thing, and then that immediately I would say, well, I have to learn some biology. So I went to the library or to the bookstore, I think it was a used bookstore, and I kind of did the bibliomantic trance. Remember when we had used bookstores and you could go just walk around in them and figure out what caught your fancy? Well, that's what I did. And I reached out and I grabbed this book off the shelf called The Design of Life, which is by a famous virologist named Renato Del Becco. It's still a wonderful book. And it's a introduction to molecular biology, all of biology really, through the lens of viruses. And so he kind of uses that as his perspective to explain most of modern biology as it was in the late 80s and early 90s. So obviously a lot has happened, but a lot had already happened by that time. So anyway, here's the thing. And this is all this way background to my very first potential upside of COVID-19. Last bit of background. All this stuff was happening in immunology and virology, and one of the reasons was HIV/AIDS. Okay, so you have to remember, if you're old enough, or you have to just learn, or maybe you already know if you're too young, that AIDS was actually a much bigger deal in many ways than COVID-19. And that was because when it first burst onto the scene, it was viewed as an existential threat to human life, which COVID-19 is. No one would argue that it's an existential threat to all human life. AIDS was a disease that was 100% fatal to everyone who got it. It was transmitted through sex and from mother to child, which means it could be like if the species was going to procreate, and if AIDS was spreading, it would just possibly spread to everybody and extinguish the species. And it wasn't even known what really initially much about it, but what was known was that it was 100% fatal. There was no vaccine, there was no treatment, there was no cure, there was no exceptions, and it was spread, as I said, through sex and through childbirth. And so that looked like a serious threat. So for that and for other reasons, right, it was a challenging disease. It was a disease which seemed to be cutting down large numbers of people in the prime of their life, unlike, say, just hurting the old and the sick, which is a situation more like what we're in now. There was a lot of effort that started to turn onto AIDS, HIV. In fact, a great deal of the molecular biology and health science and public health and a lot of the whole disease studying, disease treating infrastructure of the world, like practically every lab was working on HIV/AIDS after a little while. And what happened? Well, there's good things and bad things that happened. The good things that happened are that our knowledge of immunology and virology and viral disease progress and vaccines and all this stuff just exploded because of all this work studying HIV/AIDS. And so a huge amount of the progress, which we're now leveraging, frankly, for COVID-19 and vaccines and the studying and the sequencing and all this kind of stuff, a lot of that actually happened or is available to us because of the giant worldwide work that went into AIDS and HIV. And that's the good side of what happened with AIDS, HIV. Kind of the bad side is, 35 years later, and thousands of labs working on this problem, there is still no vaccine for AIDS, HIV. So bear that in mind, everyone who thinks we're going to just stay locked down and cowering in our houses till there's a vaccine for COVID. AIDS, HIV is a very different disease. It's a harder disease, presumably, and a more subtle disease, but nevertheless, you have to wonder about this vaccine timetable stuff when SARS-CoV-1, probably the most COVID-like virus that we know about, that came along in 2002. People worked really hard. There's still no vaccine that's really spread. I mean, there's no vaccine that's been approved for humans as far as I know. Various reasons for that, but people did work long and hard. So everyone who says, we're going to have a vaccine in 18 months when the fastest vaccine we ever developed for a novel virus was a mumps vaccine that took 4 years, we should probably have a plan B, in my opinion, to, everybody wait and do nothing until there's a vaccine. So, but I'm supposed to concentrate on upside. So here is the upside that all this leads me to believe. And that is, I don't know if and when there'll be a vaccine for COVID-19, but what I do know is everybody in molecular biology, virology, immunology, public health, et cetera, biotech, all the startups, everybody has pivoted pretty much to COVID-19. So what we have is this gigantic, massive amount of money and resources and brain power and effort and communications going into solving this problem. Now, does it mean we will solve this problem because of some molecular biology techniques? Maybe not, or maybe not soon enough, whatever that means. But what it will mean is that there will be a new explosion and a new renaissance in understanding of virology and immunology and public health. And so that is going to serve us well into the future. With other pandemics and other diseases, we're going to pray, we're going to be thanking nature for releasing this virus onto us, a virus that, was not anywhere near as horrible as it could have been, but which basically focused the world once again on viral diseases and immunology and vaccines and treatments and antivirals and got us ready for the big one. And also just, may even give us a cure for the common cold and all kinds of things we've been kind of pining for centuries. This might happen because of SARS-CoV-2. So this first upside is kind of like there's going to be this explosion in understanding of viruses and immunology and related matters. And that's going to stand us in good stead, whatever the actual timetable for a COVID-19 vaccine might be. So that's kind of the first upside, and that's the longest one. So the next upside I want to talk about in the scientific, technical, medical realm is what I like to call, other people call the elephant in the room, and that is metabolic disease, okay? And I know this is a slightly controversial topic, and I've gotten a fair bit of hate for it on social media, but I just can't stop punishing myself by posting about this. So this is basically metabolic health, immunological health, and its relationship to the progression of influenza-like diseases, and in particular COVID-19. So it seems like the evidence just keeps coming, and it's pretty much overwhelmingly clear, I believe, and of course I have my biases, but it's overwhelmingly clear to me and to a lot of people who are studying this that your underlying metabolic immunological health has a titanic effect on the likelihood of serious disease progress if you get infected with COVID. So basically what it looks like is 90+%, maybe 92, 93, 94% of the people who end up hospitalized with COVID have underlying illnesses, which are basically metabolic illnesses like diabetes, hypertension, and obesity, to some extent other diseases, but those are the big ones, okay? A metabolic syndrome, there's a lot of things that are all clustered together. So if you're in the hospital with COVID, it looks like it's like 93 or 94% certain that you've got one of these metabolic diseases, okay? And if you die in the hospital of COVID, it is something like 97, 98% likely that you have one of these underlying metabolic diseases. And I conjecture, although I haven't done the data analysis on this because I haven't found the data in a transparent form yet. And I'd love any help from anybody who has access to actual records, tables of data, CSV files of individual cases. What I suspect is that if we correctly, I suspect two things I'm going to say about the data. One is that if we could include in the underlying illnesses category, which are officially noted as just certain major ones like diabetes, hypertension, body mass index above 35, and I think cancer and cardiopulmonary disease, or COPD, forgot what that stands for. Anyway, if you add to those 5 or 6 underlying illnesses in different jurisdictions classified differently, if you add pre-diabetes and high insulin and high blood glucose variability and metabolic syndrome and high IL-6 and high inflammatory markers and all the other things which are also tend to be correlated, you're going to probably, I would suspect, catch almost everyone. And what I mean is that almost 100% of the people hospitalized and dying from COVID are going to have, you're going to find out they have these underlying conditions. So why is that good? Okay, what that is good is because it is, I think, among many things, A, it's important to understand the disease, but B, it is a wake-up call, all right? Because the way I see it, I've been obsessed with this for a long time. We have had like this 30-year or 50-year slow motion unfolding train wreck of metabolic disease in the developed world, led, quote unquote, by the United States, where, we have like 40% of the people have diabetes, or 27% have diabetes, and 40% are predicted to have diabetes, and 70% appear to have pre-diabetes. And, projected over the next 30 years, we're going to have like massive numbers of people sick and dying and unable to work and be productive because of metabolic disease. This is what was kind of going to happen. I think most people who study this saw that. It's going to bankrupt the healthcare systems, whatever kind you have, whether you have socialized medicine or single payer or private, it doesn't really matter. It's going to bankrupt the healthcare systems in the developed world and hence bankrupt the governments in the developed world, trying to have a population whose significant majority of whom are disabled because of metabolic disease, and quite more frequently in the prime of their life, like in their 40s and 50s, when they should be super productive. Anyway, why is that a good thing? It's a good thing because COVID has, to some extent, compressed and accelerated this process. It's making these people, well, I wouldn't say it's making them sick, because still most of them don't get sick and die from COVID. But those who get sick and die from COVID tend to be from this cohort of metabolically ill people. And it is a wake-up call. It's like, here's how I look at it. If your doctor says to you, you've got to lose that belly fat and stop eating that junk food because if you don't, you have a 30% increased risk of getting a heart attack over the next 10 years. Most people aren't going to take action on that. They're just a 30% risk of one particular thing happening over 10 years is not really going to spur them to action. But if instead, because this data comes out and is talked about, that if you have metabolic illness, if you have too much belly fat, or you have too high blood pressure, that you have a 30-fold increased risk of dying alone on a ventilator next year when the virus comes around again, that's actionable. Like most people can actually reverse and even cure their metabolic disease in a matter of a few months. And so that means by next year, when we are told quite with some likelihood, this virus will come back during flu season, which is another whole story about sunlight and vitamin D. But that will wake people up. I think that is actionable. It's like, I can do something in a couple of months that will literally decrease my risk by orders of magnitude for if I ever get infected with another coronavirus, another deadly coronavirus. Okay. And by the way, probably it'll prevent me from getting influenza and colds and all these other things to a large extent as well. And oh, by the way, even if none of these viruses ever come back, it'll extend my health span possibly for decades. So this is an upside that we might be able, in fact, the way I like to say it is the COVID-19, the SARS-CoV-2 virus might end up saving more lives than it takes if we leverage this point about metabolic health being primary for survival of these diseases. So, especially if there's, in a way, it almost makes me hope there's no vaccine, because a vaccine will allow people to be lazy. They'll get the vaccine, and then they'll be like, well, I can just keep, eating potato chips and watching TV, and I'll be fine. So in a way, I'm kind of okay with there not being a vaccine if we can leverage the knowledge that metabolic health is so strongly correlated with survival and actually correlated with asymptomatic progression. Okay, so maybe that's enough for science and technology. Let's see, how are we on time? Remind me how long we have, Sebastian, because I want some time for discussion.
We have, good question. I need to just
till 1:30.
Yeah,
till
I think so. Yeah, so you started 45, so you'll have till 30. Yeah.
Okay, cool. So I'll be able to breeze through some more of this stuff more quickly, and then we'll have time for discussion. Okay, so yeah, I mean, normally I would be presenting like all these data tables and stuff, but it's not important right now. So here's okay. So here is a related. We're going to move now into maybe economic upside, potential economic upsides of COVID-19. We'll come back to the one I was about to say. Well, let's start with this. So we have been sort of engaged globally in this race to the bottom with production and supply chains and optimizing for short-term profit, right? We all know this now. We probably got over-reliant on Chinese suppliers of certain critical goods. Why was this? Because big companies could save a couple of percent by offshoring. They could make a few percent more profit by offshoring, and it was in short term, purely economic efficiency, not considering externalized costs such as possibility of disruption because of pandemic or other political problems. I mean, it made sense to do this offshoring if you are a CEO who has a legal fiducial responsibility to your stockholders. However, in retrospect, maybe this wasn't the best idea collectively or even for long-term profits. So I think that one of the upsides of the virus is going to be we're going to realize we probably want to optimize for some additional criteria in our capitalist systems and our businesses, for some resiliency, some redundancy, some defense in depth, some decentralization, and as well as so make sure all our supplies aren't like going through one critical place that, oh, by the way, in this case happens to be the place where all these deadly viruses have come out for decades and decades, or not all of them, but many of them. That exact region of China is where a lot of these bad diseases have crossed over, and it happens strangely enough to be the place that we concentrated all this manufacturing. So that's interesting, and it's probably something we want to learn from the whole world and change. Not that China's bad, none of this. China, very hardworking, very productive, made a lot of people a lot of money, brought a lot of people out of poverty into a middle class, but there is always it's a two-edged sword. So we need to have some more some onshoring, some domestic production, some inventory, like all this just-in-time stuff, in a way maybe has turned out to be stupid, especially if you have certain goods that are that won't spoil, that are like non-volatile, I guess if you call them, or non-perishable goods. Like maybe it makes sense to have them warehoused in places and not just have a just-in-time system where you never have any stores, because that represents unused capital or something like that. It might be that we realize that just in time we became over reliant on it, and it has a hidden cost. Yeah, this all goes into this kind of externalities, and maybe we've learned a few. Again, it's like climate change. It's hard for anybody to get serious about climate costs as an externality, because who knows how many decades it's going to take to hurt me. But viruses and pandemics, that's another matter. That's a little bit more in your face. And so perhaps this is an externality that we will start to pay some attention to and factor in, because it really can affect the bottom line, apparently, of these companies over, relatively short time horizons, especially when it's a disease as virulent as this one. So yeah, a lot of industries, medicine, durable goods, airlines, I mean, they're going to have plans for for these types of things and how to be more resilient. Now, a lot of people will say, oh, well, what are you saying? We just put the economy on pause every time something starts to infect people. And that's crazy. You know, you can't just stop the economy every year for a month. Well, interestingly enough, the French do pretty much. So it is possible to make an economy that really ratchets down once a year for a month if necessary. So that's a lesson to us, you know. Maybe we can, it's sort of tongue in cheek, but let's look at how the French do it, because
Indeed, we
they
do.
all go. Yeah. Okay. So then there's another this is another economic ramification or potential upside. Okay, and it relates back to this metabolic disease thing I was flaming about a little while ago, and that is that why do so many people have metabolic disease in the U.S. and in Western Europe and now in India and China and everywhere, whose standards of living are rising? To a large extent, it's a complicated thing. And let's ignore pollution for the moment. To a large extent, it's because of diet. It's because of the worldwide disaster of the health authorities, including the WHO and the CDC and all these people we look to for guidance. They have been promoting a low-fat, high-carb diet based on flawed studies from about 50 years ago, and they've promoted this diet relentlessly, telling people to cut out fats and cut out animal products and eat sugar and eat grains. And we've had just an explosion in all sorts of degenerative diseases worldwide over that time. Cancer, heart disease is complicated because there was a decrease in smoking, which without the decrease in smoking, heart disease would have also been exploding over the last 50 years. Cancer, heart disease, diabetes, Alzheimer's, all kinds of autoimmune diseases, all these things have been skyrocketing over the last 50 years. And a lot of people who study this pretty hard, I think, have come to the conclusion that this is to some large extent due to the, you know, the sugar and grain and processed food, seed oils, and all this kind of, there's this sort of a handful of toxic ingredients that people have been really encouraged to eat by the food pyramid and all those world and US agencies that are pushing the food pyramid, when arguably the food pyramid is upside down. And we could go into that in more detail at some other time. But here's the thing, crappy processed food, which is what you get when you do a race to the bottom with a centralized system, and you have a bunch of government subsidies that are not necessarily, well, they might have some perverse incentives in some of these subsidies. So you subsidize monocrop soy and monocrop corn, and you get all this soy oil and you get all this corn syrup, and it's ultra cheap. But even so, the farmers are going out of business and the soils are being depleted because everything is subsidized to make this industrial high external input monocrop agriculture, which looks profitable perhaps in the short term if you're a big ag company, not so profitable if you're a farmer. But anyway, it's flooding the market with cheap, horrible food, and people are getting metabolic disease. And look what happens. They're extremely susceptible to COVID. Well, okay, maybe we'll wake up then. Maybe this is part of a wake-up call where we start to realize, there are some costs to large amounts of cheap food for everybody. You know, as Michael Pollan said in his Omnivore's Dilemma book, for the first time in history, we have a large segment of the population that is overfed and undernourished simultaneously. And so if people realize this, it might not just help them correct their diets, but as part of correcting their diets and eating smaller amounts of wholesome food instead of larger amounts of terrible toxic food, it would correct the agriculture system. You know, we have these meat packing plants shutting down because of COVID. And, you know, maybe this is, again, an argument that says we shouldn't have our supply chain concentrated in a few areas that are overcrowded and prone to disease. We should have our food supply chains distributed with, you know, happy cows on grasslands instead of unhappy cows crammed into CAFOs and things like that. So again, there is a possibility that we can leverage this crisis because it's kind of it's happening in a time frame that people's attention spans aren't going to get too distracted. We could leverage this crisis to make some absolutely necessary and beneficial changes to our food system, changes that would be beneficial to everybody or almost everybody, including even some of the big ag companies, if they just acted on it. I mean, it might not be so beneficial for the fertilizer and pesticide companies, but even the meatpacking companies could distribute, diversify, and go towards more healthy. I mean, a lot of these companies will frankly do what the people ask for. Like if the people ask for low fat, which they did based on mistaken data, these companies will pivot to make low fat. You know, if the people are asking now for high fat, healthy, you know, locally sourced foods, then presumably these companies can figure out how to meet that demand if that's what it's going to mean for them to be profitable. So I hope that people wake up. I hope that the government starts to become a little transparent and admit some of their failings in their diet and agriculture policies, and that we can turn a lot of things around, including the health of our soils and all these long-term things, you know, because of the virus. It's almost like it was a gift in this sense. Okay, so let's see. Yeah, institutionalized pausing we talked to. So let's get into now some more spiritual stuff, or cultural stuff. You know, there's this idea that that some strange things are happening, like Donald Trump, who's not generally considered, you know, a friend of the little guy, in spite of what he campaigns on, is, you know, here he's got practically becoming a socialist, trying to give away all this money to people, you know, we're obviously going to have some rethinking of some of our centralized or some of our, I think we're going to have some, this has shaken people up, and hopefully it hasn't just shaken them up to be more polarized in their filter bubbles. Maybe it's shaken them up to listen to some alternative opinions right now. I mean, the idea that you would have a Republican kind of basically moving towards a UBI, that's kind of strange to me, and it's okay, you know. I mean, I'm not trying to be a Trump supporter here, but I am trying to say that I think there's a harbinger of some change happening. So that would, another cultural social upside of this is our friends in the existential risk community might be taken more seriously now. Certainly people are going to take more seriously the idea of really horrible pandemics. I mean, as we well know, we got off easy on this one, comparatively, right? It could have been Ebola that was transmitted through the air, and it was not. All right. And yeah, so the existential risk community might get taken more seriously, and also they might actually start to pivot towards looking at problems that are a little bit more pragmatic, shall we say, you know, rather than worrying about artificial general intelligence and you know, the fact that we might be living in a simulation. Maybe they could worry about things like diseases and economic collapse. Yeah, maybe people will also start to get serious about science. I mean, we talk about this a lot. Anders Sandberg pointed out to me the other day that this exact thing that's happening right now has been in the microbiology textbooks for decades. Like, as we know, it's not just that there was some government report that Trump ignored a few months ago. This stuff has been in the biology textbooks for decades. This exact thing was going to happen. The virus was going to come out of China, jump over from bats, and cause a worldwide situation. So maybe people will start to take more seriously common knowledge, if you will, even if it's not so common to them, common scientific knowledge. Take tail risks a little more seriously, you know, even though Nassim Taleb says this was not a black swan. In some sense, I think it might be a black swan. Another cultural advantage to this might be that we realize that we can actually survive hard times. And actually get some serious perspective on how hard this was compared to other diseases like, you know, 1918 or smallpox or something like that. Like, let's put things in perspective here. This is not the bubonic plague, and humanity has survived worse. So maybe we'll get some perspective. I know it's hard to do though, especially if you're less fortunate than some of us are. Yeah, perspective comes after breakfast, I guess. And then of course the last sort of cultural one, before I jump into the spiritual at the very end, the last cultural potential upside I might talk about, again, this has been fairly common, but let's add it for completion, is that this is perhaps the first time in our lifetime, and maybe the first time ever, where humanity has been globally united in a non-ideological, non-sectarian, non-political way against a common enemy or a common problem. And it's not a zero-sum thing. If we play it right, it's not like there have to be winners and losers in this game. You know, if there's a successful vaccine or successful treatment or successful changes that we make in response to what we learn, all these things can benefit the whole planet. And I think we're seeing that with at least in the science community, with the flow of information on preprints and things like that. So this is very interesting to have all or so much of human ingenuity, whatever country they're in, whatever race they are, concentrated on solving this problem. That may not be the last time that happens, but it may be the first time that it's happened. Okay, so I'm going to just end with some spiritual ideas about this. So, well, we're running out of time here, so let's just end it with this. Two things. One is this I got from the New York Times, we may come out of this, at least in the US, with an appreciation for frontline workers, laborers, especially us who are in sort of the intellectual knowledge worker class who get to sit home and have stuff delivered every day and complain about how the lockdown is not safe enough and we're not ready to, open up. Meanwhile, we've got all these people out there, working in hospitals, working in sewage treatment plants, working in electrical generation stations, driving trucks, delivering stuff, all these people who are actually out there taking risks. We need to honor them and value them and thank them for their service. In the same way that people would be saying that to all these military people, the idea is that we could possibly have a sort of demilitarization of American patriotism and thank people for their service to the country who are not soldiers, or not only soldiers, but who are all these other people who, by the way, tend to wear uniforms, right? Delivery workers and doctors and all these people wear uniforms, and we need to honor them, thank them for their service, and think about that, and be extremely grateful for the situation that we find ourselves in. And yeah, so I think in general, I'll end with the last spiritual upside that I want to talk about, and that is just we have to learn to be grateful. We have to learn to be grateful for this virus. And I don't mean to be facetious, like grateful because you died or someone close to you died or you got laid off. That is, of course, not what I mean. What I mean is in the long term, there are things we can learn from this, and we can make the world a better place in many different ways because of this. And so for that, I think we need to be grateful and maybe even think that nature, I'm not a religious person per se, but that there is the wisdom to nature sometimes. And that I could imagine if I were Mother Nature and I were a conscious being, I'd be like, these humans, they need a warning. I'm not ready to kill them, but I'm definitely going to slap them like I would a misbehaving child, because they have to learn that there are consequences to some of the things they do. So I'm going to end it with that. And thank you.
Thank you, Creon. I was listening to your talk, and when you were talking about the metabolic diseases, et cetera, in my mind, I was thinking, yeah, well, all these trends toward more local economies, local food production, et cetera. Well, naturally, that would tend towards reduction of metabolic diseases because people will be eating better food, presumably, more locally sourced food, less sugar, more processed food, et cetera. So I think that makes a lot of sense from a high level theoretical perspective. I'm somewhat more pessimistic that might end up being the case. I feel like, we're going to settle in again at some happy middle, maybe, of course, perhaps local foods and locally sourced food will be more prevalent, but I don't think that entirely takes away all the processed food and the decades and decades of like you mentioned, right, the bad food policy that we've had that's really hard to unwind even in a crisis like this.
Right. I agree. A lot of these things may be naive and over optimistic, and so be it. They still should be probably mentioned. But the other thing is that it almost makes me hope that there's a partial food system collapse. It almost makes me hope.
Oh yeah, of course, yeah.
That the shelves are empty for a while, and Tyson and these other big kind of maximally profit oriented, minimally health oriented food processors get fucked, and that the people go hungry. Why? I don't want anybody starving, but quite frankly, almost everybody could go for a week or two without food, and they would actually be fine once they got over the first 24 hours. I mean, this is totally well known, especially overweight people. Especially overweight people. In fact, arguably, there's nothing better for them than to go on an extended fast. Provided they don't, provided they drink enough water, and I don't want to oversimplify here, but in general, sensible fasting is one of the most healthiest things you can do, particularly if you have visceral fat or if you're overweight. I mean, you have fatty liver. There's all this bullshit about fatty liver and thousands of papers and all this kind of stuff. You know what you can do to get rid of fatty liver? Fast for 3 days, and you will be done with fatty liver, at least until you start overeating again, or overeating sugar again. Anyway, but what I was going to say is, if there is some serious food system disruption and people have to go hungry for a little while, they will start to really wonder, did we do it right? Is there another way? How should I protect myself next time something like this happens? So I'm a little bit worried that things don't get disrupted enough to encourage people to take some serious look at solutions that may be less profitable in the short term, but more beneficial in the long term, like more decentralization in our food system.
Well, we're gonna have to end there. This is a topic that I'm personally very, very interested and passionate about. So I'd love to continue this discussion in perhaps another venue. But thanks for joining us today and sharing all the upsides. For the last 2 days, we've been talking about the potential disaster that is upon us. Financial disaster, sanitary disaster, privacy disaster, and everything else that comes with it. And so it's good to get a little bit of sort of positivity and some of the potential upsides of this crisis. Certainly,
well, thanks for giving me the opportunity to talk. I tried to answer someone's question, but I think I blew it. There's a person who wanted to talk about mRNA viruses, and I guess he can contact me offline. I'd love to talk about that. I have some contrary opinions on that. But hey, yeah, if anyone wants to send me additional ideas for upsides of COVID-19, I'm Creon on Twitter, @Creon, CREON. Okay.
Thanks, Creon. You're welcome to stay on if you want to continue watching the rest of the talks. There's only two talks.
Okay.
Yeah.
Okay. Cool.
All right. Cheers. Our next speaker is. So I just want to say, we've been here for 8 hours now. We're into our 8th hour. And just before the poll closed, so we had a little bit less turnout than yesterday, which is expected on a second day of a conference. But 286 people voted on the poll, which means that at least 286 people came in throughout the day. Yesterday, we were somewhere closer to 400 people. So given that about 1,000 people signed up on the Eventbrite, I think that's that's a darn good turnout for an online conference, which we pulled out from wherever 3 weeks ago and basically had no marketing. So yeah, thanks to everybody for coming on and for still being here so late into the evening, at least here in Europe. So our next guest, Yaya, are you there?
I am here.
Nice. Hey, how's it going? So just briefly introduce you. So Yaya Fanusi is a adjunct senior fellow at the Center for New American Security. And he spent most of his career in counterterrorism. Previously, he was an economic analyst on the topic of counterterrorism in the CIA for 7 years, I think.
Yeah, I was at the CIA for about 7 years.
I'm going from memory because Yaya's been on the podcast before. Yaya's been on Epicenter before, and he focuses on the national security and terrorism implications of cryptocurrencies and Bitcoin. So today he's going to be talking about the OPSEC implications of COVID-19. So take it away, and please feel free to make any corrections to my.
Yeah, and Sebastian, just so so I'm clear. So I'll get to chat for a bit, and then there's an opportunity for questions or discussion?
That's right. So you've got 45 minutes. Wow. And so, 20 minutes maybe of discussion, and then we'll go into Q&A. Okay. Whatever you feel comfortable with.
And if I want to, could I put up some slides?
You certainly can.
Oh, okay. Okay. Well, I'm gonna do that. I decided at the last minute to just put some slides to help guide my talk. All right, good morning, evening, afternoon, everyone. Glad to be here. I'll put on my slides in a sec, but before I do, I just want to say this is going to be a little bit different for me. When I usually do presentations on illicit finance issues relating to crypto, and that's what I follow. And so this is going to be a little bit different, a little bit of a different topic. I'm not really going to focus on crypto, but what I want to say is what's also going to be different is this is not so much a presentation of my research. This is more, I'd like to start a discussion. I'd like to raise some things that I've been thinking about based on the pandemic and how I think certain risks may change and how I think the public is going to have to adapt. And I really am going to do this to get your feedback or get your thoughts. So so let's do that. Let's roll into this. I'm going to put this screen share thing on. And okay, you should be seeing the screen. And so yeah, the title, somewhat notional, but this is what we have. The title of increased OPSEC will be the new normal. Definition, OPSEC operational security. So let's run through this. Just, I guess we already did my intro. This is who I am, and there's my pre-shelter in place haircut. Things have really changed since then. So basically, what I want to talk about for a few minutes is really to have this conversation about digital threats. And really with the idea that the target area is expanding. So what does this mean? This means that all types of actors are going to adapt to this new environment. We'll talk a little bit about something I'm calling the high side versus the low side. This is going to impact not just government, but just the regular folks like you and me who are at home working. And I've added to this presentation, I wasn't going to talk about this, but I'm going to say a few words about digital identity. Just had at the Center for New American Security, we actually had an event on digital identity earlier today. So I want to bring in some points from there, and hopefully we can just have a discussion. And again, this won't necessarily be me having to answer all of your questions. I want to hear from you and get your thoughts. So this is obvious, right? It's pretty clear that we've got more activity at home or online at home for the past few weeks, right? Lots of data. I mean, this is common sense, but it's interesting. You look at some data points like 18.5 million new Netflix subscribers in the past month or whatever it was, and those are the amount of subscribers. I guess that means 3 times that many people will actually be on Netflix. People's cousins and friends and whatnot. Online gaming. I think I saw an earlier stat that said. Verizon said that online gaming had increased, oh gosh, I don't have the figure in front of me, but it was something like, 50 to 75% or something like that. It was a huge figure in just the first few weeks of March, right? Now we're so that's old data by this time. Everyone, we're doing this Zoom conference, right? So what does it mean? It means that business activity much of it that was in person. When I say business activity, I'm not just talking about you doing, transacting online, purchasing goods, but the regular business activity, the activity that we all would do in our offices, in conference rooms, physically, it's all happening in this virtual environment. Much of it is happening in this virtual environment. So, so that is interesting because when we think about certain threats and risks that are out there, and I'll pick one out of the hat, one sort of national security issue from the US perspective, economic espionage, right? There's a lot of that with the US coming from China. And as we're seeing more business activity happening online, it means that there's really a different environment where actors that want to target that activity, a bigger target for them to play, a target that's more digital. So if before, let's say economic espionage, if before, or other sort of cybersecurity operations where it was key to get inside, to physically get inside, and let's hold cyber, let's not say cyber, but for other economic espionage, to get inside a facility, inside a plant, inside a business, you now have you don't have to do that necessarily, right? What do you need to do? You actually need to get into a conversation that's happening online or get into Zoom. So this is this sort of new environment. It's just something that I've been thinking about. And you can take things that have been happening. So for example, a few weeks ago, I think NPR had this report about Zoom bombing, right? Which is this phenomenon where people are on Zoom calls and then someone does something annoying. They do graffiti on the, on the wall in the chat room. They basically disrupt it. And this is simple sort of cyber pranking or whatnot.
That very thing happened here yesterday. So.
Oh, really?
Yeah.
you all were Zoom bombed?
Yes, but we got it under
Zoom-bombed
control
on the
now,
chat,
actually.
And today we turned it off, and then we accidentally gave the mic to one of these Zoom bombers, and
oh no,
not nice things.
Yeah. Right. So you're not alone. So wow, I didn't realize that. So that's a great example. So that is one. Again, it's a disruptive thing, right? But that sort of methodology could certainly be used and adapted for more serious disruption. So when you think about threats, you actually have to think about, okay, what's going on? What are we seeing? Either, illicit actors, criminals, what are we seeing them do? And then how might we see this be advanced, right? And so that's just an example. So the bottom line here is that we're not just talking about business activity. We're also talking now about personal activity, right? Our personal activity is getting more digital. So now we're in a situation where it's not just someone who has government files or top, company secrets, but generally now more of your activity is in the digital realm, is vulnerable, is exposed. So you have to think more about OPSEC. And even though you're not doing some sort of top secret, government or corporate action or confidential action, you do have information that you want to keep secure. You also have things that you want to keep secret, right? You also need privacy. So we're in this new environment where now the public is more vulnerable. And so that's why I say it's the target area. What I mean is that someone that wants to interrupt you, disrupt you, get at you now, right? They've got this target environment, this digital environment that they can go for. So what does this mean? The obvious thing, right? More secure comms, right? Maybe more folks are going to be interested in encryption. But also, this is not just because the technology, there's always been a concern about secure communication. That's right. None of that is new. What I'm thinking about in terms of the new normal is the ability the idea of a cultural shift that now everyday people may think a little bit more about what is private and what is secure. You have protocols. I'm not talking just about technical protocols. I'm not so much a technical guy, but protocols in terms of how you deal with sensitive information versus non-sensitive information. How do you deal with public discussion versus private discussion? And in the world of intelligence, there's the idea of something called the high side versus the low side. And let me explain that. The high side is where you have classified communication, right? So that's a network where you're going to have secure communication about the classified stuff that you need to discuss with your coworkers. But then you have a low side. You'll have a system where you can discuss unclassified information, right? And never should the two meet, right? You should not be discussing anything classified in the low side system, right? So in the intelligence world, it's already understood that you compartmentalize your information and your conversation. You have different streams for communication based on the sensitivity. And so even though that's government stuff, I can imagine a world where businesses start to think more like this. If you're going to have remote workers, and yeah, you don't have anything classified, top secret, anything like that, right? But you do know that certain business information is sensitive. you do know that certain personnel information is sensitive. And where before maybe you were getting in that conference room with the, you know, the top management team and discussing a personnel action, right? You were doing that before because it was in person. You know, now you're going to be having those conversations maybe on Zoom, right? On some sort of, you know, some sort of digital platform. So there's just going to be a greater need for you to be conscious of, is this information sensitive, and are we using the right channels? And these channels, you know, exist. I'm sure a lot of the folks that are on this call can speak more about what communication channels are more secure and what apps are better or whatnot, right? A lot of you folks maybe are already into that, but, you know, Joe Blow, everyday, you know, person, you know, may not be. And so there's going to be, I think, I think we're going to see a cultural shift within companies thinking about how to have different channels for their communication. And so again, this idea of new protocols, but not technical necessarily, or not only technical, but cultural shifts. And it makes me think about, when I think about sort of national security issues, you know, you remember, I don't know if it was World War II when the phrase came out, you know, loose lips sink ships, which if I remember correctly, you know, it was just the idea of, you know, during wartime, be careful what you say. There could be, you know, folks listening, spies. And so that was sort of a mantra to make the public aware of, you know, be careful of what you say, because, you know, whether it's, you know, the Axis powers or whatever, you know, could be interdicting what you're saying, intercepting. Then let's go to what we're all familiar with, which is right after 9/11. So now it's very typical to be at the train station, to be in big public areas, and you see the term, if you see something, say something, right? What is that? What is that a cultural shift of? That is a cultural shift of where now we have an understanding that the public has a different security posture, that we're now putting the onus on everyday citizens to notice their surroundings, to look around them, to be aware of what might be odd, and to act on it, to say something to an authority or to security, right? So this is something that maybe we didn't have 20 years ago, but it's become a part of our life, not only because of 9/11, but subsequent terrorist attacks and terrorist plotting. We're all doing things differently now simply because of some of these threats. And I would say that we may see something similar. I don't know exactly what it's going to look like, but we may see certain shifts, especially if something major happens, that sort of a digital attack or a digital compromise, beyond just what we've already seen, beyond just the typical identity theft and the hacking of crypto exchanges and the hacking of, you know, credit bureaus. You know, that's why I mentioned this idea of economic espionage. You know, when we see that because of the vulnerabilities in people's comms and in their sort of workforce, the way they do their operate their workforce, if there is some sort of big lapse or big, you know, like a compromise that has occurred through a digital platform and has occurred in this more social distancing environment, you know, I could see a similar adaptation where we start coming up with a new mantra for how to operate, how to deal with sensitive information. You know, I was actually trying to come up with what the next term would be, and I don't even think I'll share them because I couldn't come up with a good line. But anyway, so, you know, we'll end with this. You know, the idea here is that good OPSEC is going to be, I think, more mainstream by necessity. May happen slowly, or you know, better OPSEC. I think that's something you're going to see. And the question for the technologists out there, the folks who've already been dealing with this, maybe in their own circles, in cyber circles and in tech circles, the question is going to be what methodologies, what protocols, how do we integrate these things into the everyday work environment, in the business environment, and in the personal environment in a way that, you know, that is user-friendly, and how do we sensitize people to that? You may already say, all the secure apps are out there, people have been thinking about that. But again, a lot of that is really very niche, and a lot of it is you know, under a lot of that behavior, that OPSEC behavior, impacts people who are sensitive to it for like technical reasons because they work in that realm. But for everyone that's just transacting in business, you know, that stuff is not mainstream. So good OPSEC is going to be made mainstream, and maybe in our discussion, you all can provide some ideas of how that could happen or how it should happen, or maybe I'm wrong and maybe it already is happening, or maybe it's not needed. You know, welcome. This is a low, I'm not really so concerned here if you say that I'm totally wrong. These are just my observations and my musings. So the bottom line is the new normal is going to mean that everyday folks are going to have to understand online OPSEC. Institutions, public and private, are going to need to build technologies and procedures to ensure that the people they're communicating with are who they say they are, and that the connections are not being intercepted or interdicted. And I'll end with this point on digital identity. Digital identity is a separate problem, but it's related. And digital identity as a solution could be a part of this new normal and this improvement in OPSEC. Now, digital identity, without going into a huge thing about what it is, you know, just consider that the problem with digital identity is that in the digital realm online now, we often have very low confidence in identity. We have very low confidence that whoever is transacting is definitely that person. So that's the problem, right? We can't be sure that who you are, that you are who you say you are. So that's how do you solve for that problem? How in a digital space do you come up with an identity that you can be sure that, okay, this is who that person says they are? And there are three things to consider. Three parts of this problem. A lot of people talk about digital identity and they don't really break it down what we're talking about. The first thing we need to solve for is, how do you make up one's identity proof? Meaning, what documents or references should be relied on so that you can make up a unique identity for a person? You could have a subscriber, you could have a specific profile, and you've attached an identity. You know, you've proved that you have a proof, and maybe it's based on driver's license, national ID, social security. Could be quite a few things. So that's a big question. What do we put in the identity proof? Once you have that, the second question is, how should that identity proof be authenticated in a digital environment, in a digital transaction, so that when you are interacting with someone, you know that person, that identity proof is the person who's in the transaction at the moment, you know? So how do you authenticate digitally? So that's a separate thing. And then the third, which really is just tying this all together, is how should this whole process be managed? You know, how should it be managed in terms of who's going to control the data? Who's going to authenticate it? How do you protect it from hackers? How do you protect people's privacy? Is this a totally centralized process? Are there elements of decentralization? Then there are the legal and the philosophical, societal questions, like, are there pitfalls to having such a highly confident digital identity if we come up with that? What may be the problems? Can we put the genie back in the bottle if we have this digital identity that is so on target? Are there problems with having that, you know, particularly with privacy? And so this is only partially a technology discussion. This is really a question of systems, of interoperability, of law, of administrative issues. These are questions of how do you develop processes within a country and in between borders. So this is not just a technical question. Now, how does it relate to the OPSEC issue? In that I can see this being digital identity being a part of what maybe helps to solve or what helps to address this OPSEC issue. In that, you know, if you can sort of assess that, okay, the person that I'm on this Zoom call with is definitely Yaya, because, you know, boop, we've confirmed his digital identity, authenticated him. So now we can have this Zoom. We know that we're talking to who we think we need to talk to. Now, that doesn't take into consideration that maybe I'm recording the conversation over here and you can't see that I've got a microphone. So you still have some issues in terms of OPSEC. But, you know, maybe that at least can help. You know, maybe you can tie digital identity into the, into the actual application the platform, right? So maybe everybody gets identified and gets authenticated with their digital ID, and then you have other measures to make sure that the environment is clear, that there are no other, there's nothing else tracking or intercepting your communication. So, again, a separate problem, but something that I think is frontier, the next frontier in terms of digital identity, something to solve that has been on the back burner for a lot of governments. In the US, there's more progress on this now, more people talking about it. It's now coming to the front burner. And so this is something that I think we're going to see more of. So I just wanted to point out, things that I think we're going to see. These are my observations. Usually I talk a lot about crypto and what illicit actors are doing. I didn't get to that, but happy to answer questions, provide more context. And again, this is, I really thank Sebastian for putting this together and asking me to be here, because I thought this would be a good opportunity to talk about something that is not a fully fleshed out research project that I've done, but just my initial thoughts since we're in this pandemic and since our lives are changing. So these are some of the things that I'm thinking about and that I'm going to keep my eye on. So I'm going to, my information is up there, and I will stop sharing the screen. Yeah, I'm still in. Stop sharing the screen, and yeah.
Yeah, and if you want to hear more about Yaya and Bitcoin with regards to Bitcoin and cryptocurrency, you can listen to episode 324 of Epicenter, which was a couple of weeks ago, where we went in depth into the sort of counterterrorism and national security implications with regards to cryptocurrencies. So yeah, thanks for that. That was actually I really enjoyed that. In terms of OPSEC, so like OPSEC is something that I'm sort of deeply interested in, and that I pay a lot of attention to personally. Sorry, it's really late here. I've been up
I know.
9 hours. My English is starting to fall apart now. So I think that companies will certainly implement more robust OPSEC, although I think it really depends on the company.
Yeah, and the industry maybe.
And the industry for sure. I mean, like a lot of companies probably still don't use password managers these days, when, among us sort of, highly aware technical people, this is something that everybody uses. On the individual sort of personal level, I feel that, again, like things like password managers being, if we use that as a sort of barometer, people typically don't use them. I still see like friends who, fairly educated and are, knowledgeable of the risks, and like still use the same password for everything. So I feel like I'm hopeful that people that changes. What's that? Oh yeah, exactly.
Password 1 2 3.
I'm hopeful that will change, but I have little hope that like the majority of the population will start thinking about OPSEC. But there's sort of like two layers, right? There's like the OPSEC layer, which is okay, like your passwords, making sure that sort of like physical access is restricted, etc. But then there's all the other stuff that's just also very, very nebulous. And even for people like us who are like super plugged into this stuff, is like, where's my data going? When I'm using Facebook, when I'm surfing the internet, what footprints am I leaving sort of all around the internet? Right. And I feel like that is something that is just so far beyond the reach and understanding of most people. And unless everybody just starts using Brave or, some browser that basically just like stops that stuff at the entrance, like at the beginning, at the pipe, most people's behaviors are not going to change.
Can you see some of these big companies being more open to things like Brave and some of these things that, some of these more privacy protecting apps?
You mean like whether or not?
Yeah, like, so, I mean, I don't know, just name a company, Ford or Apple, or, isn't going to use, well, maybe they will. I guess my question is,
a lot of these companies are still using IE for all I know.
Probably are, right? Yeah, so maybe it's going to take some time.
Yeah, and I don't know. I mean, and then on the sort of, you know, Zoom call and that stuff, like, yeah, it's also difficult to know. I think it's hard to know. I think for people, it's hard to know. Like even people like us who are kind of plugged in, it's like it's hard to really know what's going on behind the scenes, like which apps are like actually encrypted, you know, when you're doing a video call, which are not. Although I think most of them probably are nowadays. But yeah, it's all very kind of blurry and nebulous.
Yeah.
And difficult to understand. But someone says in here in the questions that they switched to Edge. But yeah, if there's any questions here for Yaya or any comments, or if we have any other OPSEC experts, I don't know if Chris Constable is still in here, but he was here earlier. He's super plugged into this stuff, and I don't think he's here anymore. But yeah, if there's any questions, please feel free to.
I guess people are maximizing their OPSEC.
Yeah, exactly.
They don't want to show what they know, or they don't want to show what they don't know, right?
Right.
About OPSEC. Yeah. Yeah. No.
Yeah. Go ahead.
No. I was just gonna sort of riff off of you know, it's interesting now watching. I mean, we can maybe even shift into the crypto stuff, right? There are things happening like contact tracing, but it's interesting, right? Because you have the European Central Bank, which recently put out a paper, and I don't know if I looked at the paper. They are, you know, all the banks, you know, many of the central banks are researching digital currencies. And the European Central Bank had put out that they are looking at ways to make it privacy preserving, right? And I think I'm correct in that. Was it Zcash? The Zcash Foundation is doing something with the ECB. So I'm
not sure.
So, oh, okay. Well, yeah, I think so. I should have had that. I have those notes somewhere. So what I'm saying is that there's an opportunity here as big institutions start to build new products and get more digital. There actually may be, you know, more of them reaching out to the community that, you know, the tech community that creates some of these privacy protocols, and these big institutions and governments may try to adapt them. Because I can imagine if there's a digital currency, I mean, so if you're in China and China had the Communist Party has a digital currency, then, you know, yeah, privacy is no more. But if you are, you know, in sort of the open societies where I am and where you are, if there's going to be digital currency, there's going to be a conversation about how do you preserve privacy and how that should be managed. And you may have, you know, maybe the maybe the folks with the strong libertarian leanings get together with the folks with the more, you know, corporate and, you know, government and national security interests. Maybe there's going to be some mixing there. Maybe there's going to be some sharing of knowledge and understanding and working together and kumbaya, maybe. I don't know. Anyone else have some questions? Oh, I see. Let me see. Are there?
Yeah, thoughts on proof of health? That's an interesting one. Any thoughts there?
Huh?
Like the sort of like the certificates or health passports, immunity passports people have been talking about.
Yeah, right. So I can just see, because like I went out today, I went shopping, and I was thinking, you know, man, it would be good if I had that antibody test and I had the antibodies and I wouldn't have to worry about a mask. Maybe I could, you know, maybe I could wear a shirt that says, you know, I'm immune or something like that. But proof of health. I don't have a well thought out thought about that, except that, you know, so that's something that I think you could implement proof of health, not in the way that I just described, right? Just being out in public, but definitely that's something that you could have for employers, right? I mean, if I'm setting up a work schedule, I can't just go off of employee told me that they're immune. I would need something that I would have to authenticate, whether it is coming from my primary care physician, and maybe it's as simple as that. Or maybe there is some application that I can use, and then it's been, there's a attestation to it, so that I can submit that, and my employer knows, oh yeah, Yaya is good to go. He can work. But no, I think that's the type of thing we're actually going to be thinking about, and this is where digital identity becomes important, although it's not. I mean, that is sort of a digital identity, could be a digital identity component. More questions. As far as digital identity goes, is there something in work ATM to validate or verify such an identity? I mean, I don't know. So Venus is asking, hey.
Hi. So it's letting me, I guess it's letting me talk. So what I meant by that is you were talking about the digital identity program or for security purposes. Mm-hmm. Is there anything set up, or is there like a company in place that does some kind of a verification for that kind of a identity?
Yeah. So there are different companies that are working on, I guess, different parts of that process. So because it's going to depend on a jurisdiction, whether it's country or state. So for example, in the US, you have some states that are getting together with the DMV, the Motor Vehicles Department, and they are basically setting up, they're doing the identity proofing. They are connecting your driver's license to, they are going through a process where they're looking at your birth certificate or social security number, and they're sort of saying that, oh, this person is who they say they are based on those documents. But anyway, to answer your question, yeah, there are companies that are involved in that. You also have companies that are doing like third-party verification, so third-party vendors. So let's say that there's a bank or financial institution and it wants to onboard customers, and the bank itself isn't really good at figuring out like, okay, exactly who's who. So they'll use a third-party vendor, which it's their job to collect data, to like take the picture of the driver's license, and then to see whether or not it could be a fake or not, to authenticate. So you do have companies that are doing that. And I would say that those companies are probably going to grow, or at least see more demand moving forward. Any more open questions? So I don't know, I guess we only have 3 minutes, right? Is the next person? Or no, do we have more time than that?
We have about 5 minutes left. So I also wanted to ask you about, what's your perception of how governments are going to, perhaps change their sort of OPSEC, like, is it required? Is there enough OPSECs, already implemented in sort of government systems,
Well,
CIA,
so I think,
etc.?
Well, no, I mean, I think, what my main thought is that, governments that need to understand OPSEC, have agencies that need to understand OPSEC, are already dealing with it. But I think what we may see is that maybe other agencies that have not been so OPSEC focused, that they're going to be thinking about this. So, like a Department of Motor Vehicles, right? That knows that, that people's IDs are going to be more important. I mean, again, granted, they probably were dealing with identity fraud before, but I would just say, typical, a lot of agencies that don't deal with classified information generally, right? Generally are going to have less OPSEC, or be less OPSEC conscious. So yeah, I think that you're going to see more governments. I mean, for the, in terms of national security agencies, again, those agencies they're already tuned into that. They're thinking the way that I'm thinking. The only thing that I could imagine is that, agencies that already deal with this dichotomy of the high side versus the low side, they're just going to have to be thinking about that more. They're going to have to be, you take agencies, they're going to have to be maybe more wary of when employees do work remotely. Okay, now of course some agencies you don't do remote work, but you do have, there are lots of government agencies right now, they are doing remote work. Now maybe they're not dealing with sensitive information, but you have to think about that fine line between between information that maybe it's unclassified, but maybe it's sensitive, and you have to be aware of how that information is being discussed, how your employees are using it, what connections they're using when they're talking about unclassified stuff through unclassified channels. So there's just, I think there's going to be much greater awareness in the coming months.
How are you increasing your personal OPSEC?
So, hey, that's the question I shouldn't be answering, right? Because then I'm
yeah, exactly.
I can tell you exactly, so I can't answer. I mean, I will just say, obviously, I'm thinking about this, right? So that means I am just generally being more aware of communication, of what gets communicated, and even like, let's say, getting on these Zoom calls, I mean, I'm looking, you guys, this is what I'll say. I'm thinking about when I get invited to Zoom calls, what process do they have to monitor? Is this anyone can get on? I'm also assuming, right? You should assume when you're on a sort of unhindered conference call like this, right, that you're gonna have all types of actors, that everyone, I can go through this participant list and this attendees list. A lot of people, right? Everyone here isn't who they say they are. There's a guy called Rude VC. I'm sure he is who he or she says they are. But right, these are all different names that people are coming up with, right? First name. Maybe we're gonna have to have conference call systems where you can't make up your name. Like, it has to be true name, right? Now, wouldn't that be interesting if Zoom only allowed true name and there was like a process that only allowed, you couldn't put, you couldn't put your own name.
Like some kind of KYC or something like that.
Yeah.
I mean, I feel like you were talking about digital identity earlier. I think that there is, maybe a business opportunity here. We might see this come up where, we have forms of trusted identity online. I mean, we have KYC now. There are tons of KYC providers that do KYC for banks and whatever. And you're essentially like, securing some kind of digital ID with like a bank, like Coinbase or Stripe or like wherever you're creating an identity, with. But these are like private identities. But as online services become more prevalent, and maybe we do need sort of real name policies, that you would have sort of identity providers, and like Facebook could be one of those, which Facebook says, okay, you want to verify your ID, like we have basically like a KYC process by which you verify your ID, and now you can like log in anywhere with your Facebook account, and that gives you extra privilege, extra access, or whatever. You wouldn't expect like every single company out there to start doing this. Now, of course, the downside of that is that like now you have this centralized ID with a company like Facebook. It'd be much better to have that in like a decentralized system or something like that. Where, at scale, that's obviously hard to do.
Well, in addition to the sort of, opening up options just for business, there's also providing services. One of the things that digital ID potentially could do, right, is that there's so many, let's say, services that aren't being provided or don't happen online. Well, would a digital ID make it easier to bring certain services to people, right? Certain people in remote areas that maybe you can't do because you don't know exactly who you're dealing with. But if we had a system, maybe you could actually help. That could potentially help with financial inclusion, provision of services. There may be other business opportunities too, that like there are things that maybe aren't happening, maybe opportunities that we're missing because we don't have a good digital ID system in place.
Yeah. Greg McMullen, I know you're in here. Would you,
Greg?
Greg McMullen was on the privacy panel yesterday, and is a lawyer and expert in the matters of privacy and digital rights.
He's not taking the bait.
He's taking
the bait.
Would you care to share your thoughts on this? Sorry for putting you on the spot.
Share my thoughts here. I think we're going to be seeing, as you said earlier, a lot of these agencies that weren't necessarily doing what they should be doing, suddenly understanding that they do need to take the online world seriously. And as we're seeing more and more of these services delivered in an online way, that's going to be even more important. So I think we probably will start to see things like the DMV, like online benefit application sites that would have been putting OPSEC second, really needing to prioritize it now. So I think that's exactly right, that's what's going to flow from this.
I'm sorry, that last part, I missed that.
Oh, I think that's exactly right, that's what will flow, that these agencies that haven't taken it seriously before will suddenly realize they have to and put it to the top of their list.
Yeah, I agree.
Thanks for chiming in, Greg. Well, we're gonna have to leave it there because we're about to welcome our last speaker of the day of this conference. So thanks again, Yaya, for joining us and for being a part of this. It's a great pleasure to have you.
You too.
And you're free to stay on too and take part in this last talk. So up next we have. Wow, so we're here. We're at the end. This is it. This is the last one. 2 days. I don't know how many talks, like whatever, 30 talks or whatever. I'm tired, and but I'm really excited to have next Allison Duettmann, who is a researcher at the Foresight Institute. She has been for the last month or maybe 2 months or something, doing these sanity preservers. And these sanity preservers are these twice-a-day calls that she does with academics, researchers, thought leaders about all of these topics that we've been talking about for the last 2 days. And they were a major source of inspiration for this conference. And early when we were organizing this, I was introduced to her and we chatted, and so she gave us like a lot of ideas, and so a lot of what went into this conference comes from her and what she does. So thank you, Allison, for your sanity preservers, but also for helping us early on and sort of like helping keep my sanity through this process. So over to you now.
Hi, thank you so much, Sebastian. First of all, kudos. That is, I think, like an incredible feat that you've pulled off here over the few days. I think, if there's one thing that like this time is doing, is that it's allowing us to iterate really quickly. And I think Eric Weinstein said that about it's like in wartime things just have to work. And so it's like there's a lot of like productivity around like making those great, and people are super proactive and jump right into it. So it's really nice to see kind of like this insane community kind of like popping up and people being so proactive. So I really applaud you for pulling through with this. This must have been like quite an interesting day for you, I'm sure.
Well, it was a team effort. There were 5 or 6 people directly involved. Alex, who's still in here, and then of course lots of people like you who are also organizing. I mentioned this during the opening session yesterday. I was having 2 or 3 times a week calls with other conference organizers, and we were just sharing ideas and kind of like pepping each other up and like having mutual pep talks with each other, because none of us know how to do any of this. We're all just figuring it out. So anyway,
yeah, I know, but it's an incredibly exciting time, I think. And yeah, I mean, in terms of sanity preserving, mine is definitely sometimes going through the roof. But first, maybe I should introduce myself. I'm Allison. I'm Allison Duettmann. I'm with Foresight Institute. I am a researcher at Foresight Institute and the incoming president of that organization. That organization has existed since, a little over 30 years now. And over 30 years, that organization has really kind of like really been steering imaginations about flourishing futures, but also the technologies that get us there. We have a pretty big crypto aligned community as well. Other things that people care about are longevity and health extension and artificial intelligence and artificial general intelligence. So I'd say those are, I guess, like our topics of interest. So it's a really nice overlap, I think, with your crowd. And yeah, we're doing this via a variety of different ways. And I think I'm going to share my screen so that I could do things a little bit more live, if that's okay. Let's see. Where can I share the right screen? Okay, let me go back. All right, as I'm trying to figure out how to share.
You should be able to share your screen that way.
Sorry?
I said you're now a co-host, so you should be able to share your screen.
Oh, great. Okay, let's see. Share screen. I can only share the whole desktop, or I can share. Okay, here we go. Cool. Alrighty. So I think you can see like the Foresight website now, and this is not just to promote this this website, but I think, you know, to give you an understanding of what we're doing, and as an organization, we'd like to think publicly, and so we've been doing that for a really long time. What we usually do is we do this in technical competitions, so we try to kind of like push for high impact science and technologies. We have those kind of like hackathons for science and tech that people can apply to. We have one online later this year on molecular nanotechnology. Welcome you all to apply to that. Then we do those strategy meetings, which are more kind of like private meetings where we bring a bunch of actors into one room that should be talking to each other, but usually aren't. We focus on artificial intelligence there, and especially AI coordination and great powers, like China and the US is always a good one. And then lastly, we do a lot of educational work. And so previously what we've done is we have monthly salons that are in person in San Francisco, and we always have the videos uploaded here. And yeah, they've been going really well, and we have a lot of people, I think, that were on the conference there as well, that are frequenting those events. I strongly encourage you. Here is Mark Miller, Robin Hansen, to join those meetings if you can, if you're in the Bay, and if not, please feel free to watch the videos. But then, of course, the crisis hit, and we're like, okay, well, what do we do? We need to kind of like somehow help this community make sense of this whole situation. And this is when we then pivoted into the daily global salons, and I'm going to talk a little bit about those in a second. But you know, for now, one of the other things that I've been spearheading and that mostly started off as a pet project is this project on existential hope. And so one thing that kind of like always shook me is that, you know, I got into this whole futurism kind of like ecosystem via philosophy, right? And I really just want beneficial long-term futures for life for as long and as flourishing as possible. And but I felt kind of super uninspired because people were like so doomy and gloomy. And then it was only when I discovered Foresight and all of the work that people have been doing, like, you know, for like 30 years ago, mostly on thinking kind of like ambitiously about the long-term future, that I thought, okay, no, maybe we can actually do this. And I was like, why doesn't anyone update kind of like really ambitious visions for humanity for people, for the next generation, right? It seems like it's all doom and gloom right now. And I got super fed up by that. So what I did is I launched this website. I invited a bunch of people to participate. And it's basically just a registry of kind of like optimistic projects, visions, people, podcasts, any material that you can get your hands on that's optimistically talking about the future in a context that's relevant for the next generation. And it's all on Google Docs right now still. It's definitely a work in progress. But this one, if you only check out one, then I encourage you to check out this Google Doc. You can comment on it. But this is basically my brain dump of what inspires existential hope in me if I think about the future, and like what do I want the next generation to know to onboard them for positive futures, right? And so one thing that I often, when I speak about this project or about Foresight generally, kind of like one quote that I often kind of like start my talks with is by Marshall Savage. It's this one. I'll read it out. It's quick. Teetering here on the fulcrum of destiny stands our own bemused species. The future of the universe hinges on what we do next. If we take up the sacred fire and stride forth into space as the torchbearers of life, this universe will be a burning. Because of us, the barren dusts of a million billion worlds will coil up into the pulsing magic forms of animate matter. Slag will become soil, grass will sprout, and forests will spring up in once sterile places. A whole frozen universe will thaw and transmogrify from howling desolation into blossoming paradise, dust into life, the very alchemy of God. Well, okay, so that's nice philosophy, right? But like, I think even in normal times when, you know, I whip out that quote, the delta between current reality and what's possible is pretty big, right? But I think, you know, on the surface right now, it seems that we're even much further away from those really grand futures that I think many of us here can openly and kind of like secretly and dream of every night. But I want to kind of like in this talk lay out why I don't actually think that's the case. And I really think that, you know, if you have the concept of a catastrophe, which is an event which causes the loss of most expected value, then you have a eucatastrophe on the other hand, which is an event which causes there to be much more expected value after the event than before, right? And I do think that currently in COVID-19, there's a few very specific, tangible opportunities to steer the COVID-19 crisis away from a catastrophe toward a eucatastrophe. And I think some of those opportunities really demand urgency, given the speed with which this crisis is progressing, and the likely really short time window in which it's possible to push for those ideas. And I don't mean to kind of like downplay the COVID crisis, right? That crisis is real. It's costing lives every day. It's still ramping up, and it demands from every one of us to step up our immediate action. But I think the other thing is that it really opens up this window into this potentially different tomorrow, and I think that's really exciting, because currently I think things that never dreamt possible before are happening right now. Right, borders are closed, machines are stopped, and many of those things are super nightmarish. But that's not my necessity, right? Because this opening must mean that there's room for upside risk. And upside risk is the kind of like technical term for existential hope, which is something extremely good happening. And so I think it's really up to us. I think we can make three choices, on a, let's say, more global level. One is on a, let's say, we'll start with the individual, right? Like individually, I think this crisis serves as a little bit of a near-death experience for every one of us, right? It's kind of like time to strip away all of the irrelevancies. It's kind of time to see that it's possible to exist, which much of this like usual theater that you have going on around you. And, frankly, to just appreciate what a freaking gift it is to be alive. I think on a second level, I think it's really an incredibly exciting time for those decentralized and local communities that many of us are part of, right? I think those are really just stepping up in incredible ways every day. And I think not just in the usual ways of, doing kind of like coordination and organizing, but on like kind of leveling it up and connecting with each other in a much more vulnerable and real way, which is, I think, what we've seen, throughout this mega event, really. And, I think it's really quite exciting because it expands this like feature of solidarity a little further. You have so many people clapping, so many people applauding doctors, and so on and so forth. It's really quite fantastic. So there's, I think, individually, I think a lot that we can do to individually grow stronger. Then as a community, there's a lot that we can do in response to COVID-19. But rather than just reacting to this particular issue, we can also use it as a catalyst to aim higher. And in the remainder of the talk, I want to talk a little bit about how we can do that. So the premise, of the meetings that we started is that, only a crisis, actual or perceived, produces real change. And then when that crisis occurs, the actions that are taken really depend on the ideas that are lying around at the time. And that's kind of a view that often in existential risk circles, which I'm a part of, you used to like use this premise to brainstorm a hypothetical crisis, with a hypothetical reaction of how we could how we could push for a good idea in that current moment, right? And this crisis is often quite vague. It's often kind of like hypothetical, but now really it's here. And, I think this may just be a test for long-term survival of humanity, but it's not just a test for our community, right? It doesn't really mean that we can lean back in comfort, because I think as this test really beautifully demonstrates, there is no world homunculus in the control tower who respond, if this test becomes a reality. So I think this is terrifying, but also really empowering. And I think, as the cards of civilization get reshuffled, much really is at stake, but a lot is possible as well. So I would encourage us all to seize the day. And I would encourage us all to do it now, because the window of opportunity is shrinking. And I think soon the dust will settle on the default world. And soon this one issue that is a coordination device right now and unites us will become digested into like the million billion echo chambers, and fingers will be pointed. And soon the cracks in this broken paradigm through which the light of a different future shines kind of will be stuffed by the same old. And I think it's unless from the ashes of today, the phoenix of a different future rises. What may that look like? Well, this is, I guess, the more practical aspect. And to find that out, I'm not claiming that I have the answer to this at all, but to find that out, we have started those meetings that, you know, I want to maybe share with you a little bit about for the remainder, and I'm going to bring them up and share my screen and kind of like share a few like lessons that we learned. So basically, when the COVID-19 crisis hit, we were like, okay, what the hell are we going to make of it? How can we kind of like help, and how can we help this community to make sense of this? And what we did immediately was, okay, let's first and foremost try to collect some ideas, right? What could we possibly do that would help? There's so many kind of community projects that are out there right now that are in need of support. Let's showcase them. Let's showcase people that are currently making sense of those of the crisis. Let's showcase kind of like immediate PPE efforts in need of support. So I'm just loading, because honestly, with the start of shelter in place, we jumped into action, had we started with 2 1-hour salons per day that were global, accessible, free to everyone. You know, we kind of like initially kicked into gear with, we started with Jan Tallinn, who many of you know as the co-founder of Skype, or like co-founding engineer of Skype, on existential risk opportunities from COVID. But then since then, we really kind of like covered it all, from authoritarianism and COVID-19, which was a fantastic talk that I think many people here may like, to what the CDC is not telling you. This is a lot about like personal health tips. We had someone on who treated coronavirus at home. We had lessons from Hong Kong, you know, and then a lot of things that, you know, were more vision setting, but also, you know, Robin Hanson on this very immediate kind of move of like, why not consider deliberate exposure and ways in which we could do that. We had a lot of kind of like smart contracting solutions in there as well. Your privacy preserving contact tracing, which was just mentioned, with Creon, who was on today, and a lot of vaccine talks. And, you know, the cool thing was that all of those, you know, were, I mean, it was really learning by doing, or it was more like, yeah, learning more, and like faking it until we were faking it more. But like eventually this kind of community just popped up. People were applying, and we showcased so many projects that received funding through this. We had Valerie Griffith from Get Us PPE on it, and who talked about those efforts that are still much needed. I would say check out this one as well. It's a fantastic talk on contact tracing and testing. Anyway, there's a lot that was going on over the past weeks. And I think that was all nice and well. It was incredible to see so many people that I think are also here today on a daily basis. But, you know, after, you can only do, I think, so much kind of talking. I feel like after 5 weeks, we came to a point where we were like, okay, where's the action item from this? How can we how can we take that like a little bit more ambitious step and actually kind of like creating a little bit more action around those items, right? Because at that point we had kind of grown this more global community of contributors that were really joining from anywhere from Nairobi to New Zealand to Berlin. I mean, like we always had a poll about different continents, and there was none apart from like Antarctica maybe that we didn't have participants from. So we're like, okay, how can we leverage this to actually create some action that's sustainable? And that's what we continue to do now. And that's what we actually started on Monday. So we started on Monday, the Foresight Hive Mind. And if you're interested in joining that, we are just in the first week. So the Foresight Hive Mind is the second like iteration of this daily salon series. And I'll go through it in a second, and, you know, like more, I guess, specific learnings or ways you could plug in. But what we did basically was I took a look at the past 5 weeks. I filtered out the best ideas in those weeks where I actually thought that we could put some action to them. And then I clustered them according to 3 topics. One was cultivating a humane long-term culture. One is advancing high impact science and technology. And one is creating resilient and cooperative global systems. So each of those topics has specific screening questions, and to each of those larger topics, we give 1 week in which we meet daily. We started this Saturday actually with a kickoff that broke the Zoom room capacity, so we had to stock up. We're now at 500 signups, and people come to those on a daily basis. So it's been really nice, and kind of very I think empowering and hopeful for me to see. But, you know, maybe to give you like a few kind of like quick things of why, like specific actions that I think could actually now be done. We started off with this more narrational kind of like salon on what I kind of like positive like video bites of hope for people that we can share around. and we have those ready now. Then on Tuesday, we covered, how can we champion the emerging culture of civic responsibility and people stepping up ethically to do the right thing. And Corey, I think, was on here as well. He was on that one too. We talked specifically about like whistleblower awards and legal defense fund for people to incentivize them to go out of their way and do the right thing, or at least not block them via regulation to be prevented from doing the right thing. And there's a few action items where you can definitely plug in, like if you know about how to set up a legal defense fund, if you're a lawyer and can help, that would be highly appreciated. There's a lot of people that I think could need that right now. If you talk about prison systems, for example, like, now they're already releasing nonviolent inmates to some extent, but I mean, the prison system inside the BOP is just a total shit show right now. They're moving people from A to B, people are dying, it's more like a concentration camp at this point rather than anything else. So we were talking about ways in which we can actually incentivize, folks to blow the whistle on this from the prison staff, because they're definitely not doing all the things that they're claiming to. So, for that, a legal defense fund would obviously help as well. So that's a few very specific action items. You can pay bail bonds and so on and so forth. So if you're interested in getting involved, by the way, this is the website, foresight.org/hivemind. Those meetings are donation based. You can donate as little as $1. We also take crypto, but we had yesterday one on emerging, on basically stewarding this kind of like this trauma / super empowerment feeling that people have, and like a few specific tools that people could do to kind of like get their own masks on before helping others in a self-care way. And today, one thing actually that I could highlight is Creon, who was just on here, I think earlier, we talked about how can we set up something like prizes or kind of like global rituals to help people kind of like see on a more global level, and to kind of awaken more on a global level, and also to kind of like get a little bit more of a cooperative vibe going rather than a polarizing one that we currently see emerging. And for that, we have, for example, we set up today a Facebook event for Dr. Lee's the annual Remembrance Day. Maybe Creon shared something about that, but if you're interested in helping us kind of like publicize this and make this a thing, that next year we're going to honor this amazing whistleblower that has definitely saved a ton of lives by doing the right thing and stepping up in that way. So if you're interested in kind of like making this a global international holiday, please help us. Tomorrow we're going to talk about more art and creative media. So, we have a lot of kind of memes emerging already. How can we make the ones that stick cooperative, and what are really good ways to do that? We have Dekai here from an unbiased project who will be, I think, zooming in from Hong Kong, who will speak a little bit about like what has been going on in terms of increasing bias and how we can avoid that and fight that via art. And then, next week we're going to dive into more kind of like of an advancing high impact science and tech. I think one really cool opportunity that I saw popping up in the last 5 weeks as we're showcasing so many vaccine projects is that currently a lot of the red tape is kind of like being cut away, right? To facilitate a lot of the vaccines that are much needed to actually, skip a few phases in their trials and get completed earlier. And before that window is closing again, and that red tape is like, all over the place in terms of high impact science, what are good ways in which we could hold those doors open that are currently emerging? So we're going to talk about that here. Then, that was this one, the one below. We're also going to talk about, how can we actually kind of like fund high mainstream investment and philanthropy to increase funding in resilience and scientific progress. So if you're interested in joining that, please hop on that as well. Then, given that a big focus is health extension in our community and has always been, now we have this incredible opportunity of actually making a strong case for this because of the correlation between COVID data and people and people dying, unfortunately. But now there would be a really good time for actually be pushing for something like that on a more with a more mainstream crowd. And then we have how can current work on contact tracing and other privacy preserving distributed ledger tech be expanded to increase coordination. That's, I think, something that may be of interest here as well. Like, given the fact that we already have to get good at privacy preserving contact tracing, how can we use that actually to coordinate better on a decentralized way? And then we just continue with a bunch of like more virtual and virtually rich experiences. And like, you know, I salute you, Sebastian, for setting this up. We are also setting up the, you know, like the recurring Zoom meetings. And I think it's been really nice, but there's amazing tools like Siempre. Then like Mozilla has a room where you can like fly others out into space. At Siempre, which probably many of you are familiar with, but like you can actually have different Zoom rooms pop up as you kind of like explore the terrain. So it's a more decentralized way of actually trying to socialize. My ideal thing would still be, and I want to pitch it to you if anyone of you wants to run with it, make a map, a global map, and then collect, there's already lists with all of the different free Zoom events, collect all of the different free Zoom events, and then put them on the map, on the global map. For example, you know, there's a zoo in Mumbai, which is open. Then there is, you know, a museum in Bangkok. Then there's like, you know, I don't know, like a poetry slam in Berlin. Collect them all, collate them on a global map so you could see where those webinars are happening, and then include the opening and closing times so you can always see the light, you know, going on at part of the world and off, and you can just join and jump and actually make this a much more community, like a much more global community via those online meetings. There already existed lists, but it would be great if we had a map of them. So please, if you're interested in working on that, let me know. I have a lot of those lists. Then anyway, last week that we're gonna have is how can we create resilient and cooperative global systems? We have Glenn Whale from Radical Exchange there on decentralized communities online. Alex Gladstein from the Human Rights Foundation, who's a fantastic thinker on, wrote a great book, The Little Book of Bitcoin recently. And yeah, we're basically going to talk about how can we make those decentralized communities that we are a part of come out stronger rather than authoritarian regimes. What can we do right now? And which communities should we be part of that we don't know yet, given that we now have access to this global network? Then how can we do better sense making? I encourage you all to check out Metaculous. It's a project by Anthony Aguirre, and he's currently doing a kind of like a prediction market on like a forecasting tournament. You don't, like, there's no monetary incentive to predict right, but it's a great community and they're predicting on the pandemic. So please check that one out if you have time. Then how can current unusual openings and policies be used to promote rational national and international policies? Here we have Robin Hansen together with a few other folks on, like, you know, how can we actually, given the fact that now things are possible, like UBI, like, you know, it's still somewhat contested in which way or form I think it makes sense, but like, how can we push for the right projects that are already out there and like just level them up a little bit, because currently there's so much appetite for doing the right thing. And then, you know, the last two ones are, you know, generally just creating more global resilience and peace and cooperative institutions. And, you know, I'm currently authoring a book with Mark Miller, who was on here, I think it was yesterday, on voluntary cooperation. So it's a very deeply decentralized view of the world. How can we kind of like how can we make it easier for people to voluntarily engage in cooperative interactions with each other? And we're using many tools from crypto commerce, like assurance markets, and for those matters. But this is just to say, you know, there are a ton of tools in the crypto commerce sector that have been lying around that are ready for deployment, that are ready to increase, to create this kind of like large kind of like civilization spanning network of decentralized cooperation across people. Right, and they're like amazing, like split contracts, all of those things, they are in the toolbox. And you know, we need those if we want an actually resilient cooperative kind of like global strategy. If you're interested in learning more about like those specific ideas and the tools that, you know, we kind of survey in the book, feel free to reach out to me. We are, I think, in the last draft of the book right now, and we have a little small group of readers and contributors to that project. But then finally, the last one, how can COVID-19 be used as a model for leaders to prepare for risk of future disasters, especially climate change? You know, I think it's a topic that won't go away, and it's one that should actually get us coordinated on the same thread. So we're going to talk a lot about kind of like how can we think past the current pandemic in that one. All right. Well, so this is kind of like to kind of entice you if you're interested to join this project. I mean, you know, if there's one thing really that I can say, like those things are really only as good as all of you guys make them be. Like, you know, I don't have any authority to be doing this whatsoever. And I, in fact, I'm only succeeding because of the insane people that somehow gathered around this and are have grown into this insane flourishing community that's really managing itself in the most fantastic ways. So, you know, this is like really, if I could close with this, maybe like with this more inspirational kind of call to action, because, you know, I'm certain that like those are the few ideas that we came up with in 5 weeks in this kind of weird process, right? But I'm certain that you're working on something on an idea that was always inconceivable, you know, that was always audacious, unthinkable, right? Before those extraordinary times demanded extraordinary measures, right? So I want to finish with this call to action for all of you, right? Ultimately, we all hope that this digital kind of like necessity is actually going to turn to a major opportunity to help us grow kind of like a network of networks of global contributors to push for like similar ideas, because it really requires, I think, all of us not only to get global decision makers kind of like vested into this and get them to buy into the good ideas, but also because a few of those ideas don't need, you know, like large scale decision makers for them to work. You know, they like, you can do them right now. We just need a few folks across the world to band together, like that global, like Dr. Lee's Celebration Day, that could be a volunteer run effort across the world, right? So please step up. The emperor has no clothes on at this point. You know, we are the adults in the room. We have never had that much agency, and for a long time after, we won't. So let's not look back at this as a missed opportunity when things have solidified again. I want to kind of close with a quote by Robin Hanson. He thinks that future generations will look back at ourselves and will think that we have lived in this strange time, like a dream time, a time of legend, a favorite setting for grand fiction, when low delusion heroes and the strange clowns around them could have most plausibly changed the course of history. I think actually 2020 is that year when we're leaving dream time to enter this strange nimbus between dream and reality. And, you know, let's wake up into the futures that we can usually only dream up, and let's make our future selves and descendants proud. And yeah, if you're interested in learning more about any of those projects, reach out to me. My email is a@foresight.org. It's pretty easy to remember, I think. And yeah, I mean, Sebastian, I think we should just keep this going. And I encourage every one of you to just step up and help, because, you know, this is definitely the time in which rough and ready is good enough, and in which we can iterate without being embarrassed about it.
Yeah,
Right?
absolutely. I wholeheartly agree. And I think one of the things that I've learned through this experience, and I'm sure you've learned it too, is it's kind of like a personal thing. It's like the value of facilitation. And I think like for a long time in my career, I've sort of like looked upon that as like, oh no, that's not what I want. Like, you know, I want to like be doing something like whatever, but like facilitating these types of things and making things possible, and it's like bringing together smart people is really, you know, what we've tried to do here and what you're doing, and like that has a lot of value. And like that's something that as a kind of personal development thing, if there's one personal development thing that's come through this experience of organizing this, is that like is realizing that just taking initiative and organizing things that bring together smart people also has value in itself. So yeah, and I mean, you've certainly you know, brought a lot of value with your salons and this hive mind thing that you're building. So it's I'm looking forward to seeing what will come out of that.
Oh yeah, that was really nice. Thank you, Allison. Actually, your last quote about Robin Hanson was really timely. We had Robin Hanson actually yesterday about violation, and it was quite controversial, but it really meant that, you know, he is action biased, and we need people who are action biased right now to not just say, well, this is a macroeconomic failure, and you know, we can't do anything about it. So really great positive message. I think the best one to end this conference with, don't you think, Sebastian?
Absolutely. Yeah.
Well, I really applaud you for putting this on. I think, you know, I don't know, there's something to be said for like taking a time back to think about things, but I think better by acting. And I think, you know, I think many of you do as well. And, you know, I don't know, I think this is a really incredibly exciting time. Once you just like lean in a little bit, you kind of see that more is possible, and that, you know, and also the incredible agency that you can have. And really, I just really want to like honestly encourage everyone to just start doing something, right? And it's not like, you know, you have to be immediately valuable or something, but I thought it was tremendously empowering. And I think learning how many people then actually just step up and suddenly support you, and like it's been really nice. So I feel like I feel quite hopeful, and much more so than 5 weeks ago. It's amazing.
Yeah. Do you think that what I've observed here is that, you know, we've managed to get some speakers here that I reached out to them and was like, there's no way this person will respond, or, you know, we'll take the time. And they were all super enthusiastic to take part. And then, like, you know, I said this during my opening statement yesterday. I was like, there's been a lot of moments throughout these last couple of weeks where I'd be sitting at my desk and I get an email, and I'd have this moment where I was like, yes, yeah, like Jeff Jarvis is coming, or like Azim Azar is on board. And I wonder to what extent, you know, this crisis has, and we talked about this with Azim a little bit today, to what extent this crisis has made us all equal. And you know, because when we're on a Zoom call, there's nobody at the podium. There's nobody sitting at the end of the table. There's no intern sitting, you know, around the room, around the walls, etc. And so it's made us all equal. And I wonder to what extent this crisis kind of accentuates that a little bit.
Totally. I mean, it's true for speakers, but I think even almost more importantly, it's also true for participants, right? Like, you know, we're in the Bay Area, and, you know, like getting to places is expensive, you know, and now suddenly we can talk to people, like, you know, like from Nairobi, we have one participant who joins almost on a daily basis from there. And, you know, like that would have not happened before, you know, and yeah. But, you know, I also want to, you know, take it really as a kind of like, you know, as a really very direct call to action for all of us to, you know, like this has started, and it's really good that it started. But how can we kind of like continue iterating, and how can we continue keep this interesting, you know, that it doesn't, you know, either fizzle out, or that it doesn't in the end become like a lost opportunity, right? Like, I think, for example, it's so funny to see like Zoom bombers, right? Like we had them in foresight salons, and you know, at the beginning I was like, oh my God, someone's bombing our Zoom. Until then, like people just stepped up in that Zoom meeting right away, and we're just like, you know, it was this incredible solidarity, and was just kind of like helping me to kick people out, helping me to steward the whole thing. And I think that, you know, now you went from kind of like Zoom, you went from like setting up Zoom rooms to Zoom bombers. Now it's like the next iteration where you have like Zoom fatigue, you know, like we're accelerating so fast, you know, that you get better and better on a much quicker level. And you know, I really sometimes feel like we're racing for this like social singularity collectively. And I'm taking it as a very exciting opportunity to get better at this digital thing that we've always kind of shied away from. And on a very ambitious note, I hope that we can connect much more online. In very vulnerable ways, right? You can all see my like background, you know, I'm really isolating and clear, like
same here, yeah.
Dragging up there, like I do some of them from the outside, like it's like kind of nuts right now, right? And I think we should appreciate that, and you know, we could connect as people finally, and have a good excuse for like being ourselves. It's quite empowering.
You know, since there's still people in here, and it's kind of the end, and you know, if there's anybody in here still, because I think yesterday there were people in, but they were like their Zoomers were closed probably. But could you guys raise your hands if you're like actually listening to this? Like, okay, all right, oh yeah, cool. So
no way.
I've got a couple of questions here. So I mean, I'm going to send this out by email anyway. I'm going to send a survey, But if you could answer in the Q&A box, what are your what were the topics that when's the next one?
Next pandemic, we'll do another talk, like another conference, I guess.
Yeah, send us your thoughts in the Q&A box. One thing I'm also curious is, is this something that people would like also to receive perhaps in a newsletter format, like something a little more regular, like on a weekly basis or like on a bi-weekly basis? Like what kind of things are you looking for in terms of information, or how can we turn this into something that persists? I'm thinking also of a podcast. There's all kinds of things that this could turn into. So if you have any thoughts, leave them in the Q&A. But I'm also going to send an email out to everybody with sort of brief survey. Yeah.
Also, like one related note, like about getting closer online that Allison was talking about. I think it's funny that I feel like way less people now are criticizing phones. They're like, oh, we're too much on our phones. Phones are ruining our lives. Now, no one is saying this anymore. Everyone is like, we need to get closer. And I think it's really nice because I'm always like the pro tech person in the room. And it's nice to see people finally realizing that without, internet, we are basically helpless right now. And so it's really awesome that we can have this technology to organize conference like this, or webinars, or like any meetings. That's really cool.
I'm gonna turn. So all the people who raised your hands, I'm gonna allow you to speak. So if you want to say something, you can go ahead. Hopefully there's no bombers.
Like we're going crazy.
Yeah, we're going crazy here. Everybody's got the right to speak. So one at a time, please.
Freedom of speech.
Yeah, no Zoom bombers. That's nice.
we had an episode yesterday where that happened.
And they're also, they have total legitimacy to be there too. They're making the whole thing fun. I think we are like old enough to be able to just protest as adults and be like, like do your thing. If you don't want to be part of like a constructive effort, that's fun. We can laugh with you and then we can move on. I think, they're like, yeah, I find them like amusing and rather cute, but I think
right. Well, I mean, it depends on what kind of. I mean, most of the Zoom numbers that have like really say really rough things.
Oh, trust me, I had the same that you had, and they're rough. But we're only getting more resilient by being exposed. That's the whole thing about freedom of speech.
Okay.
We're only getting more resilient if we're exposed to things that we don't like. And if we then emerge from this stronger as a community, right? If we never, if we're always sheltered from this, then okay, here's the crazy thing. I've never in my life watched porn. And then on a sanity preserver, someone puts on porn suddenly, and I didn't know what to do. And it was my first time ever, like literally in my life that I've watched. And I was like, what is going on? And then you deal with it. And now I'm just like, when I see it, I'm just like not phased anymore. This is the only way you get stronger. It's like, if we talk about resilience, personally, that's the way to go.
Okay. Yeah, okay, I get this.
Hey, Herzog, what's up?
Hey, Sebastian. Hey, Alex.
How's it going?
Yeah. Oh, Allison, we don't know each other, but I'm the founder of Bancor, and I was enjoying your session. I find your words really inspiring. So just want to tell you that.
Thank you. Thanks for joining.
Yeah. I was on a session with Alex the other day, so I started following on Twitter. And I think fresh follows, you see a lot of notification for fresh follows. So I see about those sessions. So I thought, I'm doing the dishes. So
yeah, I did
join. And Alex did a lot of promotion. But I really want to say that I'm taking on this mission myself in my side. I think that one of the biggest issues that we have today, is the platform monopolies of the world, and I think that now that everyone got so much more digital and I think technical in this month and a half, the market is right to to kind of decentralize the way that we, interact with each other, and that's my current thing. And I think that there's a great opportunity to kind of decentralize more than people know how to use their devices better.
Mm. Yeah, you're referring to. Oh, sorry.
No, go ahead.
No, yeah, I was just saying this was a reference to your new project, right, which is DWeb, which is about making a saner, kind of like civilization always go towards building monopolies, but at least DWeb would be a way to decentralize the monopoly so that everyone can own a piece of it. Kind of like the email.
Exactly.
Wait, you're part of DWeb?
I'm the founder of DWeb. Yes, you know DWeb?
Do you know Brewster Kale? Because they have a fantastic DWeb conference every year.
No, it's different. It's a different DWeb. Oh my God.
Okay.
This is deweb.io.
Okay. Well, this is the perfect example of DWeb, right? We have two projects about DWeb. This is exactly this.
Exactly. And yeah, basically, it lets you kind of build that simple way to build services that are completely decentralized, can be operated by anyone, can be marketed by anyone. It's a market free market, and those services can actually replace the existing one, because we had those kind of monopolies before. We had it with the personal computers, and then we had the standard of the PC that kind of replaced everything, and then we had different kind of proprietary networks like AOL and Prodigy, and then we had the standard of the internet that replaced everything, and then we had proprietary software in Microsoft and Oracle, and then we had the standards of open source that replaced everything important there. And today we have the proprietary Facebook and Google and Amazon, and we need the standard for that. And it's not open source. The standard for that should be something that is for online services rather than for software. There's a different way to create standard for software than to create a standard for online services, because with online services, you need developers, but you also need operators that run the service, and you also need marketers and customer supports that face the users. So those are like three different functions, not just, it's more elaborated, and it actually requires blockchain technology to be able to empower such a ecosystem. And this is what DWeb is all about, is like letting people create ecosystem of services that are not controlled by a single entity, that are like just wide scale collaboration as a standard rather than an entity. So that's my contribution to the effort.
Thanks, Eyal. And thanks for joining us. Thanks for being here. He's got
yeah. Thank you for unmuting me.
I'm so tired. Like I was saying earlier, like my English is falling apart. I've been awake.
Are you drinking wine, Sebastian?
I just started during your talk. I was like,
you should celebrate, man. Congratulations on this. This is fantastic. Honestly, you guys can celebrate now.
Yeah, we can celebrate now.
Yeah, we can celebrate remotely, so that when we cut off the call, it's just like you alone and drunk.
Yeah, Pat, you were in here yesterday too, Pat Malarkey.
Malarkey.
Malarkey, sorry. It's
just like
French intonations.
And actually, no, I want to say that I'm a boomer, and I am loving this conference, and I work for a large corporation, and so I was being kind of sarcastic when I said, yeah, we switched to oh, what is the successor to IE? Edge. We switched
Edge. Yeah.
Yeah.
So how did you find out about this?
So I was being kind of sarcastic. I found out about it because Corey is one of my favorite authors. And so I subscribed to his newsletter since he left Boing Boing. I followed him over to his daily newsletter and found out about it through there.
Okay.
And I have unfortunately have had to be dealing with a work problem yesterday and you know, ongoing meetings, but I've had the conference on my personal laptop to the side all day and been listening, you know, kind of when I can. I've really liked it.
Yeah, I've seen you in the attendees for most of the conference. So yeah, thanks for being here. Because we were reaching out to the communities of like all the speakers and everything, you know, I promoted on my podcast, which is a crypto podcast. So there's been a lot of sort of like that crypto community in here, but it's kind of unknown to me, like who else are the people that we've reached out to, and like, you know, this community that now exists around this conference, which is kind of like a hodgepodge of like all these different communities of like all the speakers that have been on it. Because I know like Corey shared it, but also like Jeff, like who have these massive followings. So yeah.
Well, and actually one of the things that I find very interesting is yeah, I may be a data analyst for a living, but I went to seminary from 2010 through, I graduated in 2015. And so it would be interesting to see a little bit more of the spiritual side. And I'm kind of disappointed that I had to drop out and to do a work call during some of that content. And so
you mean the
anyway.
the psychedelic stuff we had yesterday?
Oh no, I was having my work issue during that one, so I totally missed
All
that
talks.
one. But I was talking about, and I don't have the schedule in front of me. Oh, Creon's talk today. He talked a little bit about that.
Yeah, a little bit. Yeah.
Towards the end, but you know, and so my focus or my hope in attending this was to get some hope, number one, but number two, the whole reason I did this seminary thing is that I wanted to help people in their workplace, particularly in the economy that existed prior to this new normal. Layoffs have become a regular course of business, and there are also toxic workplaces, and I've experienced both in my career.